Good morning, Internet, and welcome to Small Business Finance Basics, QuickBooks, and Beyond with Ken Boyd right here on Creative Live. This is Chris Jennings.
And this is Evelyn Danford, also known as Evie.
That's right, and we'll be your hosts for the next 3 days. We have quite a bit to learn here. I've got to admit, I know that this course in particular is extremely useful for both business owners and freelancers. Me, myself, I'm a freelancer, and I know what it's like to not have your finances in order. So I have a lot to learn from Ken over the next few days.
Yeah, it's an important course for everyone. We all want to be in charge of our finances and be well organized, no matter what you're doing in your creative life, and no matter what kind of small business you have. So I think everyone's going to learn a lot from this course.
They are. And myself, I'd consider myself a novice.
Yeah,
but
me too.
Are you? That's what I was going to ask.
Yeah, I think that as freelancers, you have to learn about this stuff. We all kind of have a general idea. I have used QuickBooks a bit, but by no means am I an expert. There's a lot of room for improvement for me and probably for a lot of you out there as well.
Well, it's great that we're here, and that's why we're all here. We are going to do a couple minutes, 5 to 10 minutes of pre-show just to test our audio and video levels. Make sure that all of you out there online can see us and hear us all right. So don't forget to jump into those chat rooms. Let us know that everything's working for you.
Yes, and I will be jumping into those chat rooms as well and chatting with you guys right here. But I want to let all of you know, if you are tuning in and you are curious about how you could join us here and be part of our live studio audience, well, ponder no more, we have an answer for you. If you do go to creativelive.com/front row, it will have all of the information you guys need in order to come join us here in our studio in San Francisco, as well as up in our studio in Seattle.
That's right.
So if you've been seeing some of these and want to get in on it yourself, that's where you can go to learn all about it.
It's an incredible experience to be right here in the studio.
Yes.
Not only do you learn, you get to meet the instructor face to face, you get to spend a little bit of time on the breaks, but just being here in studio is really a great learning experience.
Yes. This is a special place to be. There's a lot of energy here in the studio. As you can see, we are happy to be here and have all the people here. And look around at the studio. It's a pretty beautiful space, is it not?
It is a gorgeous space, and we love getting to know you guys online, but we especially love getting to know you right here live. So we'd love to have you here. Now, we do have some students right here in our studio audience today, and we'd love to introduce them. But before we do, we just wanted to talk about a couple things going on right here at Creative Live recently. We have a lot of exciting things happening and some changes you might have noticed in the studio.
Yes, the studio is looking really nice these days. Some beautiful changes as it's been coming along. A lot of work has been going into this.
There has been a lot of work going into the studio, and somebody who's been doing a particular amount of work on the studio is our set designer, Melissa. And we actually are going to bring her on tomorrow morning. So don't forget to sign in a little early and don't miss the interview we have with Melissa. She's going to talk about all of the work she did in this studio. You might have noticed some changes, and we also have a video to share with everybody that's pretty exciting. So don't forget to join us tomorrow morning as well. Additionally, another exciting thing that we have going on is we were nominated as Best Educational Startup for the Crunchies.
Yes, if you are not familiar with the Crunchies, this is a tremendous honor. This is awards that are sponsored by TechCrunch, the very influential tech blog. If you're not familiar with them, you should be. A lot of fantastic stories they have on there about the startup world and the tech industry. So it's a tremendous honor for us to be nominated as the best startup there. And if you are a fan of Creative Live, if you are tuning in, and if you've been a fan, the best thing you can do to help us out is to log on and vote. So we'll put the URL up there for you guys to go show your love for Creative Live and help us win this award.
If you'd like to show us that support, we'd love to take it. You can vote with the URL that's on your screen right now. And TechCrunch, like you said, this is a great honor, and it's an annual award that they do, the Crunchies. So we're happy to be a part of it.
Yes, very excited about that. So go check that out if you are a fan of Creative Live.
Please do. Now, I think that it'd be about time for us to introduce the students that we have with us today. So why don't we go ahead and get started?
Yeah, we'll start right here. Go ahead and tell everybody who you are, where you're from, a little bit about what you've been doing with your small business or your experiences with QuickBooks and what you want to get out of this course. Go ahead.
Well, hi, I'm Candace Betty. I'm from Huntington Beach, and I own a organic skincare company there. I use QuickBooks to track inventory as well as my finances and personal finances. And I have a couple of challenges that I'd like to talk to Ken about with syncing and as well as inventory assemblies. And looking forward to the course.
Terrific, thank you.
Hi, my name is Josh. I'm born and raised in San Francisco. And I've been using QuickBooks to do my personal finances and hope to see how it might help doing rental property management.
And that's what you do?
Yes.
Yes. Have you had any struggles with that and combining the two?
I haven't tried to incorporate it into the main business.
Well, perfect. We're glad you're here.
Yep.
Hi, I am Jackie O. I run 2 online businesses as well as doing consulting. And I don't have that much experience with QuickBooks, surprisingly. I do a lot with Excel, and I do a lot of like sending it to other people to handle like my finances and like photographing my receipts and just sending them off, and like magically they get inputted into various QuickBooks documents. But as I grow and mature as a business owner, I realize that that's the quick way to go broke, because you need to really understand your finances and your numbers. And so that's why I'm here.
Oh, thank you for being here.
Hi, I'm Christine Chagru, and I'm a freelance film and video producer. And like Jackie, I don't have a lot of experience with QuickBooks, but want to get into using it and agree that it's quite useful. And I'm also looking to start a small production company with a group, so I would probably be handling the finances for that as well.
Definitely. Definitely. And especially when you're starting any kind of ideas of starting up a new business, that's when, at least for myself, that's when you really want to get everything in order and really know the basics so that you can move forward in a smart way.
Yeah, and I think if I have the basics and a good process, I'll stick with it.
Sure.
Yep.
Sure.
Hi, I'm Renee. I'm from Sacramento. My husband and I are starting up a photography business, paparazzi photography. And I'm going to be the one monitoring all the finances, and I have questions about the equipment we have. Is that something that can be inputted into QuickBooks for all the bookkeeping requirements for taxes and what have you?
Great, great. Well, I'm excited to hear from this morning and then at the end of day 3 where each of you get and really the growth that you'll have just in the next 3 days. I'm pretty confident that it'll be an expansive growth.
Definitely. All right, in a couple of minutes here, we are going to get started. But before we do, Jackie, why don't you come up and join us, and we'll get a little bit more in-depth into your business.
Yeah. So, Jackie, you mentioned that you own a couple online businesses. Can you tell us a little more about what exactly they are and what you do?
Okay, so the one I really want to talk about is my online batik and textile business, which works in fabric and all different kinds of fabric from all over the world, and actually the traditional traditions. So as in people actually using wax and hand doing patterns and design on fabric.
Great. And so is that what batik is?
Yes, that is what batik is.
It's combining fabric and wax.
Yep, and
Okay.
paint, yes, and dyes.
Sounds.
And what is your current setup right now? Are you using QuickBooks to keep track of your finances?
Currently I use Excel.
Okay.
So I put a lot of things in Excel, and I also have like an accountant that I work with who helps me like each month reconcile things.
Okay.
But that's more like I have somebody else do that, and I do want to get more control and understanding of what actually is happening.
Sure, sure. And these two businesses, are they their own entities, or are they kind of under the same umbrella?
No, they are their own entities, and I am very good about keeping all those different assets separate and keeping my personal finances separate. But I need to understand each, individually and collectively.
Sure, sure.
Great.
Have you experienced any challenges thus far that have really tripped you up that you're hoping Ken might be able to help you with here in this course?
I think the challenge is just managing it all. Like I do run a couple businesses, I do consulting, I do want to manage my own personal finances,
Yes.
I do want to see how they all fit into some long-term strategy.
Yeah.
And right now I don't necessarily have an overall picture about where all that's going. Is there things I need to develop? Where are my strengths? Where are my weaknesses? And without that, I'm not really empowered to make the type of decisions I need to make.
Absolutely, absolutely. Well, I mean, a lot of that also is time management.
Yes.
When you master something, especially the finances of your business, it takes a lot less energy that you can put towards the other parts of the business.
That's right.
Absolutely.
Great. Well, thank you for coming up here and sharing with us. It's really great to get to know, and we'd like to get to know all of our students like this and really know what you're doing so that Ken, our instructor, can really help you with the challenges you have.
I'm looking forward
We
to it.
appreciate that you're
Wonderful.
here. So guys, we are about ready to get started, and what we're going to do is take you on a quick tutorial of how to watch today's class, how to ask questions in chat, and also how to purchase anytime access. Now, I'm going to take you over to the live page where you're watching today's broadcast. You'll notice at the top of this page, or any Creative Live website, is a green Watch Now button. When you click on this Watch Now button, this is how you can select which course you'd like to watch. What will happen is a menu will appear, and you can simply choose the channel and the course you'd like to watch, In this case, Small Business Finance Basics, QuickBooks, and beyond. Now you'll also notice at the bottom of the page, you can purchase anytime access by clicking on that green Buy button. Additionally, at the bottom of the page, you'll notice a green Chat Live with Class Participants button. Now, what's really great about Creative Live is we truly are a global online community, and you can communicate with your Creative Live community members better by clicking on this button. Now, when you do, a new window will appear with 3 tabs. Whichever tab you click on will be the chat room that you're conversing in. The first is the Creative Lounge. Now, in the lounge, this is where you can have all of your off-topic conversations. Basically, anything you want to talk with your other Creative Live community members about, you can talk about this here. Now, the second tab, you're going to see Creative Live. This is for on-topic conversations. So anything that we're discussing at that moment in the class, you'll bring those discussions right here. And the third and final tab is your creative cues. And this is for all of the questions for the instructor. So any questions that you'd like Ken to answer, you can post them in here. Chris and I will pass them along to Ken. Now, we have a great chat moderator working behind the scenes, so there's no need to post your questions more than once. We do have them and we're keeping track of them. We'll get to them as soon as we have time. And we do ask that you just keep this questions, no discussing questions or answering questions in here. If you'd like to do that, we highly encourage it. Just bring it back over to the Creative Live tab to do that so that we can get all of your questions to Ken in a timely manner. Now, this is Small Business Finance Basics, QuickBooks and Beyond with Ken Boyd right here on Creative Live. If you're new to Creative Live or you're not sure exactly how we work, basically we do our best to reach as many people as possible during the live broadcast for free. However, we also offer anytime access to all of our courses for purchase. Now, if you don't think that you're going to be able to watch the entire 3 days, or you think you might want to go over some of it and review it at your own pace, we do offer it for purchase for you. You can normally purchase it for $149. However, if you purchase it right now during the live event, we have it available for the live discounted price of just $99. Now I'm going to take you over to the course page where you'll notice you can enroll in the course for free by clicking on that green Enroll button. Now, when you enroll in the course, you'll have access to all of the bonus materials that come with enrollment. We'll talk about this a little bit later in the course, but this is definitely something you'd want to take advantage of, and of course, it is free. Additionally, you can easily purchase the anytime access for the course by clicking on that green Buy button also right here. Now, I mentioned the bonus materials. Where you find that is by scrolling down from this screen. All of the bonus materials with both enrollment and purchase will be available for you right there. Now, if you scroll down from here, this is where you'll find all of the course videos once you've purchased the anytime access. You can download the videos, and you can also stream the videos directly from our website by clicking on this green Watch button. Now, we're just about ready to get started, and I'm going to introduce our instructor. Ken Boyd is a former CPA with over 29 years experience in accounting, education, and financial services. He is the owner of St. Louis Test Prep and author of Cost Accounting for Dummies, as well as co-author of Accounting All-in-One for Dummies, both of which are available on Amazon right now. He's also a small business owner himself who professionally consults other small business owners, providing them feedback and guidance so that they can reach their goals. Addition to that, he is just a wealth of knowledge when it comes to this field and this topic, and we're very, very excited to have him on the show. So I'm going to go ahead and introduce Ken. Come on up here.
Thank you.
Ken, thank you so much for being here. We're happy to have you. I know you have a lot to cover, so I'm going to let you take it away.
Okay, great. Well, thank you, audience. Thank you to everybody at Creative Live who's done a great job getting me ready. And thank you, Internet, too. What's great about being in San Francisco is that this place is crawling with creative people. Crawling with creative people. I like to tell you the way kind of how I'm going to do the course. I have a lot of notes on an iPad that I'm going to refer to, and I also have a clicker, and I'm going to go through my course over here. And so if you see me occasionally looking at the iPad, that's why. I have an example of a creative person. It happens to be my son, who I'll give a shout out to, Connor Boyd, freshman at Emerson College in Boston, who happens to be a film production major. So of the 3 kids in my family, I have one in particular that's really creative. My son, the people I've met out here, and being in San Francisco generally, really got my energy up about being around creative people. And so the reason that I am here, I think, is to help get creative people like you where you need to go. Now, to get there, you're going to have to do a little accounting and finance to get there. So I'm hoping to give you enough accounting and finance in QuickBooks to be dangerous. And what I mean by that is enough accounting and QuickBooks to get you to run the business and to grow an organization doing what you really like to do. Okay? Doing what you really like to do. And as one of my producers pointed out the other day, you heard my bio, I'm more of a creative person than I am an accounting person. And I say that because I'm better at explaining accounting and finance than I am doing it, because I tried to do it in another life and it really didn't go as well for me as what I do now. Okay? I heard some great things from the audience that I wanted to pick up on. We had some people that use QuickBooks already. We have some people who are still, we have one person who's still using Excel, which is great. And then we have other people that are sort of on the, maybe they've got 1 foot in QuickBooks, 1 foot doing it a different way. There's a challenge with QuickBooks, and the challenge is that it's a mile deep. So if you enter a transaction or put a number somewhere or try to create a report and you don't quite understand what you're doing, it can be very frustrating. So the way I'm going to use QuickBooks for our purposes is to just go deep enough to get you what you need for your business and not go any deeper. Just go deep enough to get you what you need for your business and not go any deeper. Okay? Because it's really a black hole of information. As an example, I know people who are running businesses that are $15 million a year in sales using QuickBooks. It can do lots of things, but for most of you in the audience, you don't need it to do all those things. So that's why I'm not going to go tremendously deep into it, just deep enough where you can use it. Okay? I think that's important. Some other things I wanted to mention at the beginning. I'm going to scroll 1 page over. Told you about my son, which takes me into understanding who you are. Now, it may sound strange to talk about that in a course like this, but understanding who you are as it applies to this course means how much of this businessy accounting and finance are you willing to do, and how much would you like to offload to somebody else? Whether, if you're in a business with your spouse, one spouse maybe takes care of the books. Do you hire an accountant? One person said, well, I have an accountant who helps me reconcile at the end of the month. How much of this are you willing to do yourself, and how much of it is it better for you to offload it to somebody else? And this is not a psychology class, but if you haven't done it, take a Myers-Briggs personality assessment. It's free on the web. And find out a little about yourself. And let me give you a couple of those features or personality traits that relate to what I'm talking about here. For example, how much attention to detail are you as a person willing to pay attention to? How thorough are you? How accurate are you? For most creative people, the answer probably is, I'm not tremendously interested or focused in doing a lot of detail, and that's perfectly fine. Because you can take that information that you just learned about yourself, I don't do detail all that well, and that helps you decide how much of this you want to offload to somebody else. Does that make sense? Find that out at the beginning. And I know we're not in a psychology class, but I wanted to mention that. And another way of saying that is, find the traits that are missing in your business and figure out a way to fill that in. Find the traits that are missing and figure out a way to fill that in. Okay? So if you can imagine somebody starting a business, most businesses start as side businesses, maybe even a hobby. So the example I use is that, as Evie mentioned, freelancer. So somebody's a freelancer photographer, and they've got a day job, so to speak, and they start doing photography for people, and people start raising their hand and saying, gee, could you do some of that for me? Well, great. So walk yourself through that. So let's see that a photographer is going to go out and do a commercial shoot for a company. They're going to do some shoots around the office, pictures, and put together a video. If you think about that, that person's going to invest time, money. They may have to buy some equipment. They're going to have mileage costs. They may have to hire somebody else to help them. So they're going to incur some costs. They're going to deliver a final product, maybe digital pictures over the web, probably going to have to back that up. So maybe they needed a cloud backup service. So my point is that they're investing some costs, okay? Then hopefully they're going to go out and bill somebody for what they did. So they're going to have to give somebody an invoice. So that's another piece of paperwork. Then finally they're going to have to get a payment in, deposit it in an account, reconcile that account at some point. So you can see that there are multiple steps that that person is starting to see, even with a few transactions, as a freelancer. I'm going to go to my slides for the first time. I'm going to skip through that one. And this takes us into the first slide, which is called Arranging Your Desk. And I kind of touched on number one, which is what you have to offer as a creative person, because I am all about empowering you, giving you what you need to go out and do what you really want to do, which is probably not accounting. Okay? I talked about self-awareness, which is what you can do and what you prefer not to do. And number three is the one I'm on here, and I was kind of toying around with that phrase. I'm not sure it was really a good one to use for number three, but I kept it. From the excitement of getting, isn't it exciting to get some business? Yes. Any business, right? That's exciting. It's something you should be proud of. It's, it helps your self-worth. But in that excitement that I just explained with our photographer who's a freelancer, you've got to have some sort of a plan to organize yourself, okay? Some sort of plan to organize yourself. The new business scenario I sort of started, and I'm going to go to number 5, what's in this course, in just a minute. So I talked about my son, the film major, and all of you have talents, lots of different talents, many of which I don't even follow or understand or are new to me. Another way of saying something that I've already said is the accounting and finance is a necessary evil to get you where you need to go. Unfortunately, you have to do some of it, okay? But it's a means to an end. The end's over here. The end is delivering your photography, your product, finishing the product. But to get there, you've got to have a little accounting and finance in between. So I say that this course provides guidance in setting up and helping you run your business effectively, and in italics at the bottom, please don't let your accounting get in the way of that, okay? Don't let your accounting get in the way of it. Does that make sense? I said that a couple of ways here at the beginning. I'm pointing at the wrong thing. Self-awareness, the most valuable skill, understanding who you are and how that impacts your business. I'll give you a perfect example. Most people think I'm a really outgoing guy. Wow, he can make conversations with anybody. In fact, this is horribly embarrassing to my family. Dad, when we leave, please don't start talking to people. It's so embarrassing. Dad, please, can we just get out of here without... However, the truth is that while I can have kind of superficial conversations with lots of people, I don't have a lot of close friends, and I'm somewhat of a loner. I spend most of my time writing books and prepping and working alone. How did I find that out? I did a Myers-Briggs. Is that helpful to know? Probably helpful to know. In that, I would probably not be good in a job where I was out selling all the time, because I don't want to have deep relationships with lots of people. That's something I had to learn about myself. And once I did, I used that knowledge to get into a career that fit that, okay? As we move through the course, how much are you willing to do yourself and get help? And I mentioned taking an assessment already. Okay? Excitement to organization. You find the first few clients. I mentioned the freelancer out there. Maybe it's a hobby or a side business. How many of you know somebody that started a business that way? Right? Started as a side business. But it's something you happen to be really good at. And so things continue. The bullet points that I have here are formalize some of the things I already talked about. You're going to spend some money. You're going to incur some cost to provide a product or a service. You're going to have to deliver something. You're going to have to bill somebody for something. And you're going to have to collect payment. And later on in the course, I'm going to spend time talking about, let's make this payment process as easy as we possibly can. Okay? Make it really easy. Make the instructions simple. Make the process, minimize the clicks, make it easy. So, what I'm really trying to do here is to get to the last bullet point, which is let's minimize distractions from what we truly want to do. Another way of saying it is let's create a process where we can get from 2 sales a month to 150 sales a month, minimizing the accounting, finance, time it takes to do all that. So we can replicate it, the process, without eating up a lot of time. Okay? Most of you, I had this conversation with my son. We were on our way to the airport to take him back to college, and of course, he loves to get great advice from me all the time. But I explained to my son that, look, you and I are in a project-based business. We're always doing one project, and we're always looking over the horizon at the next one, right? He said, right. Many of you creative folks are in a project-based business, okay? You incur some costs, you have an output, you invoice, payment, deposit, and I've done that a couple of times. But now let's consider something else. Doing this process multiple times, how do you stay efficient? How do you go from 2 times a month to 150 times a month? In addition to the paperwork, let's put a finer point on it. When you go out and buy all that stuff, do we still buy film for cameras? Photographers out there? Maybe. Yes, we do. I'm in the dark ages. Okay? I did find out I was talking about yearbooks for high school, and somebody explained that we don't really use black darkrooms anymore, do we? Do we still use them, photographers? Yes? Some do? Okay. So, in one way or another, you're probably out buying stuff to fulfill this business. So you got receipts for that stuff, right? I was talking to one of the producers here who's in the film business, and he was talking about how a friend of his had a sticker on every piece of film equipment he had. And every time he used it, he would put an X. And this was his way of figuring out how many times he used the equipment to do business to get to the point where he paid it off, because then beyond that point, it's all gravy. It's all profit, isn't it? And this guy labeled dozens and dozens of equipment. I'm not saying necessarily that you do that, but it starts to get you thinking about, well, how much business do I have to do to pay all this off, right? So on the far left, you've got receipts for purchases. In the middle, emails, texts with clients, client instructions, brochures, drafts. There's a lot of stuff flying around. It took me a while to get out here yesterday, and so I had a lot of emails accumulate. Now, I don't know about you, but I make every effort to not keep any piece of paper for anything. I don't even have a printer at my house, in my office. But we still have to deal with all that, don't we? We've got to answer email. We've got to answer text. Do I need to keep it? I've got cloud backup. Do I need to put it on my cloud backup? And I'm really disciplined about using cloud. But that's an investment of your time, isn't it? Brochures, drafts. If you're a photographer, in my example, the photos themselves. Are you delivering them in a package physically? Are you delivering them digitally? That's hard to say. Are you backing it up on the cloud? Are you backing it up in hard copy? What's going on? Okay? How many of the photographers just here, how many of you send it digitally most of the time? Yeah. At this point, far left, when you finally get paid, well, you got a deposit slip. You got to deposit that client payment. What account does it go in? When do you reconcile? What about my bank statement? And you start to think about, wow, there's more involved than just fill in the order, so to speak. Okay? You got to prevent the paperwork from piling up. My wife and I are both accountants. You can imagine that we're pretty well organized. Okay? We're pretty well organized at home. We're not to the extent that we're alphabetizing all of our food in the pantry, but we're pretty well organized. But most people are not. and that's fine. In addition to giving you just enough QuickBooks, let me explain how we're going to get to QuickBooks, okay? You can't get to QuickBooks until you understand some basic accounting terminology, okay? Some basic accounting terminology. Because what I'm going to do is, this is the first slide for the next segment, and what I'm going to do at this point is I want to go through and touch on all the things that we're going to cover here. But I want to emphasize again, I'm going to give you a level of accounting knowledge, and then we're going to apply that to QuickBooks, okay? And I'm really trying to minimize. We went through this whole, what we call a keynote, the whole outline yesterday, and I kept telling our producers, I'm really trying to minimize all the jargon. Really trying to minimize it, okay? Any questions so far from the audience? Does this spur any question?
Yeah, I have a question about QuickBooks and being able to use it to communicate with your, your customers.
Mm-hmm.
I don't know if, like, let's say you have a rental property business, and you want to, send out a late notice that they haven't paid their rent. Would you be able to incorporate where it would show up that they haven't paid, and you could just automatically generate a notice to send out?
Yeah, the answer is yes. Which actually, I'm glad you brought that up, because the version of QuickBooks I'm using is the lean and mean QuickBooks Online Basic Beginner. Okay. QuickBooks does have the ability for you to invoice electronically, for you to send out reminders electronically, like a late notice, or offer discounts to people on an invoice. However, it may take not just the QuickBooks Online, but there may be an add-on you may have to add on. But yes, it does do that. It does do that. Other questions? Yes, ma'am.
I have a question for people who are just starting their business. They're willing to do their books themselves, but eventually they'd like to outsource it.
Mm-hmm.
Do you think if you just start out by outsourcing it and you don't do it yourself, that you're putting yourself at a disadvantage, that you're not understanding the numbers yourself, that you're outsourcing it?
That's a great question. In my experience, most people do start out doing it themselves to a certain extent. And I think part of the reason is a comfort or a control issue, which I think is okay. I don't see a lot of situations where people outsource it from the very beginning. So I think my answer to the question is, one way or another, it's fine to outsource at the very beginning. You need some basic knowledge before you do that. You need some basic knowledge before you do that. For example, you mentioned inventory.
Right.
What things do you inventory? Just a couple.
Well, I take different raw materials and packaging, and then I assemble it. I have a contract manufacturer. I send this all to them, and then they put together the final product. And so I need to be able to track when I buy all those raw materials, and then when I sell one of my creams, what is my inventory so I can know exactly what I have and when I need to reorder.
Let's use that as an example. So that's your business. You have inventory, and you need to know, when do I buy it? When does it go out the door as a cost? We'll talk about a cost of sale. Where is it all? And how much did the raw material that I had come in, and I put a label on it, how much was the cost, so I can match that with how much I sold it for and figure out profitability. That whole scenario, right? I think before I would ship that off to somebody at the very beginning, I think there's some basic accounting understanding, which is what I'm trying to do here, that will get you there. And then if you understand that, then sure, give it off to the accountant, you send them the bank statement, whatever. Here's my list of inventory, you give it to them, and let them do it all, sure. But you do need a basic understanding at the beginning, okay? How about chat questions?
We do have a few that have come in. Let's see. Carp was saying, I work on a project-based income with monthly and yearly subscription-based billing. Is there a way to set up recurring monthly billing?
There is, yes, in QuickBooks. You can set up monthly billing, and it's fairly easy to do. Probably the best thing about QuickBooks that is a time saver for a small business is that very thing, which is it makes invoicing easier. Now, what I have built in QuickBooks that we're going to use later today, I'll show you the invoice template. I have not built an invoice in there, but I'll show you how you can use it. And in fact, if you send an invoice to somebody, QuickBooks can automatically record the fact that you had a sale. Okay? Again, this is comfort level. Some people start off I'm just going to create an invoice in Word or Excel, send it to them. And then I'll put in QuickBooks that I had a sale. Or, on the other hand, some people create the invoice in QuickBooks and everything gets automatically posted. But there's all kinds of things you can do with invoices, yes.
Terrific.
Great. And we may be getting to this a bit later, but Skeeta has a question about inventory. Can you use QuickBooks to keep track of your inventory as well?
You can. It takes there's probably an add-on to do that.
Okay.
But let's walk through your example, because actually I can connect the chat to what you just said. So you buy 15 items at $10. QuickBooks has the ability, you type it in, and now you've got your inventory listed, and here's all the items at $10 a piece. Then you start selling them. You're able to pull that item out of inventory, number one, and attach it to a sale, and it goes out the door, your inventory level goes down, your cost of sales go up, and yes, that whole thing is linked inside QuickBooks. What else? Yes?
Is there a way to connect QuickBooks to any sort of like e-commerce platform that you may be using that may already be tracking your inventory? Or is it you doing it twice, or do you have to do it twice?
Say that one more time. Let me think.
So, for instance, if you're using an e-commerce platform that all your inventory is marked in, so when somebody purchases it, it automatically goes from 15 to 14 now.
Okay.
Now, if that information is already in that e-commerce platform,
Right.
then do you now have to take that and enter it manually into QuickBooks, or is there a way that QuickBooks can import that?
QuickBooks has the ability to import lots of data. It's kind of beyond the scope of this class, but the answer is generally yes, that you can import. You can even import from Excel. If you're in Excel now, you can import a lot of stuff to QuickBooks.
Okay.
Somebody else had a question on the, did somebody else have their hand up over here? I couldn't tell. Yes?
How about like bill of materials, so you can tell when you need to reorder certain components that go into your final product?
I don't know that it will do reorder. We'll talk about that very thing, but I don't know that QuickBooks will do it. I imagine there's somebody probably out there who can comment on that. Now, this brings up another point, which is, if you need somebody to help you with a complex QuickBooks issue, Intuit, that owns QuickBooks, has QuickBooks Pro advisors that I highly recommend. These are people who have passed a certification kind of a test, and you can find them by zip code, and they can help you with those more complex questions. Okay? Somebody started to say something. I'm sorry.
A question come in just now from the chat rooms also. Photographics Miami is asking if it's necessary to link QuickBooks to your bank account, or can it be used just for recording expenses like revenue invoicing and general reports and tax info?
It can be kept separate. You don't have to connect it to your banking, although I would highly recommend that you do, particularly because QuickBooks has a feature that will make it really easy to reconcile a bank statement. So if you're typing in all your checks, and you're typing in all your, you're typing in checks going out the door and debits, and then you're typing in all your deposits, and you go to reconcile, it'll pull it all up, and all the things that have cleared your bank statement, you click off, and it makes it really easy. So I recommend it, but you don't have to.
Great.
Okay.
Thank you.
Anything else right now before I keep going?
Ken, we have a question here. I mean, as you know, a lot of our studio audience, or our audience in the chat room, are international from all over the place. So we do have a question about, will a lot of what we learned today be able to be used in Canada? Will there be differences if people are located in different countries, or will this be universal knowledge for everyone?
For the most part, the accounting I'm going to talk about is universal. There are tax differences in how you do taxes internationally. One of the things that's happening in the accounting profession is we're trying to combine U.S. accounting rules with international rules, and we're trying to make one complete set, and they're not consistent yet. So, for example, there are people in Canada who do a little bit different accounting on things than we do in the U.S. However, at this basic level, for this course, most of it's transferable. Most of it will be the same. Okay? Anything else right now before I keep going?
There were a couple questions that came in on the chat room about customizing QuickBooks, from putting in your own logo to just making it look nicer, having a different header, things of that nature.
You can put logos and do things with invoices, certainly. I don't know that you can do much beyond that. We were laughing about this in the production meeting. I said, well, you know, QuickBooks Online looks a lot better now than it used to. Now, for creative people, it's still probably pretty dull. But for accountants like me, hey, it's so much better. Look, they actually use colors now. Okay? I know you can customize invoices, but beyond that, I'm not sure. Anything else on chat?
There was actually another question that came in, and I'm not exactly sure what this is, but Laura AXG asked what your thoughts were on wave accounting.
I don't know what that is.
Yeah, I think that a few people,
Okay.
I think it's just another piece of software that people
Great.
use for
Okay.
accounting. So we have had some people asking, I know this is focused
Wave
on
accounting.
QuickBooks, but people are asking about wave accounting for one, and also Flying Drifter wants to know if you have any open source solutions instead of QuickBooks. I know we don't want to get too far into that, but people were just talking about some different solutions for them.
Okay. I'm not aware of open source. I'm sure there's some out there because it seems to be open source for everything.
Yeah.
I'm not familiar with Wave. I will say, though, that besides QuickBooks, you may hear the term Peachtree, which is a piece of software. In my experience, Peachtree is pretty much used by accountants, where QuickBooks can be used by both. QuickBooks, to me at least, is a little more user-friendly. Okay? Now, it came up when we were interviewing the students in the room about combining personal, accounting with business, and obviously Intuit also owns Quicken, which is a tool that people use personally, which I think is a good tool. Okay? The other thing, I think QuickBooks did a smart thing because now they've done online where you can back up in the cloud. The big fear for accountants like me for years was people would take the disk and install QuickBooks, and I was always concerned, is it backed up? Did we back up the right version? Where is it backed up? And now that's become much easier. I would highly recommend that you do it on the cloud. Even if it becomes more complicated and you've got to use a more complex version, highly recommend that you back it up on the cloud. Because I can tell you many stories of people I knew who would lose their data, they had the wrong version. You're getting your taxes done, you hand them the version. It's not consistent with the hard copy that you have in front of you, and you're like, wait a minute, that's dated March 12th, and the backup's dated March 8th, what's going, That created problems, so I really like the cloud.
Great.
Okay?
Oh, it looks like we have some questions right
Yeah,
here.
how about integrating QuickBooks with like TurboTax to figure out your taxes quicker?
I believe that you can do that, and that would be helpful because one of the things we'll talk about in the segments is, what do you really need to do your taxes out of this QuickBooks thing? And there's probably 4 or 5 numbers for most people that you need. Well, I need my revenue number, I need my expense number, I need my profit number. If I'm in a partnership, it becomes a little more complicated. We'll talk about that. I need to know what percentage of ownership each person has, maybe. But yes, you can do that.
And depreciation schedules as well?
They have a fixed asset package, and we'll talk about what depreciation means, and it relates to inventory too. They do have the ability to depreciate, which is another thing that if you don't do it in QuickBooks can be really time consuming. Depreciation is basically, might as well say it now, using up an asset, using up something you use in your business. So if you're a plumber and you've got a truck and you're going out neighborhoods and doing residential plumbing, as you use that to create revenue, you are, quote, using up the truck, so you need to expense by depreciating the cost of that truck. So it's a $30,000 truck. Oh, maybe you depreciate it evenly over 5 years. $6,000 a year, if I did my math right. It's using up an asset. Using up an asset is depreciation. Okay?
We actually had another question come in. Basically just wondering if you could describe for us the differences between QuickBooks Online and the actual software and which you prefer.
For a beginner, I like QuickBooks Online because, in fact, the one I'm going to show you later today, I got a 30-day free trial. just to show you, hey, get a 30-day free trial. Then once you get it figured out a little bit, you can start using it. For more complex businesses, like you got inventory, like somebody who's got to depreciate assets, you probably want to go beyond the basic QuickBooks Online and get the other QuickBooks versions that have the ability to do more things. Another example is payroll. Sometimes you've got to do an add-on for payroll. Okay? We'll talk about payroll during the course. So I recommend online for a basic user. I recommend the more complex. There's QuickBooks Pro and there's QuickBooks, I think there's Premier. When you have more complicated issues.
Great.
When you have more complicated issues. Okay? The QuickBooks Pro advisors, and I'll get to you in just a second, the QuickBooks Pro advisors are very good at telling you and helping you figure out which version you need. When you look at the test to get certified as a QuickBooks Pro advisor, which I looked at and just ran out of time and didn't do, one of the things you're tested on is you're given scenarios and you're asked to tell the client which software they need. So these guys should know. Go ahead, I'm sorry.
I was just wondering if there's a point in your business where, how will you know if QuickBooks isn't thorough enough to cover all your business needs?
As I mentioned, I know some people that are running QuickBooks, using QuickBooks, a version of it, a souped up version, for pretty big businesses, like $10, $15 million a year in sales. So it can do just about everything you want it to do. Now, the exception is if you're some people get to the point where they're in an industry that's so specialized and it's so specific that they need to have somebody come in and write code. And at that point, people will switch over. For example, an investment company that I know, they use QuickBooks for their accounting, but they have a different software to come up with the investment statements for clients because QuickBooks can't do that. So that's kind of the cutover. All right?
Ken, we have a lot of creatives that watch Creative Live, and in our chat rooms we have a lot of photographers, and that's our base. And I know that you know a lot of creatives as well. And what do you see as the biggest challenge that they face when dealing with the financial aspect and the QuickBooks type stuff for their business?
The biggest challenge I see is that people's businesses ramp up, they get busier, they get behind, stuff ends up in a shoebox. Then they get to and that creates two problems. The first is they don't know where they are from a profit standpoint. And the second is when it gets to year end and you've got to do your taxes, no idea. And that can get out of control quickly for a creative person. That can get out of, I'll give you an example. There's a chef I know in St. Louis who is a brilliant creative guy who does customized parties and events with very creative, exotic food. He's a genius. I sat and talked to him for a couple hours. But he's in a business where he's got employees. He's got people who are preparing food, delivering food to a location, serving food. He's got employees. And his payroll was a complete disaster because he was such a creative and so not a numbers person and so disorganized. It got to the point where he couldn't do business because his payroll was so messed up. He wasn't paying people on time. He couldn't get people their W-2s and their 1090. It was a mess. So that's an example of what can happen. That a talented person who's got business coming out of his ears, everybody wanted this guy, but he got so buried that he literally had to stop doing business for about a month and get help to get this all unraveled.
So how often is too often to review your finances?
Okay,
what
good question.
What would you recommend the minimum?
I would hope, in my perfect dream world, that once a month you would get all your data into QuickBooks or Excel or something. All your data loaded. What do I mean by that? All your receipts recorded in an accounting system. All your deposits recorded. Okay? Get everything recorded. All those slips of paper recorded somewhere. And then, and I'll talk about it later, within 5 days of getting your bank statement, reconcile your bank account. You're all doing that anyway, right? No. When you run out of checks, that means you don't have any money. But if you would do that, if you would reconcile your bank account within 5 days, and you would at least get all your financial information loaded and see where you are once a month. That's what I'm begging you to do. Okay?
We have a question
once
here
a month.
that ties into what you were just speaking about. And so WA Media wants to know if we've been using QuickBooks, but we're not well organized at the beginning. Maybe they haven't been following that monthly upkeep of their finances. What would be the best way to catch up? Is it easier to just start from scratch and build it all up? Or are we going to talk about how to fix it if you haven't been doing it correctly?
Number one problem with QuickBooks, that is the number one problem, is that you start it and you get off track and you either fall behind in what you're recording or you record it wrong and now it's a mess and you don't know where you are. Happens all the time. My recommendation, so then it's like, well, do I just start over? Well, the problem is if you start over, the historical information, so I'm just going to start a new company. I was Company A. Company A is messed up. So now I'm just going to start at the beginning of February, Company B. And we're going to keep Company B records correct. The problem is that now A and B aren't connected, and you've lost that history. You haven't lost the history, but the history of Company A is not linked to B. And therefore, you can't go out and look at how things are doing historically. So let's say that Company A has 10 items in inventory. And Company A has, at the end of the month, some payroll that still needs to be paid at the beginning of the next month. And you decide, well, I'm just going to record it all in Company B so that all the hanging stuff, the pending stuff in Company A is now in Company B, and I'm fine. But the problem is you've lost the ability to compare. So my recommendation is you call a pro advisor and you have somebody come out and you bite the bullet and you spend the money and have somebody get it fixed for you. So you have now why do I say that? You're like, well, I don't care. The only person who's going to see it is me. Why do I care? There are several people that I will talk about later that may end up wanting to know, and you may want them to know about your historical financials. Maybe you got to go get a bank loan down the road, okay? Commercial bankers, people that loan to businesses, are concerned about one thing. Can you repay the principal amount of your loan and the interest based on your profitability, okay? How profitable were you going back? Well, if you switched over to Company B, and 3 years of Company A is in a different system and probably not correct, what are you going to say to your banker? Okay? What if you want to bring in a new partner to your business who wants to see your historical financials? Well, if A and B are separate, that creates a problem. And it sort of makes the owner not look very professional if they don't get that fixed. Okay? Because we want to present our best foot forward and have the lender or the partner see everything in order. Mm-hmm.
So I have questions about the functionality of QuickBooks, and it's more about for projections, because a lot of angels and venture capitalists want to see what is your break-even point, when exactly in the life cycle.
And we'll cover that term, by the way.
Okay, when in the life cycle of your company will you break even, and when will you actually start to make a profit? And does QuickBooks, are you able to do that in QuickBooks?
You can. It's in our version, I think that's a little tough.
Okay.
But let me talk about that, because this is a good point that you just brought up. Well, I want to go out and raise money at some point. And I want to do what we call in accounting pro forma, which is what if financial statements. Okay? Can QuickBooks do it? You probably have to get a more souped up version. However, I think we had a course where we had business planning a week ago, didn't we?
We did. We had,
why don't you guys comment on that? If you
Absolutely. Last week we had small business planning, and it was all about, it was Barbara Finlay-Skank and her husband came along as well, and they've owned businesses and they consult others in businesses, and that's really about starting your business and making a business plan and a business model so that whether you're just starting a business or you're taking your business and you're wanting to consolidate everything and really have a business that you can sell or you can make money off of, because in there, the way they describe it is basically that if you don't have a business that you can eventually make money off of and sell,
right,
it's a shame to put all that work into it. So that is a course that you can find in our course catalog, and it might be something that fits nicely along with this course for everybody.
Thank you. We had talked about that in the production meeting. Let me say a couple things on business plans. Real easy. First of all, I'd recommend that you look at that course, because what I'm going to suggest is probably not at a level that that course covers, and you need to see that course because you need to ramp it up. But at a very basic level, I want to do a business plan. You can go to Office Max or Office Depot or go online and get very basic packages that will do business plans. Specifically, I want to do 3 years of projections. You can go out and get a piece of software that will do that for you. You plug in the numbers and you say it's going to grow at this rate per year, click, and it forecasts it all for you. So at a basic, very basic, there's your business plan tool. Then you can ramp it up and watch that course, because I think to go out and get an investor, the basic model that I'm suggesting is not enough. Okay?
Going back to your company A and company B not being in sync, let's say you're transitioning from not using accounting software and you have all this paperwork, receipts. How far back should you go back and recreate from all your bank statements and do a bunch of data entry into the software, or start?
Great question, and I don't have a perfect answer for you. My first reaction to that is I would go back to a point where you feel like you were doing kind of a substantial level of business. So for example, let's say you've been in the business 7 years and it took you 2 years to get to break even. I don't know what industry it is, but I'm just going to pick 2 years. And now it's year 7 and you were profitable in year 2. I hate to say it, but I would go back and put in all the way back to year 2 when you started being profitable. Now, what about before that? Or maybe you weren't profitable till year 5. I would keep all that data backed up somewhere, even if you don't formally put it into financials, just in case. Because it's a nice problem to have when somebody raises their hand and says, wow, I'd like to invest in your business, or I think I'd like to give you a loan, or an angel investor. Did everybody see The Social Network? Great example for novices about growing a business, where there's a scene in the movie where they go out and they get, I don't know if it was $250,000 or the first $500,000 of funding, and they finally get office space. So people are in that situation, and that's great. And it's a tough call on how far you go back, but my first reaction is I would go back until you're profitable, and then I would keep all the records before that, just in case.
Ken, I would imagine we have a pretty wide range of experience levels within business finances and QuickBooks and all of that. Can you give us a basic breakdown of the structure over the next 3 days? Because what's great is we have 3 days for this material, and I think that's perfect for what we need to learn. But maybe you could give us a breakdown of what everybody can expect.
Great. So I just talked about, I kind of set up the course in a very general way, but now let me be more specific. So in segment 2 is defining your financial framework, which is, Ken, just give me a skeleton of what I need to know. Just frame the house. What's the minimum I need to know in terms of financial jargon type stuff? That's segment 2. Okay? We're going to talk about a term that I repeat through this course, and I was telling the producers yesterday. It is critically important, and I'm going to say it now, even though we're going to cover it later, that you match the revenue, the sale, with the expenses you incurred for that sale, even though they happen in different time periods. So if you're a photographer and you fly to New Zealand in July and take pictures, and you incur all the expense, travel, all that, and then you sell those pictures in December and somebody writes you a check, you've got to match the revenue from December with the expenses when you went to New Zealand, even though they happen in 2 different time periods. In other words, and I'm going to get to this later, don't just go by your checkbook. Well, look, I've got revenue in December, and look, in the summer when I went to New Zealand, I had this big expense and I ran a loss. You can't just look at it that way. You need to match the revenue with the expenses to find out if you're really profitable. Okay? So that's segment 2. Excuse me. The other funny thing is, it wasn't mentioned in my bio, but I was an adjunct professor of accounting at St. Louis University in St. Louis for about 3 years, which was a lot of fun. We're going to cover debits and credits, the ultimate accounting jargon, right? And I remember when I always did this, when I was a college professor, I'd always see what page it was explained on. And I'd say, if you do nothing else in this course, memorize page 89. I can talk about it till I'm blue in the face. Memorize page 89. It's weird, it may be illogical, but we'll cover that. Again, at the minimum we need to cover. That'll be in segment 2. Segment 3 is setting up your system. If you were going to QuickBooks Online for the first time, how do you navigate it? How do I, at a very minimum level, set up a company? What do all these sections mean? Okay? If I scroll to, so homepage kind of stuff. Another big problem, because we talked about taxes. If there are multiple people who are owners of the company, tax accountant friends of mine face this every, what is it? It's January, it's late January, we're getting into tax season. One thing that quickly runs off the rails and is not kept track of is what you will here I call capital. How much money did everybody put in the business? How much money did everybody take out of the business from profit or return of their investment? Keeping track of that. Everybody gets off track on calculating who put money into the business, who took money out of the business. Accountant friends of mine are scrambling every February and March to figure that out for people. So I'm going to mention that because that's an important thing to remember. And it's forgotten, right? You're out there running, trying to get business. And nobody remembers, well, wait a minute. Look at the checkbook and see how much money I put into the business. Or who contributed that piece of equipment that we use for photography? Who? I don't remember. You got to keep track of that. Capital. Okay? Let me keep going. I'm just trying to touch on a couple of things for each segment. Section 4, I really go into profitability. You know, when you ask people, well, what do you want to see in your financials? Most people want to figure out, well, am I making any money or not? My wife always wants to know that. My wife controls all the money in the house, and we've been married 27 years and it works. But obviously, she wants to know, how much money did you make? How profitable are you? And since she's an accountant, she helps kind of coach me on, well, are you going to do that project and how much are you going to charge, which we'll talk about, and is that profitable or should you stop doing that and do this? We have those kind of conversations, okay? We're going to talk about different calculations of profitability. And again, there's going to be a little bit of algebra, a little bit, trying to minimize it, but it's stuff you really need to know how to do. And as I described it to Creative Live, a lot of it is stuff like back of the napkin stuff. It's 3 numbers. And you do what if scenarios. Well, what if I could lower my inventory cost 10%? Or what if I charge that person 15% higher than I normally charge because there's more work involved? And you do what if, what if, what if, what if. Is that piece of work even doing? Number one problem in business, for those of us who are out here on our own, we don't charge enough. Now, I'm not talking about greed. I'm talking about people who don't charge enough for work that should be legitimately at a higher price. And the other one, turning down work. Oh my gosh, turning down work? Are you nuts? Yes, turning down work. We'll talk about that. Now, in an accounting standpoint, turning down work means, it's not profitable enough. Personally, it can also mean, I just don't want to work with that person. Have we done that? Or have we continued to work with people that we can't stand? No, not ever. Not ever. I had a client one time, every time he called me, he marked the call as urgent. This voicemail is urgent. Every time he called me. It's a nightmare. This call is marked urgent. I can still hear it in my voicemail. This call is marked urgent. So we're going to talk about different profitability calculations. And again, I'm going to use a catering business as an example. Setting up your client's expectations, okay? What is the client coaching your client? Here's what you can expect. I'll use it in my business. I used to do a lot of tutoring in accounting and finance of MBA students and my typical client was a student who was probably like you and didn't have any accounting and finance in undergrad, and now they're in an MBA program, and it's accelerated, and they're lost. And they've never had accounting. And they find me on YouTube. The way I started my whole business on the side was, I started a YouTube channel. It's Ken Boyd STL. It's on my site. You can go look at it. And I have about 320 videos on YouTube. So you're an MBA student and you're desperately trying to figure out something in accounting, and you come across me. The point of the story is that there was certain business that I don't do. I don't coach or train people on taxes. Why? Because it's changing all the time. I just can't do that. So when you think about profitability, think about what are those things that you're not willing to do, even if you could? Because I'm telling you, I could make it rain. If I said, okay, I'm willing to train people in tax, it'd just be a flood. Please help me, please, But I can't do it because I know I can't do it well, and I know it won't be profitable for me, okay? Could he do it? Yeah. Should he do it? No. No. I've learned my lesson. I've learned my lesson because I tried and it didn't work out. So we're going to talk about a particular client. That's segment 4. Segment 5, which is forming your business. Now, several of you mentioned that you've just started new entities or you've started an entity recently. In one case, we know we're going to have partners, and we talk about forming that business. And as a friend of mine says, you need to have the who gets what discussion if you're going to be in business with somebody else. What I mean by that is, who owns what in terms of percentage? So Bob's going to own 50% and I own 50%. Who gets paid what? Well, Bob is more the sales and marketing guy, and we've made a judgment that he should get more of the income. So Bob's going to get 70% of the income and Ken only gets 30%. Why? Because we've made a judgment that what he brings to the table is more valuable. That's okay. And we're going to write that down in an agreement, and I'll get to that later. And that's the way we're going to run our business. Okay? You need to have that discussion at the front end, particularly if it's a partnership. I can't tell you the number of times that I've seen partnerships not work out, break up, get painful because nobody's had the who gets what discussion, who owns what, okay? In some cases in a partnership, you've got a person who's there every day and they're getting paid a salary, and then you've got another person off to the side who's like a silent partner who's got money in the business, but they're not working it every day, okay? We'll have that discussion in the forming your business. I'm going to talk about 3, sole proprietorship, which is most of us. I'm a sole proprietor. Partnerships, which I just talked about. And corporations. And in terms of angel investing, or getting financing. Most of you, and let me back up and say, I know there's a lot of people who don't want to, I'm doing what I like to do. I don't want to create the next big company. It doesn't fit my personality. It's not what I want to do, okay? I'm getting to that point in my life where I'm like, there's only so much I'm willing to do here. But if you do want to create the next big thing, it's very likely that you're going to have to become a corporation at some point and have shareholders, because generally you can have as many shareholders as you want. So that means you can issue just about as much stock as you want and raise just about as much money as you want. And we hear about initial public offerings and all that. But I'm talking about even before you get to that step, where you go to 50 people privately and say, we've got a corporation, and if you guys are willing to invest, here are shares. You cannot grow a business and get it big, generally, unless you're willing to become a corporation. How about questions from you guys?
We're looking pretty good. I know that next segment we're going to be talking about the basics of accounting and terms, and just for somebody who might not have had that experience yet, that's really when we're going to delve into that a bit. And I know that this segment is a bit like, if we think of this course like a marathon, when you finish a marathon, you feel great. And when you start out, you do a little warming up and stretching. And I think that that's what this segment is all about, just warming up, stretching, getting ready for this amazing marathon we're going to run in QuickBooks, and we're going to really delve into these finances that we need for our business. So I think that at this point we can kind of wrap up for the segment, and
Okay.
we'll come back into segment 2, and that's what we're going to dive into when we get there. And we did have some really great comments coming in just of people and our chat rooms saying how they really think that this course is going to help them a lot with their businesses and their financial goals. And I thought I would share with you, Julia AM, she said, I've tried QuickBooks a couple times, but I keep getting confused. I hope this class helps. My accountant has hopes that some year I'll learn QuickBooks. Currently, I use paper and pen.
So this is to help accountants everywhere, right?
Yeah.
This is the Accountant Employment
Yeah.
Act of 2014. Okay.
And we're going to be defining your financial framework coming up next. I didn't know if there was anything you wanted to add to that, but I think that.
You know, I will, in fact, real quickly, there we go. Just as a preview, those are the things we're going to cover. And again, the next segment is all about, at a very basic level, defining the terms, the minimum terms you need to know to start thinking about accounting, which gets you into QuickBooks.
Great.
Great, terrific, terrific. Well, we are going to take that 15-minute break, but when we come back, we have an amazing course ahead of us, and we just wanted to remind everybody out there. We talked about it a little bit this morning, but Creative Live has a lot of exciting things happening right now, and one of which is that we were nominated for the Best Educational Startup in the Crunchy Awards.
Yes, if you're not familiar with the Crunchy Awards, this is an awards that TechCrunch does every year. They're a very influential tech blog. They talk a lot about things in the startup space, and it's a tremendous honor for Creative Live to even be mentioned in this and to have the opportunity to win this award. So,
if you want to help us, you can go ahead and vote for us at the URL that's on your screen right now. You can go in and vote for Creative Live as Best Educational Startup. We would be so grateful to you, and we always are grateful to all of you who join us for our courses. You really are the reason we're here, so thank you.
yeah, if you have been enjoying these courses, that's the best way to say thank you, is a vote. We'd really appreciate it. So keep that in mind as we do go to this 15-minute break. But before we do, I just want to do a quick recap of some of the stuff that we talked about today before we wrap up. And as we mentioned, this really did just set the table for the next 3 days. This was a great introduction for people who are coming in from all different skill levels when it comes to financials. You know, we talked a little bit about the Myers-Briggs personality test as a good way for you guys to sort of learn which business you'd be getting into and how that's going to impact how you understand the next 3 days of this course. You know, we got into some of the basic accounting terminology, and it was good to get some examples from the studio audience about their businesses. And I know over the next few days, we're going to dive deeper into some of those examples, and hopefully they will illustrate these for all of you out there watching. So stay tuned for that. Like I said, we're just getting started. This is segment 1. We've got 3 days to cover a lot of material. So we're going to take our first 15-minute break, and we hope to see you back here in 15 minutes. I'm learning to tell better.
Welcome back. If you're just joining us, this is segment 2 of our first day of this 3-day course, Small Business Finance Basics, QuickBooks, and Beyond with Ken Boyd. We've had a great morning so far. And if you missed this morning, we went over arranging your desks and basically starting out organizing your business. And then in this segment, we're going to go into defining your financial framework. So we're going to talk about defining specific accounting terms and things of that nature.
Right.
Is that right? We've got a comprehensive couple days ahead of us, which we're all very excited for. And we are going to get started just shortly. But if you haven't already done so, you may want to click on the link that's below the video feed that you're watching right now. It's the title of this course, and enroll in the course for free. When you do that, you'll have access and you'll be able to download the free PDFs that come with enrollment. And there's 2 PDFs that come with enrollment. Ken, do you want to tell us a little bit about those?
Yeah, there's 2 PDFs. One of them is a book list, some books that really helped me out when I started my business. And the second is formulas that you're going to see throughout the course. Simple formulas that I think will help you run your business.
I'm going to be looking more at the formulas and the book list throughout the next couple weeks, really, because I mentioned it earlier, but I have a lot to learn, and I'm going to continue the learning after this course. So thank you for that.
Okay.
I'll let you get started.
Okay, thank you, everybody, for coming back. The challenge, I think, that we're going to discuss in this segment is whether it's accounting generally or whether it's QuickBooks specifically, language. There's a minimum amount of language that we need to know for QuickBooks. So what you see on the slide up there is dividing language really into 4 sections, okay? 1 and 2, besides being the bullet points, are actually 2 types of financial statements that you'll use: a balance sheet and an income statement. So in addition to defining terms, I'm also going to talk about the statements that those terms turn into, so to speak. Number 3 is the matching principle that I mentioned at the beginning, and a new term called accrual, which again is accounting jargon, that attaches itself to that matching principle. The final is debits and credits, which I mentioned in the first section. And the challenge is, how much of this accounting jargon do I need to know? And so I'm hoping that the solution we're going to provide is, you get to the end of this segment and you say, okay, I've got a general idea of what these terms mean, how I can use them in my business, and how they can be combined into something called a financial statement, okay? For those in the audience here, do you guys see terminology that you're confused by in your business? Maybe that an accountant throws at you, or maybe a vendor, anybody like that? Yes, ma'am.
I've never seen that term matching principle before. I don't have any idea what that might mean.
And we'll get to that one, which is the idea of matching the revenue you produce for a period with the expenses to create it. What's unusual about the matching principle is that it's not anything you see in financial statements specifically. You don't see that term. However, it's used to figure out profitability. Okay? So what we're going to try to solve in this section is the problem that I've got this accounting lingo and I need to know some of it to run my business. Okay? That's where I'm trying to go in this segment. The first term there is called balance sheet. Things have to balance. And in order to understand that formula that I'm going to comment here in a minute in yellow, you need to know 3 terms, okay? The first thing, and it's not necessarily on the slide, is oh yeah, it is, assets, liabilities, and equity at a specific point in time, which means you are taking a snapshot of a point in time. If you, for example, try to run a balance sheet for a period of time, say the month of February or the year 2014, QuickBooks and most accounting software won't let you do it because a balance sheet is a snapshot, point in time, a day. Take a picture of my business on that day. Okay? You see there's a formula with an equal sign in the middle. So what we're going to find out down the road here is that things have to balance. And in fact, in accounting software also, if you try to create one of these reports and it's out of balance, meaning that the numbers on one side of the equal sign don't equal the other, you'll get an error message. Okay? And again, another purpose of this segment is to slap labels on certain terms so you can start putting financial statements together that you can use. Okay? That's the purpose of this segment, and that's the problem that we're trying to solve. Okay? Let me talk about assets first, and I'll ask the audience. You've already talked about a few. What is something you use to make money in your business? Now I'm going to give you a hint. Inventory is something you use to make money. You take a piece of inventory, you either put it on the shelf and sell it, or maybe you do something to it, change it, improve it, and sell it. But what else? What else is something you use in your business? Website. You use your website to make money. So the point of the term asset is it's anything you use to make money in your business, and that's very broad. Okay? Anything you use to make money in your business. So I'll go back to my plumber example. I had a big client, did about pretty big, I thought, $3 million in sales a year doing residential plumbing. Something I didn't know before I got this client. We've all seen plumbing trucks running around town doing plumbing. Do all of you, when you have a plumbing problem, put it off for weeks? No, of course. It's probably pretty urgent, right? So I figured, well, there's a truck driving around town, and he probably paid $30,000 for, say, it's a Ford F-150 truck. But what I didn't think about was the amount of equipment that is on that truck. The equipment on a plumbing truck can be as expensive as the truck itself. So if you can imagine, there's a lot of money driving around on the road, going to people's houses to fix their plumbing. So the truck itself and the equipment on the truck is an asset the plumber uses in their business to make money. Okay? That's an asset. I'm going to go down a list of typical assets here in a bit. What we will find out, though, is there are some things you have that are valuable in your business that aren't necessarily quantifiable, and they are not necessarily something that ends up in the financial statements, okay? Later on in the program, I'm going to use a term that, again, I stole from a friend of mine called secret sauce, which is the thing that you do well, okay? How many of you have figured out kind of an elevator speech of what you do? Maybe even if you haven't written it down formally, what would be yours, for example? Are you embarrassed to say it? If you don't want to, that's okay.
No, I can go ahead and do
say?
it. I say hi, I'm Candace Betty, founder of Organic Radiance Skincare. I used to work for the pharmaceutical industry, and I decided to make my own natural skincare line. We make skincare for doctors' offices so that they can carry products that are all organic, paraben-free, and help fight against aging.
Okay. So and that's great. And so you've worked that out.
Mm-hmm.
You've worked that out. Ironically, people ask me, why are you going to San Francisco? And of course, I have to explain who Creative Live is, right? I'm not the marketing department, but I think the secret sauce of Creative Live is that we do very high-end, useful courses in a live environment. And our differentiation is, that's our secret sauce. We're doing it live. Not everybody else is doing it live. Okay? What I'm getting at is, most people who are successful have a process or a method or an expertise that they certainly use to make money in their business, but it's not necessarily something that ends up in the financial records, right? So everybody's got that something, and what I'm just trying to make a distinction is that doesn't necessarily end up in your financial records, okay? So an asset, things you use to make money in your business. And you've read my mail, because that's one thing I was going to say.
Okay.
Is goodwill. What we will find out in a minute when I start going through examples is goodwill is an area it's a type of an asset that we call an intangible asset. It's not something you can touch or feel. So a patent, a copyright, any sort of intellectual property. You know anybody who's an intellectual property lawyer? I know several who spend their days doing two things. They file patents and they defend patents when somebody tries to take advantage and use your patent. That has value, and that is actually an asset that gets reported in the financial statements. Now you should know something because you guys are in a creative field, and that is, it's a technical thing, but it's really big for creative people. If you spend money to create a process, a method, okay, not all of that spending is going to be an asset. In other words, much of it you're going to just have to end up expensing. For example, research and development. You worked in the drug business, okay? I have a friend whose father is one of 12 patent holders for a pretty big drug, which I can't name, but it's a big one. He lived when she was born, and she's my age, around 50, her dad was a PhD candidate in chemistry, and they were actually living on campus at the University of Missouri in a mobile home at the time. He was one of 12 people that worked for years and created a chemical compound that became a drug. From the time they discovered the compound and said, here it is, to the time it became a product that was sold by drug representatives was 12 years. It took them 12 years. Much of that money and expense they incurred over the 12 years is not an asset. The reason is it's not possible for you to know that what you're creating is going to be sellable down the road. So if you're like me and you drive around and you have lots of ideas on things, and you go different directions and you may spend money on those ideas, okay? Much of that spending, unfortunately, is just an expense. It does not become an asset formally. So goodwill is an asset. So the legal money you spend on a patent is an asset. But other than that, we all in our fields are probably going to be doing a lot of spending on ideas that don't necessarily become assets.
We have a question, and that is a specific, but it's more into defining exactly so we understand what an asset is, what a liability is. Accounts says for an e-commerce site, would the yearly GoDaddy cost be an expense for the period and an asset?
Great question. So you're spending money. I use register.com for my site, GoDaddy.com. And this brings us up a great question. The short answer is that is not an asset. It is probably something you would expense immediately because you can't match the expense with the revenue that it creates generally. I'm from St. Louis, so Anheuser-Busch has always been a huge employer in St. Louis. Now AB InBev, they sold themselves to InBev. Everybody watches the Super Bowl, right? At my church, they always cancel 6 o'clock church on Super Bowl Sunday because nobody comes. So they made the announcement in church, remember, Super Bowl Sunday, don't come at 6 o'clock because no one will be here because everybody's watching the Super Bowl. So Budweiser still is probably, Anheuser-Busch, InBev, the biggest purchaser of Super Bowl commercial time. However, in their financial statements, all that spending just gets expensed immediately. Why? They can't match beer sales revenue exactly with the advertising spending. So it just gets expensed. Okay? So let's think about the second part of that formula, and then I'm going to go do specifics on each. Okay? Very generally, I'm going to link liability and equity together. So you own a pizzeria, and you've got ovens and tables, and you own your building, and you've got, inventory, you've got dough and pizza, stuff to food, raw material. Those are all assets. There are two kinds of people who have a claim on your assets, who say, some of that is mine, so to speak. And you'll notice, I'm going to step over here, that liability and equity is on the right-hand side of the equation. That's because the liability and the equity represent the people who have a claim on your assets. And there are two types of people. Liability is money that you owe someone. Your accounts payable, your utility bill is a liability because you owe someone. So they have a claim on some of the assets in the pizzeria. Equity, on the other hand, represents ownership. So if the pizzeria is owned by Mo, Larry, and Curly own and have a claim on some of the assets too. Okay? So if you're trying to relate, well, why is the equal sign formula where it is? Why is it there in the middle? Because the terms on the right represent claims on assets, and the assets are on the left. Okay? So liabilities can be bills that you owe. A liability can also be long-term debt. Obviously, if you have a loan, that's called a liability. One that's unusual that I'll cover later is, do any of you right now have a deposit from a client? I have one, small one. I have a client that's an MBA student in Nigeria who found me online, and I use GoToMeeting.com to tutor people remotely. And we were having trouble getting the video hooked up, and when the video came up, he had a computer sitting on the dashboard of his car, and he had a headset, and he was driving. And the first thing I said was, can you pull over to the side of the road because this seems dangerous? We're doing this while you're driving. But anyway, so he sent me more money than it cost to tutor him with the anticipation that I would tutor him and help him later. Okay? That's a deposit. If I don't tutor him later, do I have to pay him back? Yeah. Common sense would say you got to pay him back later. So that deposit is a liability because I have to do one of two things. I have to either pay him back later or I have to provide the product or service, which in my case would be teaching him something. So what we'll see later on down the road is that a deposit is also a liability. Okay? If you'll look at the definition of equity, it says, if you sell all your assets and pay off all your liabilities, whatever is left over is called equity. So if I use my pizzeria example, we're going to get out of the business and retire. We're going to sell the store, the table and chairs, the ovens. We're going to sell all that, and we've got a pile of money. And we're going to use the pile of money to pay off all the bills. So we write the bill for the utilities, we pay off our bank loan, and the amount of money that we have left, we call equity. We call equity. Now, depending on what type of business you form, different people are going to have a claim on that equity. If you're a sole proprietor and you sell the pizzeria, and you sell all the assets and get the cash, and then you pay back all the assets, and this much is left. If you're a sole proprietor, that's all yours. If you're a partnership, you might have to divide that up. And finally, if you're a corporation, which is a little more complicated and we'll see later, you might have numerous shareholders that have a claim on the pile of money that's left that we call equity. Okay? Those are the three basic areas. Okay? So just to reinforce, there's two types of claim on assets. There are creditors and there are owners, which reinforces the formula assets equals liabilities plus equity. Okay? Let's talk specifically about some assets, liabilities, and equity, specific examples. Now, I use the example of the plumbing truck for the asset. Liabilities, I use the example of the utility bill and the loan. Now let's talk about why we call it a balance sheet in the first place. We call it a balance sheet in the first place because those numbers have to always be in balance. When we start doing transactions here later on, you will see that if I have a debit and a credit, that they have to balance on both sides of that equation, debit-credit, just like they have to balance on both sides of here. When they teach it in an accounting class, the way they do it is, Whenever you do any type of transaction, when you first learn accounting, you post it under one of these three headings. And you keep the equal sign in the middle. And I'm going to do some transactions later. But you'll see that all the numbers have to stay in balance with the equal sign. So when they first teach accounting, you'll get 3 columns, and you'll start posting numbers. And those numbers in total have to balance. And that's how most people teach accounting at the very beginning, and that's how they teach that relationship. Okay? We talked about inventory being an asset. You use inventory to make money in your business because you sell it for a gain. What other assets do you think about in your businesses? And I'm going to use some examples of my own. Anything? Mm-hmm.
Equipment.
Yeah, that was the next one I was thinking of, equipment. So particularly for those of you who are photographers, we had this discussion with the producers that technology is always changing. So not only for photographers, but for people in the film industry, you've got to upgrade all the time, okay? That means that you're buying equipment. Those are certainly assets that you use in your business, but you're in an industry where there's always the next thing that I've got to upgrade to. Because I can do a better job in my profession, my competitors are probably buying it, and I can just generally do a better job. Maybe I can do it faster than I was before by getting better equipment. So equipment is an asset. Now cash is obviously an asset, and we're going to do a whole segment on the vital importance of cash, and I'll say it several times in the course. Most people, businesses that I see, fail or don't succeed, not because they're not profitable. They don't succeed because they can't collect cash fast enough. If you can't collect cash fast enough, and you're constantly having to go out and find more cash, and we'll talk about how you do that, at some point, you just can't raise any more cash. You can't get any more investors reasonably, and you can't take out any more bank loans, and you fall further and further behind from collecting cash. So when we see a balance sheet in QuickBooks later, the first asset is probably cash. Inventory is going to be up there, and then there's one that very few people think about, which is accounts receivable. People that owe you money, that is an asset for you. Accounts receivable, people that owe you money, that is an asset for you. Okay? Here's another way to think about it. Cash is cash. What's going to happen, you hope, within 30 days with your accounts receivable, do you think? Hopefully, what's going to happen if somebody owes you money? Hopefully, they're going to pay you, and that will become cash. And if you own inventory, what do you hope is going to happen? You hope that eventually you'll sell it, right? And you will collect cash. So we see something in common, don't we? That cash by itself, accounts receivable will eventually become cash, and inventory will become cash. Okay? Besides your example, how many of you know people that have businesses where you carry inventory? Right? What kind of business?
With inventory? That's a good question. Probably retail.
Retailer,
Yeah.
like a shop. Mm-hmm. Okay. And how about you?
I was going to say retail as well, but also skincare.
Mm-hmm. Let's think about that for a minute. And this is kind of a preview or touching on something to get you thinking about a segment later on down the road. If you start off in your business with, let's say, $10,000, and you start on February 1st, and you get to May 1st, so you've been in business for a while, and you've been profitable, but your cash level has gone down from, let's say, $10,000 to $2,000, and you've been profitable, where do you think it's tied up? Where did it go? I'm profitable. Where's all my cash? It's tied up in probably one of two places. It's tied up in inventory if you're a retailer or in e-commerce, or it's tied up in accounts receivable. Okay? So you see that even though you were in business from February to May, and you were profitable, the fact that you're collecting cash more slowly is a big stress. Okay? The example, and I will repeat it because it bears repeating, the plumbing company I mentioned. And we mentioned that most of us are not putting off plumbing problems, right? We had an exciting weekend about 10 days ago in St. Louis where we got 10.5 inches of snow in 12 hours, and when the temperature was 10 degrees below zero for 2 days in a row. It's fabulous. That's why I love coming out here. I was on the plane, I said, I don't care how long it takes to get here. It's above 50 degrees. It could take, I don't care if I got to climb the Himalayas. I just please get me out of here. So what happens when it gets cold? Well, we had a pipe freeze. And Mrs. Boyd said, go downstairs and check out the pipe. So, like all of us, that is a business, the plumbing business, where there is a high sense of urgency, right? Plumbing, electricians, HVAC. So you would think these guys are rolling in the dough. You think you're going to put off paying your plumber? No, right? Garage door guys. Roofing you'll put off. Gutters you'll put off, generally. I know a lot of guys who are in the trades. But plumbing and electrician and HVAC, I'd like you just to consider occupations where, hey, it's urgent. Okay? Now let's think about that in terms of cash. If it's urgent and people are paying right away, you would think these guys are never short cash. Okay? So now let me relate it to my plumbing example. This is a company doing $3 million a year in sales. This is a big operation. He was constantly short cash. And you think to yourself, how can that be? He was so short cash that he would have to go to the bank practically every day just to figure out what checks were going to clear or not. It was insane. It was making him physically ill. And this is a person who's good at what he does, great reputation in a cash business. Well, here's what happened. So he is a residential plumber, meaning that he is doing home plumbing. He took some of his cash and he invested in a business doing commercial plumbing. It was an apartment complex. And because probably he doesn't know that business as well as his residential business, he lost money. And because he had a loss, he lost some of that cash. And because he lost the cash in his residential business, he was constantly behind the 8 ball. See what I mean? Unfortunately, this is an example of somebody going into a business that was not their expertise. Bummer number 1 is you lose money. Bummer number 2 is now your original business is short money too. Really a shame. Eventually, there's a happy ending because he was able to find an investor who said, this guy's profitable. I'm willing to put up more cash and take some ownership because I know he's profitable and I can share in that profit. So he was able to get the cash he needed to get through that crisis. Okay? So that is balance sheet. Now, go ahead.
What about like a sports team that has an athlete that is very valuable to them? How do you place a monetary value on that asset?
That's a good question. To the best of my knowledge, and I can expand the example, athlete, entertainer. Let me expand the example even further. How about your number 1 super salesman in your business? That guy has a lot of value. Generally, we don't put an accounting we don't record an accounting entry for the value of people, with one exception, kind of. In most of those situations, athletes, entertainers, the valuable employee, you're going to get insurance on those people so that if the athlete gets injured, you recover some of the value of that contract that you're paying them, or if the entertainer can't show up and do his contract, you're willing to reimburse the vendor, or if my wife works for a company where there was a founder of a company who was very critical, you get that person insured, okay? But does that make it into here? It does not. It does not. The insurance would just be expensed every year. But
if something happened to them, would you have an account receivable that would?
So let's say that your valuable person, whatever field they're in, for some reason can no longer do their job, and the insurance company says, yes, we owe you the money. I think how that would be treated would be beyond the scope of this class, but it would not be an asset. It would not be an asset, because you've got to consider that you were paying all those premiums all those years, expense, expense, expense. So in a way, you're kind of recovering that. And that's beyond the scope of this class, but it's a really good question, and it brings up the point that not everything of value makes it in the financials. But if you're in business situations where you guys, I know, provide unique skill sets, value, where this does come into play is when you're thinking about, should I bring in a partner? Should I collaborate with somebody? Another reason I did the Myers-Briggs test is I'm starting a new venture with a good friend of mine. We both did the Myers-Briggs and, in fact, more complicated testing to really figure out, well, what can he do and what can I do? That's about value of people, and that's about forming a working relationship, but not necessarily getting into the financials. Okay? So that is balance sheet. And what I meant to say also before I left this is, most small business owners have no interest in this. Other than the collecting cash aspect, most of us are most concerned about the next thing, which is the income statement. This is the first, yes? Mm-hmm.
But I still have a question about, and I think a lot of it goes back to goodwill as well, as to how do you get a complete picture of your business? Because there's one that you can look at this balance sheet and you can look at the income statement, and that can tell you a lot, as in what are my liabilities, what are my assets, equity, as in on paper, how much is my business worth? But then there's intangibles that on paper my business may be worth, let's say, $1 million, but there may be somebody out there who will pay $3-4 million for it because of all the goodwill associated with. And how do you almost like evaluate that for various things in your life? Because when you start a business, usually you do want to have an exit plan. You do want to sell eventually. You may need to be able to know the value of your business for a prenup, a divorce, whatever. And how do you get to that number?
That's great, and let's talk about that, because that brings up several really important issues. So let me talk about exit plan first. I mentioned in the first segment, most business people I know, including my dad, dear old dad, who's 81 years old, still working. He's in the investment business, and he has a radio show on local radio where he talks about investments outside of St. Louis. This is a person who decided, I'm just working because I enjoy what I do. There is no exit strategy. When I can no longer do this, it ends, and that's fine. That is the opinion, the attitude, I should say, for many people that I see. However, and this is the most painful part of not only being in business, but particularly starting a business, which is talking about the end. How does it end? How do you get an exit strategy? What do you ultimately want to do? Most people never talk about it. Okay, so I wanted to just address exit strategy first. It becomes particularly important, again, in a partnership and a corporation to say, what if a partner dies? What if a partner is disabled? What if a partner just withdraws and leaves? And this is a discussion we need to have at the front end. And nobody wants to talk about dying or be disabled. That's depressing. Who in the world wants to talk about that? But it's an important conversation to have. So that's number one. Another thing I used to do, and you're going to start thinking, I don't think Ken can keep a job. How many jobs has this guy had? I mean, come on. My first teaching experience was I would teach a test prep course for people who were getting licensed to be investment brokers. And this was my first experience because I had been in the investment business and now I was teaching it. And I had a guy in class who was a former NFL football player, and we were laughing because he made the point that what something is worth, based on his experiences as a professional athlete, is what somebody's willing to pay for it, which is similar to this discussion that he and I just had. So, you make the point that what you can sell your business for may be completely unhinged and unrelated to the financial stuff I'm talking about, because somebody sees value beyond what's on the balance sheet. That could be they have a secret sauce, or they have this person. Has anybody read the Steve Jobs book, Walter Isaacson? Yeah, I think that's on my list. Is it? And what you find out is that I walked away from that book, and I'm halfway through it, that when you try to quantify everything that Apple came up with and how it changed everything, it's practically unquantifiable. It really is. So there's value to a business that can't be put on the financial statements because of intangible assets like secret sauce or people or a process that can't be quantified. Now, let me comment on, there's two questions. How do I figure out what that is, and what, if anything, gets put in the financial statement? So the first one is, how do I figure out what that is? There are accounting friends of mine who are certified as valuation experts. Again, this gets us away from the traditional accounting, but it's important for this class because some of you may eventually sell a business, and you need to know about valuation. Typically, how we value a company that has both revenue and sales, I'll use those terms interchangeably, and earnings is, you look at the business that they're in, and you see historically what have people paid as a multiple of their earnings, and I'll explain what that means in a minute, or their sales. So for example, you have a business that has a 10% profit margin every year, and they've grown sales every year, and now they do $5 million in sales a year, and they have a 10% profit margin, which I will define later. And they're in the they're a grocery store. Valuation people can look at other grocery stores that have been sold and say, well, yeah, they paid, if it's $1 million in sales, let's say, they paid 5 times the sales, or $5 million. If they made $200,000, historically people have paid 10 times the profit, 200,000 times 10, or $2 million. The point is, that's how somebody is calculating what the company is sold for. And that assumes that you have earnings and that you have sales. Now, as we've seen all over San Francisco in particular, I just love being out here with all the creativity, you have businesses that are not yet profitable that are sold for big amounts, right? That is based on speculation. I'm not saying speculation is bad, but I'm saying it's based on speculation that this business has value that's way above the sales that it's doing now, and the company may be operating at a loss. The example I use with Twitter, I think I read that Twitter won't even be profitable until 2015, which, by the way, was co-founded by a guy named Jack Dorsey, who's from St. Louis. He's a co-founder. Twitter's not going to be profitable at least until 2015. They had to disclose that when they issued stock. Yet, people paid a lot of money, not even for a majority of Twitter, for a small fraction of Twitter. Okay? So to a certain extent, what what something sells for is what somebody's willing to pay for it, which is what this football player and I were kidding about. Because I said, what led to this whole, me bringing this up was, I said, that's a really nice car. And he goes, you want to buy it? I said, why would you want to sell it? He goes, anything's for sale. It's whatever somebody was willing to pay for it, I'm willing to sell for. Now let's talk about how it gets into the financials just a little bit. If the grocery store sells for a value that's way above, if I take the fair market value of everything in the business, let's call it a pizzeria. I take the fair market value of the ovens and the furniture and the building, and let's say it's $1 million, and the business sells for $2 million, okay? The company paid $1 million more than the value of the assets. And the question is, do we do anything with that from an accounting standpoint? And the answer is we do, and we call it goodwill. But that goodwill is only created if somebody outside buys the business. In other words, for the most part, you can't create goodwill yourself. Now, most of the creative people out there in the audience are saying, well, what are you talking about? I've got all kinds of value I've created. How can it be that it doesn't get recorded in the financial statements? Because it's too hard to quantify. But when somebody raises their hand and says, I'll pay you X, then it does get created. Okay? So, if you're in a situation where you're considering selling your business, what you may want to do is find somebody who's, I can't remember the distinction exactly, but it's basically a valuation person. There's a friend of mine in St. Louis, Kevin, and all he does all day is work on valuations. So find a valuation person. And also find, venture capitalists and angel investors, they have their sense of what they're willing to pay for, based on history also. Okay? But that's an important point for this creative audience, is that what we just talked about. Okay? I'm going to go on to income statement. This is the first time, and this is the problem with accounting, and I ran into this when I wrote my books. If you look at a dummies book, any dummies book, it's very, very standardized. And so when I wrote my dummies books, I had to do something that I don't like to do, and that is change and conform. Because there's a recipe for doing this to have a successful dummies books. And one of the things in a dummies book are conventions, where you explain terms. And unfortunately, this is the first area where we have multiple terms meaning the same thing. And in a dummies book, you have to explain to the reader, revenue and sales, Mr. Reader, Mr. or Mrs. Reader, mean the same thing for this course too. Revenue and sales mean the same thing, which is why I put it in parentheses. So let's define it. Income statement is the revenue or sales your company generates less the expenses you incur, and that equals net income or profit. I'm going to use net income or profit interchangeably also. Let me read it again without interrupting. Revenue and sales your company generates less the expenses you incur equals net income or profit. And I should also say that a balance sheet is for a period of time, a month, a quarter, a year, a period of time. Again, if you try to create an income statement for January 22nd, you'll get an error message. It has to have a from and a to date in there. Okay? Income statement. I said it a little bit different way on this slide. Revenue and expenses equal net income, or you can switch. Sales and expenses equal profit. All right? Now, I'm looking at my preview because the next thing is really important. Let's talk about a couple things within that formula, just to connect to the balance sheet, okay? Does revenue necessarily mean that you've collected the money? In other words, can you have revenue without collecting any cash yet? Do you think? Based on what we've talked about. The answer is yes. You can have revenue or sales without collecting the money on those revenue or sales, which means that you're posting revenue to this income statement, and on the balance sheet, there's no cash yet. Okay? In the same way, you can have an expense without writing the check yet, so that you have an expense on the income statement, but you haven't written a check yet for the utility bill. Okay? What I'm starting to go into is the disconnection between cash and your accounting records. There is a disconnection. In other words, they are not the same thing. Okay? I'm going to throw in one other financial statement that is not in the PowerPoint, but that is important. And this is something you're going to need to get to pretty soon in your business. And I didn't put it in the PowerPoint because it's a little farther down the road, but I'm going to mention it. And it is called Statement of Cash Flows. Statement of Cash Flows. So if you can imagine, you're literally going to take your checkbook and you're going to classify deposits and checks into 3 categories. Okay? 3 categories, statement of cash flows. The first is cash inflows and outflows from investing, which is buying assets to use in your business like inventory and selling those assets. So if you buy inventory, that is a use of cash for investing because you're buying an asset. If you sell your truck that you use in the plumbing business, that is a cash outflow. That's a cash inflow from investing because you're getting paid for the truck. See what I mean? Any changes in your assets, cash inflows and outflows, get grouped into cash flows from investing. And again, I wanted to do an overview of this one, even though it's not on the slides, because you need it. You're going to need it pretty quickly in your business. Cash flows from financing, raising money to run your business. You issue stock, that's an inflow from financing. You pay back a bank loan, that's a cash outflow financing. Okay? So cash flow from financing. And then everything else gets put into a category called cash flow from operations, which is just the day-to-day running of your business. A client pays you, that's an inflow from operations. You write a check for payroll, that's an outflow, operations. So the 3 categories are investing, financing, and operations. So what you do every month when you guys get a little further down the road, the great news is that QuickBooks and similar software may even do this for you. If you're doing the income statement and the balance sheet, that data will get dumped into this cash flow calculation, okay? If you're doing it manually, you're literally taking your checkbook and saying, which of the 3 categories do all these inflows and outflows go to? The purpose of the report, obviously, is to find out where all that cash is going. Where is it going? Okay? Another thing that I do. How many jobs does he have? Does he keep any of them? Who would hire? He's unhireable. This guy is unhireable. You're kidding. So one of the things I also do for a client of mine is I go on the road and I explain an investment product that they manage to investment brokers, which is a lot of fun. I'm going to Houston next week. Hopefully it won't be 0 degrees there. We were talking about Houston in the production meeting. So I go to Houston. It's a weird existence because I literally fly in the day before. I show up at a meeting. I smile and I shake hands with people. I'm a nice guy. And I stand up and I talk for 30 minutes and I leave. Now here's why it's hilarious. It's hilarious because everybody else there is a wonk. A brilliant technical wonk. So last time, I don't even know where I was. The lady who was introduced before me to speak worked for Goldman Sachs, and she had an MBA from Columbia University, and she was Columbia University in New York, and she was working on her PhD. One time the guy who started before me had a PhD in math. So I stand up, and when I do my thing, I talk to people just like I talk to you. And I usually say, the smart people are before and after me, but let me just explain this to you in terms that your client can understand. Because after all, isn't this all about explaining it to your client? And all the brokers smile and they nod their head. And then I do my 30 minutes and get off stage, and then somebody else comes up and talks about a bunch of other stuff that I don't understand, and then I fly home. So it's pretty fun. And this brings us to a point about equity before I leave it, which was, and I skipped it, I'm going to come back to it. There's only 2 ways to raise money to run your business. There's only 2 ways. Debt or equity. Those are the only 2 ways. Now, financial companies make this really complicated, but think about it. There's really only 2 ways, debt and equity. Debt meaning that you can borrow money and you have creditors. Equity meaning that you sell ownership. And that's really it. Okay? Debt and equity. I say that because when we were talking about cash flow from financing, you issue debt, you get money, that's an inflow. Excuse me, you issue stock, you get money, that's an inflow, right? Excuse me, so that was my attempt to tie cash flow activity with how you raise money to run your business. Now, let me go back because I think it's important to creatives and talk about, well, what about angel and VC investors? That's equity, that's ownership. However, the tough nut to crack there is, what are the angel investors and the VC people asking of you? In other words, how much ownership do they get? How much of the profit do they get? Do they get their profit before you get any profit? So there's a whole conversation that needs to happen on that. Okay. A friend of mine was the CFO of a company that was bought out by a private equity company. And in his experience, these people were really demanding. Really demanding. So you need to consider that. How much of my ownership am I giving away? How much of the profit do they get? Okay? I didn't want to leave it without making that point.
And just wanted to let everybody at home know that you may have noticed a little bit of noise in the studio. We do have a little bit of construction going on with our neighbors. So if you hear a little buzz or something, it's just some construction, but everything is A-okay.
Yeah. Don't be alarmed.
Don't be alarmed.
Don't be alarmed. Yes.
So I have 2 questions. One is around giving shares of your company, because I have corporations, C Corps, to your employees, and how does that look? And then 2, during the life cycle of some businesses, there will be times when you actually personally loan your business money, and what does that look like?
2 great points, and this is important for this course because what was just described was getting assets to run your business. And also an extremely important point for creative folks is, how do you reward people to keep them? Because the asset for a creative business is the people, right? If the talented people leave, you've got nothing. So this is germane, to use a big word, to this course, okay? First of all, rewarding employees. Generally, when you give stock to employees, that is usually an expense to the business. It's a compensation expense. And it's normally tied to, you've heard the term golden handcuffs? We heard that in business. You've got to work at the company a certain number of years to get this stock, okay? So that's how that works. And what was the second question? Because does anyone remember?
I don't remember.
Oh, loaning money to your business. Yeah. Okay. So when you put money into your business, let's say you put in $10,000 in cash, and you put in an expensive piece of film equipment. So let's think about that, because I'm actually doing that later in the QuickBooks section. Cash increases, an asset is created called equipment. But the question is, What's the other side of that? Well, the other side of that is that you, as the person who put in the cash and the film equipment, now have that dollar amount of equity or ownership. So if you put in $10,000 in cash and a $10,000 piece of equipment, you, the owner, now have $20,000 in equity, which again relates back to the claim on assets. Okay? Your claim on assets as an owner is that $20,000. You're saying as an owner, I put that money in and I put that equipment in. Does that make sense? Mm-hmm.
Are you classifying loaning your company money and investing as the same thing? Because a lot of times I will classify it as investing in the company, whereas loaning, you might not get such a, in the future. Do you know
It's
what
an
I mean?
important point. For the most part, I recommend that you account for money or other things that you put in the business, other assets, as an equity investment and not as a loan. Because usually your intention is to leave that money in there anyway, long term. Now, there are exceptions. If you write a check and then you get the money back in 30 days because you've got to make payroll or something, I get that. But generally, since you're going to leave it in there long term, I would classify it as an asset, going back to the balance sheet statement, and not a liability. Okay? What's on the screen next is finally, again, what I mentioned earlier, the matching principle, which is that the revenue you create should be matched with the expenses you incur to create that revenue. Now, let me again emphasize, this is a way of calculating profitability. It is not necessarily something that's going to get posted and be clear in the balance sheet or the income statement, okay? This is your own internal calculation of, am I making any money? Okay? I want to make that clear. The matching principle is not necessarily a balance sheet or an income statement or something that is clear in either one. Okay? Excuse me. We now introduce a new term called the accrual method. Again, accounting jargon, I'm trying to minimize it, but it's an important one for you guys to know. Let me define it first. Matches revenue with sales regardless of when the cash moves. Regardless of when the cash moves. That allows for matching. Let me say it a different way. The cash method of accounting, which is not on the screen, is accounting for your revenue and expenses purely by your checkbook. Does that sound like an accurate way to do this? I hope not. Okay? That's not an accurate way. Hey, I got some cash in the door. Which reminds me of my son Connor. Shout out to Connor. Connor, being a creative, has difficulty I'm going to embarrass him. Has difficulty tracking money. Let me give you an example. He gets a certain amount. He made money over the summer. Good job. His mother, who handles everything, gradually doles the money out to him. The question came up during the summer. He's a freshman. Summer before he left, how often should we dole out the money to Connor? We decided, he included, how about once a month? So, on January 1st, bear in mind, he's not even gone yet. He's still living at home, eating our food, burning up my gas money. He's not even gone yet. And we give him the money that he's supposed to use from January 15th to January 31st. What do you think happens on January 5th? It's completely gone. It's completely gone. Because all I see is he's getting in my car, and you have to realize that he's 6'5". He's a big guy. And he's driving my car to fast food, and he is just running through cash like you can't believe. So, on a cash basis, he's losing his shirt because it's all expenses. So we don't want to do our accounting on the cash basis. In fact, if you're serious, and I know all of you are, about being in business, don't use the cash method. Use instead this term, the accrual method. And I have on the slide, nearly all businesses of any size use the accrual method. Now, red flag, just heads up, tax returns may use the cash method. There, I've said it. Tax returns may use the cash method. That's not the point of this course, okay? So don't be confused if your accountant in April goes, hands you your financials and they may say cash method on it, okay? That's a whole different ballgame. That's not for this course. For this course, we use the accrual method of accounting, okay? Why in yellow at the bottom? The only way to truly match a sale in one period with the expense in another, okay? Now, practically, how many of you know somebody who works in a seasonal business? Anybody know somebody who works in a seasonal? Yes, what business is it? Where it's seasonal. Pardon me?
Photography, wedding photography.
Wedding photography, yeah. We suspect that the guy who did our wedding photography was in jail at some point. I don't know how that came up, but as my daughter would say, sketchy. He was kind of a sketchy guy. Now, this is a long time ago. And his name was Kim, and I can still see his face, and it was unclear how professional Kim was, but he ended up taking our picture. So that's a seasonal business, right? Retail, another seasonal business. Most of those people in retail are not making, their make or break is from third week of November through December 31st, and that's make or break, okay? So you can imagine, and the reason that I bring this up, that this cash activity can be very different from your revenue and expenses. Because if you've got a Hallmark shop and you're doing all your revenue, the vast majority of it between November 15th and December 31st, do you think you have a lot of cash in the door on January 1st? Probably so. So you're cash rich, okay? But you've got to bear in mind that you've got all those expenses from early January to November again to manage, okay? So the problem in those cyclical businesses, those seasonal businesses, you got to really be careful managing money. Swimming pool business. Guy lives around the corner from me. He has a business called Liquid Assets, and he builds swimming pools. It's kind of he's got a great logo. Side of his truck, it says Liquid Assets, and it has like drops of water. That's a seasonal business. They're building a house down the street from me. The reason I know is that at 6:45 in the morning last Saturday morning, they were running equipment. And they were also doing the same thing Sunday morning. I don't normally get up at 6:45 on Sunday morning or Saturday morning, but I did those 2 days because they were running equipment. Trades is another good example. Outdoor. I was talking to some bricklayers at the house, and I said, how cold can it be before you can't lay brick anymore? And he said, 28 degrees. And if it gets below 28 degrees, we can't do it. If it's below 30 degrees, they have to use blow torches to keep the sod or whatever, the stuff between the bricks, help me. Can't remember. The mortar. Soft enough to be able to stick to the bricks. That's a seasonal business, okay? Many people who are in the trades, roofers, for example, those guys just shut down. In my area, from November, December, January, they're shutting down. They're not doing any business. You can't put a roof on a house, generally, when it's 15 degrees, okay? This means that people who are profitable using the matching principle are in big trouble if they don't manage their cash correctly. See what I mean?
Can we clarify something that was said? There was a little confusion. Renata asked, when we were talking about matching principle and cash method for taxes, you made a statement. I think that she understood it to say that we would need to keep 2 sets of books.
Oh, okay.
Is that the case, or is that? No.
I'm glad that was asked.
Okay.
No, I am not suggesting you to keep 2 sets of books. All I am saying is that when you give your information to an accountant, there are cases, particularly when your business gets bigger, that there may be parts of this that are accounted for on the cash basis. I just don't want somebody to watch the course and leave and get a tax return done and wonder, well, wait a minute. I heard on the course never to use the cash method. Why is it? Okay, that's what I mean.
Great, thank you.
1 set of financials using the accrual method. All right? This is my favorite graphic, I think. Again, I'm an accountant. I don't do graphics very well, but this is cool. So, July 2013, a photographer travels to New Zealand to take photos. He might not even have a buyer yet. How many of you have done creative work where you don't even have a buyer yet? Sure, right? December 2013, you sell the New Zealand photos in December of that year. Okay, this is the example similar to what I used earlier. Well, what's the calculation on profit? Well, it's the December revenue less the July expenses equals your profit. And I put down in the right-hand corner, the whole reason you spent the money in July is so you could profit and sell the pictures sometime later. Okay? Otherwise, you wouldn't have incurred the expense in July. You wouldn't have incurred the expense in July. Okay? Matching principle. A couple other examples. I'm glancing at my screen here, is that, again, I'm going to say it again, that whole disconnection from cash. Income statement and balance sheet are disconnected from your cash activity. It's so important, and it's worth saying multiple times. Okay?
Quick question.
Yes?
Do you recommend carrying that over multiple years or just keeping it in 1 year?
Good question. Bear with me just a minute. I'm trying to get back to, there we go. Let me just go to the next slide and I'll answer that. Okay. This can happen over multiple years. So the question is, do you recommend, how does the changing from 1 year to another play into it? You just keep moving forward. Here's what I mean. If you have payroll expense on December 31st, you've got payroll that you owe for the last week of December. That's an expense in 2014, even though you haven't paid it yet. Then in January 5th, you run payroll, 2015, and you actually pay the cash. That's an expense in the prior year. And we'll talk about how you do that later. So, it goes over from month to month, but it also goes over from year to year. In other words, you can have situations where the income or the expense is in 1 year and the cash moves in another year. Am I answering it? Okay. So the cash method of accounting, again, is your checkbook where your deposit is revenue or sales. I'm using the terms interchangeably. And the checks are your expenses or debits coming out of your account. I've covered this slide other than to say that the cash method, again, distorts your profit calculations. Okay? Said another way, because it's so important at the bottom of the page, the accrual method profit does not match your inflows and outflows. I've beaten it to death, but it's so important because people who are novices to accounting don't get it. They just don't quite get that. So I'm really trying to beat it to death. Okay. Finally, double entry accounting. And again, this is, we've got some accounting jargon. It's not your thing for most creative people, but we're giving you just enough to know to run your business. And specifically, I have to cover this before I go into QuickBooks. Double entry accounting means, defined at the top, each entry into the records, the accounting records, has two sides. You have a debit, at least one, and you have a credit, at least one. In other words, you cannot have a transaction without at least a credit or without at least one debit. Okay? When I tutor people in accounting, I use what's called a T account, which I say here, and I know the positioning is kind of bad, visually explains the process. And the reason I'm standing here is that I've got a line here, but if you can imagine a vertical line between debit amount and credit amount. A T, okay? A T. This reminds me of my class at St. Louis U, where I said, you got to memorize page 89. Can you explain to me debit? Memorize page 89. Don't care. Until you memorize page 89, you can't ask me any questions about this. What are the rules? Debit is always on the left. Now, let me say credit and then I'll do my now. Credit is always on the right. Always. This is confusing when you think about your banking, right? A credit is a cash inflow and a debit is a debit out of your account, right? Ignore terminology you use for your personal banking for right now. Let's set that aside. Debits are always on the left, credits are always on the right, and at the bottom, total debits will always equal total credits. So if you run through 30 transactions, debit, credit, debit, credit, debit, credit, different amounts, they have to all add up to the same dollar amount total, or a system like QuickBooks will give you an error message. Okay? These are always true. However, depending on the type of transaction, which you do debit or credit can be different. You follow me? I want to make that point. Example transaction. For those of you who are wondering, I just can't wait for him to get into the accounting transactions. This is so awesome. We're finally here. We're finally here. That's a joke. You buy $500 of photography equipment. Now, that is an asset that you're going to use to work in your business, right? For 6 months, years. It would not make sense as a result to immediately expense it. Why? Because it is an asset that you're going to use for months or years. Okay? So let's agree at the beginning that the photography equipment is an asset. All right? If we agree, the equipment will be used over 2 or 3 years. We debit an account called photography. I panicked. I thought it said expense. I looked down, I looked up, and I said, does it say photography expense? And I panicked. But it doesn't. Debit photography equipment, which is an asset. Debit increases an asset account. Credit cash, which is an asset, to decrease cash. To decrease cash. Okay? So if you can imagine a T account, what we did for this transaction is the left-hand side of the T account increased by $500 for equipment. The right-hand side of the T account, the credit, posted $500 for the decline in cash. Okay? When we get to QuickBooks, this brings up a good point. When you see me start this afternoon, what you will see that I did to post some transactions was I did something called a journal entry, just like writing in a journal. My youngest got a journal for her birthday from her brother. Her brother was her Secret Santa, and he went to the mall, and he got her a leather-bound journal, and we just thought that was so nice, because usually they fight like cats and dogs. And isn't that nice that her brother did? That's very thoughtful. She even gave him a hug before he left for college again. Thank you for my journal. So a journal entry is essentially where you're putting all the transactions that look like that. What I mean by that is you're going to write down debit or credit, the account, 2 accounts in this case, photography equipment and cash, and the amount. And you're going to have line after line after line. Now, how does that connect to QuickBooks? My suggestion to you is that until you get used to using QuickBooks, and you will see how I did it, that you manually post these entries rather than go into a QuickBooks window where it's done for you. Where is it done for you? For example, when you create an invoice, QuickBooks posts a journal automatically for you. The problem is when you don't have a lot of experience at it, you create an invoice for somebody and you look at your balance sheet, your income statement, and you go, where did that come from? I don't know. What? So my suggestion is that you do it manually at the start just to get used to it.
There's a little conversation in the chat rooms about debit and credit and getting used to the terms. And Scott Hamill actually said debit credit was definitely the biggest mental hurdle when learning accounting. And a few other people have said something similar. I was just wondering for you if you have any tips or tricks to kind of get over that little bit of a hurdle.
A couple, there's two big ones. The first is debits on the left, credits are on the right. Those are the two fixed rules. All of the other rules about how you post transactions can be different. And in fact, I got to think about if I'm covering it here. Bear with me, bear with me, bear with me. I'm going to cover that in the QuickBooks later today and in a later segment. Here's what I mean. Let me give you a little preview. Asset accounts always get increased by debiting. Asset accounts get increased by debiting. However, liability and equity accounts get increased by crediting. Oh my gosh, there's two methods? Yes, there's two methods. Okay? So even though debits are on the left and credits are on the right, how you increase an account or decrease it depends on the kind of account it is. This is the hurdle. But debits are always on the left and credits are always on the right. That doesn't change. Now, let me go back some slides and tell you why it might make logical sense that debits are always on the left and credits are always on the right. I know I can scroll to it, but I'm doing it old school here. By the way, did you guys know Facebook's passé now? My kids never go on Facebook. I still go on Facebook. My daughter, for her senior year of college, for senior year of high school, she's now a senior year of college, friended me on Facebook. That was her gift to me. Now Facebook is passé. I get a lot of this at home too. Dad, don't post that on Facebook or any social media. Okay? I think it's a cute picture. Dad, don't do it. I want to, what a friend of mine said, you got to breathe in love and you got to breathe out acceptance. Breathe in love, breathe out acceptance. Isn't that nice? Somebody said we're having a meditation speaker later, which is awesome. But I bet a meditation speaker would breathe in love and breathe out acceptance. Anyway, back to accounting. So you see that formula there. Now I said that assets are increased by debiting. So all the asset increases are debited on the left. Liabilities and equity are increased by crediting. So what you end up with is a big pile of debits for assets and a big pile of credits for your liability and equity accounts. See what I mean? It evens out both sides of the equal sign. Let me do that again. Assets are increased by debiting, big pile of debits. Liabilities and equity are increased by crediting, big pile of credits, and the two piles have to equal each other. Okay? One other thing. If you're learning accounting, maybe beyond the, no, I'm not going to say beyond the scope of this class. One other point I want to make before we get too far gone here. Because I mentioned that what I had on the screen for that equipment transaction in cash was a journal entry. And after doing it the inefficient way for years, I finally figured out how to teach it a lot better way, and here's what I mean. What I have on the screen is a journal entry. A lot easier way to understand what's going on there is to put it in a T account. So when I teach accounting and I teach these transactions, I put them in a T account. Because then you can visually see left and right better. I don't teach it in terms of a journal entry like it is there. So if you're thinking about your accounting and you're putting something in the QuickBooks and you're confused about debit and credit and left and right, do a little T account. In this example, you would have a little T account that says photography at the top. You would debit it on the left for $500. You have another T account that has cash at the top. You credit it for $500. I got a left and a right. Visually easier. Took me years to figure out. That's the way to teach it to people. T account. Okay? Let me... This is a question, and I'll let our hosts pick up here in just a second, but one thing I'd like to sort of set the groundwork for is And you really did a great job, the audience did, of teeing this up, and also people in the chat room, for the next segment, which is, what is your impression of QuickBooks? Okay? We had a discussion in the hall about, there's 50, does anybody remember Baskin Robbins? Is it still around? How about Orange Julius? Remember Orange Julius? Yeah? Because this is how, by the time I'm doing this and I'm 70, people are going to go, none of his analogies make sense. What is he talking about? That doesn't even exist anymore. Because one of the things I usually say is, there's 51 flavors, right? Baskin Robbins with 51 flavors. That's my point. There is a point. There's 51 flavors of QuickBooks because there's 51 different versions and add-ons, and it's a little more complicated than what meets the eye. Do you see what I'm saying? So one of the things we found out when you guys were asking me questions in the beginning was, to do payroll, to do inventory, to do fixed assets, to do all those things, you may have to get an add-on for QuickBooks. So going into the next segment, think about your impression of QuickBooks. Are you intimidated by it? Have you started to use it and it's going okay? Have you posted some transactions somewhere and they've disappeared into the black hole, the Death Star somewhere of QuickBooks? You don't even know where they are. Are you printing off? Do you have reports coming up and you don't even know what the reports are? All this is very common. Very common. It's not your bag. It's not primarily what you do. This is just a means to an end. So that's what I would suggest, is to think about, for both the audience online, in the internet, and for you, what's your impression of QuickBooks?
Great. All right. Do we have any questions here in the studio?
Does QuickBooks have templates that are already set up that your business can fit into, or?
Great question. Yes, they do. So they have something called, and I needed to mention it here, a chart of accounts. So every business has a chart of accounts. These are the accounts you're going to use to do your accounting. So if you're a retailer, you'll have inventory and you'll have cost of sales, because that's unique to having inventory. So yes, the answer is, depending on your industry, when you fill out the QuickBooks setup, not necessarily online, but the more advanced versions, it will ask you, what industry are you in? And you say construction. And they show you a chart of accounts and they say, do you want to use all these? And by the way, you can change them. You can delete or add. But yes, it is specialized. Mm-hmm.
Great. We have a question here from David in Puerto Rico, and he wants to know, are all equipment purchases entered as assets regardless of cost?
Good question. Another way of saying that question is, when do I create an asset as an expense? How do I create an asset for equipment, and when do I just expense it? Let me say it this way. If the asset has use for any reasonable length of time, you're probably going to create an asset. Office supplies, for example. Most people just automatically expense your office supplies. I don't know when I'm going to use the pencil or the eraser or the stapler anymore. So we just expense it immediately. However, if it's an asset you think you're going to get something out of for a month or two or longer, create an asset.
Great.
Terrific.
All right. Well, if we don't have any other questions here in the studio, I think it's about time to wrap up this segment and take our break. But first, I know, Ken, you mentioned a question for people to think about as we head into the next segment. I know we're going to actually get into some of the basics of QuickBooks in the next segment. Mm-hmm. Is there anything you want to tease before we head out to the break about the next segment?
Yeah, I think a real important thing is being able, once you get done, whether after watching this course and doing it on your own, being able to navigate that home page. Can you navigate the home page? I also do some teaching online, and I always tell students, please figure out how to navigate the home page. Because you will find, if you can picture in your mind where everything is, it's a lot easier to do your work. Mm-hmm.
Okay, great.
I'm thinking about my impression of QuickBooks just as I'm seeing this on the screen and we're talking about what we're going into next. And I've used QuickBooks before, but I haven't used it in a while. And I think any time that you've taken a time away from a program or not used it at all, it's a little bit intimidating. And I'm just wondering, do any of our students here have that same feeling, or are you guys pretty comfortable with it and you're just wanting to learn a little more about it?
I am not comfortable with it at
No.
all. And
New to it.
yeah. And for me, change is hard. Like, I know Excel, I'm comfortable with Excel. I know if something goes wrong, how to like troubleshoot it. Whereas QuickBooks, it would be definitely me jumping off a diving board into what I don't know.
I like that.
I think, yeah.
I like that.
Jackie put it very well. Change is hard sometimes, and so we need you, Ken, to teach us how to change into something that will
We'll
help
do
us.
it. We'll do it in the next segment.
No, it can be intimidating. That's why it's
Yeah.
great to have a course like this. So those of you out there in the chat room, if you do have impressions of QuickBooks, do share them with us as we head to the break, and we'll be sharing them with Ken throughout the day.
Please.
But before we do take our break, I do want to share some of the comments that we've already seen in the chat room. Scott Hamill, who we mentioned earlier, says that he likes accounting, but he's not good with his personal finances. Hopefully he can do a good job with the business as he starts it. So that's why he's here watching this course today. And also the Guava Project says, I'm enjoying going more in depth with all of these terms, and I can see now that I have a lot more to learn, so I'm glad I'm here for Ken's course.
We're glad you're here too, the Guava Project. And Ken Hamill, not Ken Hamill, Scott Hamill, excuse me, he was in the chat rooms, and he's actually working full time, and what he's doing is he's starting his own photography business on the side. So he's going to start out part-time. And I thought this was really cool because that's what a lot of us can relate to that. And in order to do something like that, you already have a good deal of your time taken up by your day-to-day 9-to-5 job, and then you have your passion project. You really do need to be organized and smart and go about your business practices in a smart manner. So I just found that to be really inspiring that he's doing that, and I think we have a lot more people in our audience just like that. Yeah. So this is a very valuable course is basically my point. And just in this segment alone, we've just kind of reviewed some of the basics and the terminology and ideas behind accounting. And when we come back next, we're going to be talking more about QuickBooks. But I was thinking about just in this course with enrollment, which is free, we've got some great PDFs. There's a recommended book list and some small business formulas that you'll want to check out. And you can access that by enrolling in the course and then simply downloading those PDFs. Additionally, with purchase, you'll have access to this entire keynote of the entire 3 days for Ken's course. And as we're going through here, I'm thinking we have access to Ken for free right now for Catching It Live, which is really cool. If you think about he has thousands of hours of instructional, educational experience behind him. And he's taught at some pretty incredible universities, Stanford, Brown College, Missouri College. And if you consider what you might have paid to take a course like this there, and right now it's free, and if you do decide to purchase it, it'll normally be available for $129, and if you purchase it right now, it's just $99. That's such an incredible discount from what you would have paid to take a course of this level at a university or somewhere else.
Yeah, it's a great deal. Well worth it.
Absolutely, absolutely. So we are very excited to get back to the course, but we do need to take a bit of a break and have our lunch, so we'll see everybody back in 45 minutes.
What's the play?
We're in way over our heads!
Welcome back from break. If you're just joining us, this is Small Business Finance Basics, QuickBooks, and Beyond with Ken Boyd right here in Creative Live. We are now in segment 3 of day 1, and this is a 3-day course. Last segment, we were talking about some of the terminology and ideas behind finance, and now this segment, we're going to get into QuickBooks. We're going to finally dive in. So I know everybody in the chat rooms, you're very excited to do that. All of us here are as well. So I'm going to let Ken do that. And before we do, we just wanted to remind everybody that you can also chat and talk about the course and post any questions via Twitter at #BoydLive. So we'd highly encourage you to do that as well. Ken, how are you feeling?
Great. I know everybody's looking forward to this part.
We are. Well, I'll let you
get
away with it.
Thank you. And thanks to everybody out there. What I have pulled up here is, again, let me sort of set the scene. The version of QuickBooks that I'm using is called QuickBooks Online, that you can log into and set up an account very easily. It's a simple version of QuickBooks, the simplest. It's also online, so you don't have a disk to load. And it's also backed up on the cloud, okay? So again, stepping way back, the challenge for creative people is, how can I get comfortable with accounting? We started trying to get you over that hump last segment. How can I get comfortable with the language and the system? I describe accounting a lot of times as a puzzle. It's a lot like a puzzle, filling in a puzzle. So we tried to start that in the previous segments. How do I understand the language and the puzzle? Now that you've been exposed to some of that, let's talk about an accounting system to use for your business. Now again, some ground rules. There's some more complex accounting that this version won't use. I'm going to cover just about every type of version you'd need to do, but not necessarily in the sophistication level that you would get if you had a different version of QuickBooks. So for example, I may make a payroll entry, a manual entry to pay somebody. There's a QuickBooks version that's a lot better that could do that for you a lot quicker. So there are add-ons beyond this that we've talked about in prior segments. You could probably get a better QuickBooks version for payroll, for more complicated depreciating fixed assets, for inventory, okay? We could add that on if we wanted to. So we are trying to get over the challenge of, I'm not an accountant by trade, and oh, by the way, I'm scared to death to start trying to put my finances, which are really important to me, in a system that I don't understand. And so that is the challenge for creative people that we are trying to get you past. Now, I can't get you past it all the way, but I think I can give you enough where you could start doing transactions by yourself and get past that anxiety. And so that's what we're trying to do. Now, as I mentioned earlier in a prior segment, this is a lot better look, visual look, than QuickBooks used to look. It's a big improvement. Now, for a creative person, I mean, take a look at the creative live site. This is pretty pedestrian. This is not real fancy. But I will tell you that if you saw QuickBooks online a year ago, 6 months ago, this is a big improvement. So we are just trying to get you comfortable enough to use this system, okay? So what I did was, how did I log in to begin with? I went to QuickBooks Online and I just, like you would anywhere, I created a user ID and password that I used to log in. And you'll see that I created a fictional company called Image Photography, okay? User ID and a password. And the great thing is you can access this anywhere you have the web. I don't know, I can't remember if people are actually using it with mobile devices, but you can go out there and see if they are. Okay. The first step is I set up a company, okay? So let me click on, this is a help button, that question mark. So you can click on the topic that you want, all right? That's the help button. This wheel here has other information too. You notice, I notice even as a non-tech person that more and more websites now use these little wheel things. What does that wheel do? Well, it pulls up a whole bunch of places you can go. And this wheel is really helpful, okay? So, you'll see that over here on the bottom left, we have settings. And below it, it has company settings. I'm going to scoot up here just a little bit. So let's see what the company settings say. I'm going to click on that. You see at the top it says preferences. There's a whole bunch of data in here, you could fill out. I didn't necessarily fill out all of it, okay? Company name, address, email address, Let's scroll down and just see what else is here. Website, phone number, employer identification number. When you start a business, you file with IRS, it's irs.gov, irs.gov. You apply for an employee identification number, which is important and you need to hang on to. Not necessarily that you would put it in QuickBooks, but you need it for your tax return every year. It's usually 2 digits with a dash and then like 5 or 6 digits afterward, okay? You could put that in here if you wanted. It asks you for the first month of the fiscal year and the first month of your income tax year. For our purposes, the fiscal year and the income tax year are the same. And what I mean by that is, it's simply January to December of each year. Could it be different? Yeah, beyond the scope of this class, okay? January to February of a typical year. Tax form. Image photography is a sole proprietor with one owner. You see we could have multiple owners here. The reason we need and may need to click on these other buttons is because if you're a partnership, by definition, a partnership is more than 2 or more people. You click on one of the other buttons. 1 or more shareholders if you were a corporation. Also non-profit. Is anybody setting up a nonprofit? Or do you know of anybody that's set up as a nonprofit? I haven't covered that yet. Yes? Nonprofits, just as an aside, the purpose of a nonprofit is not to make money, obviously. The purpose of a nonprofit is a mission. I did some accounting work for a company in St. Louis that takes old rail lines that run through St. Louis, and they're tearing out the rails, and they put in hiking and biking trails. We have in St. Louis one of the biggest, in spite we don't have the best weather all the time, we have a huge hiking and biking system throughout, and there was a nonprofit that did that, and I did some accounting work for them years ago. So they're driven by mission. They're not driven, their motivation, their goal of existence is not money. So there's a button there for nonprofit. So for most people, this button is going to be one owner, okay? Closing the books, I haven't mentioned, but I am going to mention it here, and I don't have a specific slide in my work now that I think about it for closing the books. So let's talk about what that means for a minute, because it helps you understand income statement and balance sheet, okay? Closing the books. Let's say you have revenue of $100 and expenses of $50 for February. At the end of the month, which is the end of our period, you're going to zero out that revenue and zero out that expenses and put those two numbers together and come up with a profit number, right? So 100 revenue, 50 expenses is a $50 profit, okay? Here's what closing the books means. All of your revenue and expense accounts, your income statement accounts that we just saw in the last segment, get adjusted to zero. Let me say that again. All your income statement accounts, your revenue and expense accounts get adjusted to zero at the end of every period. And where all that information goes is in to your profit, which becomes part of your equity. Again, it's some accounting mumbo jumbo going on here, but what I want you to know is when it says closing the books, that is the process of taking all your revenue and expense activity, coming up with your profit, which moves into equity, and I'll explain more on that later. Okay? Does anybody, probably should have, does anybody know, work with, have a relative who is an accountant? Okay? You may hear, my wife is one. So we know at my house that the first couple of days of the month is busy because Mrs. Boyd is closing the books for her company. And so that's what accountants do. They close the books. At the end of a year, my wife's real busy because now you're closing out the year. And when we mean closing, we mean zeroing out all the income statement accounts and moving the profit number to your balance sheet. So that's what that button means there, closing the books. All right? And I'm not covering every cell of every thing in here. Oh, company logo. Somebody asked about logo. There's a spot for logo. I have a stack of books on my website. It's incredibly creative. Thank you. It's a piece of clip art. And I said, well, that's good enough. And so, name, address, email, website. Okay, company. You might click on, if I click on products and services, this goes into pricing your product, keeping track of the quantity of inventory might be beyond the scope of this class. But bear in mind that if there is preference information that you don't fill in here, you can always fill it in somewhere else. So if you wanted to put in some information about inventory and you didn't do it in the preferences, when you get to the inventory elsewhere, you can do it then. So don't be uptight if you forget to do something, okay? Because you can always catch it later. Okay. You also saw, let me go back, so I'm going to go back to the circle, the wheel, chart of accounts. I mentioned before the break, I touched on chart of accounts when we got the question of, can I have a chart of accounts that is tailored to my industry? And the answer is yes. A chart of accounts, the definition of chart of accounts, is the list of all the accounts and their balances. A list of all the accounts and their balances, okay? So, I have done some transactions already here. So, the typical setup is, in a chart of accounts, you have your asset accounts at the top, your liability accounts, your liability and equity, revenue and expense. Let me do that again. In order, in numbered order, or in the way they appear on the screen. You're going to have your asset accounts, cash accounts receivable at the top, liability accounts payable, equity, and then revenue expense at the bottom. That is the way that most chart of accounts for all software systems are set up. So in a company, cash might be account number 100 or account 1000. Accounts payable, which is a liability, might be account 500. So you kind of get the idea. Revenue might be 700 accounts. Expenses might be 800 and 900. Normally, when you guys set up your own businesses, you'll have more types of expense accounts than any other account. You'll have more expense accounts than any other. So if I were to scroll down here, again, the chart of accounts is simply a list of the accounts and their balances. Now let me point out some headings. You can set up your own accounts, and in fact, I've already done a couple. When you set up an account, and we'll do that later, you'll see that they ask you what type of account it is, which is a way of bunching or grouping your accounts together. So for example, I set up a credit card account where somebody paid for gas, mileage expense in there. So they're going to ask you what type of account it is, and when we set up an account later, you'll get a better picture of what that is. So at any point in time, you can pull up your chart of accounts, and you'll see that so far the owner's put in an equity of $1,000, and that's on the chart. Also, the balance. Okay? This is a tricky thing. In the chart of accounts, there is not a distinction made between whether it's a debit or a credit. All these numbers are just positive numbers. You don't know. That's okay because you're not creating financial statements from here. They just list the account balance. And whether it's debit or credit, we'll get to that when we do the financial statements. So that is a chart of accounts, a list of all your accounts and the balances, by definition. QuickBooks has the ability to create lists, and here are some of the lists. The big ones here are chart of accounts, which you already saw, but you can also set up what we call recurring transactions. For example, Well, let me read the definition first. Displays a list of transactions that have been saved for reuse. From here, you can schedule your transactions to occur automatically with reminders. So, if you have a bank loan and you're paying $500 a month, wouldn't it be nice to set that up to just automatically post every month, right? Depreciation on assets, same amount every month. Interest expense on a loan, same amount every month. So what you can set up in QuickBooks is a prompt for yourself so that when you get to month end, a little ding, a little reminder comes up and says, do you want to post the same activity? And QuickBooks will do it for you. You can set up products and services that you sell, so if it was a particular type of inventory, that you could do that. Payment methods, terms. If you offer certain discounts, I occasionally offer discounts to people, but let me say a word about discounting. I mentioned in an earlier segment that a problem in business is that people don't charge enough for what they do and they don't turn down business. Another thing is be careful, be judicious with discounting. Because if you discount once, what do you think is going to happen when you go back to the same client again? They want it every single time. As an aside, I don't go to shopping malls, ever. So it's always a big adventure when I go because my girls have figured out this whole online discount, coupon, sale, return, all this stuff. And a lot of that has to do with offering discounts, doesn't it? It is possible in QuickBooks to set up standardized discounts so that you can click a button when you create an invoice and it says, the terms are, if you pay within 30 days, you get a 10% discount. And if they do that, it will change the accounting to reflect that they didn't underpay you, they actually paid the amount that they were due. So it'll automatically happen. So if they owed you $1,000, but they paid within 30 days and they paid you $900, and now they're paid in full, QuickBooks will automatically adjust everything. Okay?
Can you clarify real quick? There was a couple questions in the chat room regarding which QuickBooks this is, if it's QuickBooks Online or...
This is QuickBooks Online, and this is called also Simple Setup.
Great.
Simple Setup, okay. Class is the category. I would stay away from using classes for now in the beginning. And so these are lists, again, and the way we found list was, we went right here. We've talked about importing. During the lunch break, we talked about importing from Excel. You can certainly import data. I had a client, I'm trying to remember why, who asked me to go out to QuickBooks and figure out how to import some stuff for his contracting business, and I figured out how to do it, and I can't remember what it is. But there's lots of different ways you can import. Again, to try to save yourself time. Another question that came up right before we went on the air was, if I'm doing things manually or not in Excel, and in other words, if I'm doing things in a way that cannot be imported, how do you suggest that I load all this information to have a balance sheet and an income statement starting point? And I said to use journal entries, which I'll get to later, which is the debit and credit and entering the account and the amount process. Okay?
We do have a couple questions coming in on the chat room. Do we have time to?
Yeah, you bet.
Okay, great. One of the questions was from a guest in the chat room who has a dry cleaning store, but they also do other things like alterations outside of that store.
Okay.
And it seems like when they have to use the select option, they have to choose, they don't get a choice. So it makes them choose an option from the QuickBooks list, which isn't exactly accurate for their business.
Yeah.
Is there any way around that?
Yeah, so if I have two kinds of revenue, which I think is what they're asking, so I have dry cleaning revenue and I have alteration revenue, I would create a separate revenue account called alteration revenue.
Perfect.
And so we're going to find out in a little bit how you can create accounts. Because I'll guarantee you, to do this correctly, I would make your accounts as specific as you need them for you to remember what in the world you're posting, right? So a lot of people hesitate, I don't want to make new accounts. Go ahead and make new accounts if you need to, so you can be clear about the activity that you're posting, okay? Expense accounts. If you need to make 200 expense accounts to really understand what's going on, go for it. Go for it, okay?
Great.
So that is the wheel. And I'm gonna click, usually I can click over here and get out of it.
If you had like 2 automobiles, would you have sub-accounts to?
Another great question. If you have 2 automobiles, or let's say you're a plumber and you have 5, well, I'll use a tree service company I'll use later. They have stump grinders. They pull them behind a truck, grind stumps. I would make an asset account, asset for each asset you have, for the most part. So if you own 2 vehicles, which are big dollar amounts, I would absolutely have 2 asset accounts. I'll go this way. I'll go across. Yes, ma'am.
So I saw a tab in there for like budgeting. So is there a way to actually compare like a time period with what your budget is?
There is in this version, yes.
Okay.
Yeah. I'm sorry, Renee.
Would you make that additional account for like the dry cleaning business with the alterations? Is that under chart of accounts? The screen before?
Yeah, and I'm going
to be in there.
Correct, and I'll show you how to set up an account here in just a minute.
Okay.
We will show you how to set up an account. Okay. I'm going to keep navigating across. I'm just looking at my notes to see which I'm doing next. Yeah. So you've got a button here. Let's click on that. Recent transactions. Well, that's kind of handy. Now, you'll notice under recent transactions here that I have journal entries. These are debit and credits that I put in. Okay. They're numbered. It's important that all your transactions are numbered. So for example, I have an invoice that's numbered 1001. I have journal entries that are numbered. It's important to number everything so you can go back and find it. Okay? So if you had gotten a check in from a client and you open QuickBooks up and you're like, I'd like to check and see if I made that deposit, but I don't want to necessarily go through all the screens. You can go to recent transactions. Oh, there it is. Yeah, I posted it. That's this sort of clock icon. Let's do that. What's the plus? Okay, now we've got create. We can create an invoice. How many of you do estimates? Anybody do estimates for clients? Yeah. I use the example of the tree service company where you got the guy who goes out with the clipboard and gives you the estimate. I've got a tree in my backyard that is, when we got that bad storm, I just stood in the back, looked out my back window, and I said, boy, I hope that tree doesn't fall down on my neighbor's yard before I get a chance to have it taken down. And I'm looking at it, thinking, will it hit all the power lines? Will it hit the phone? No, it won't hit the phone line. Will it hit? Yeah. So I need to have somebody come out and do an estimate, taking down about a 30-foot tree. So they're going to have a crew of guys. They're going to have to bring certain equipment like saws and a stump grinder. They got to figure out how long it takes them. They got to figure out how much gas mileage, all that stuff, and they're going to put that in an estimate. So you can do estimates here.
Can you keep an estimate template as well?
They will give you, let's just click on it. They'll give you a template. Now, if you'd like a template that's more complex than this, you can create one, unique to your business. Okay? So maybe if you're a photographer, you have a wedding photographer estimate template, as an example. Okay. So that's create. So a lot of time you'll probably spend clicking on this icon, to look at your chart of accounts. Maybe you add a list. And you'll spend a lot of time clicking on the plus icon, which takes you to places to do things. Okay? There's search for a transaction. Just trying to think of, I won't do anything with that now, but you can search by account title is probably the best way to do it. For example, you could type in checking, because I've got a checking account. So there's a filter, and you can filter it down even further. It says no matches found, because I set up a separate account for cash for this company. So you can, normally you'd filter by account title. Create, search. So what I've just done is I have talked about what's all across the top here, okay? Let's talk about what's down the side here. There's the home, we're on the home page. Now, what I like about it is the improvements they've made. It's kind of cool. They show you the income here in dollar amount. How much income have you earned? They show you the expenses I've posted so far. That's kind of cool. They've got this thing over here which is needs attention, which is a fancy way of saying, you know, we're going to give you some reminders. We'll tell you what day it is, give you a tour of the home page. Maybe you want the mobile app. There's that QuickBooks mobile app. Okay? Running down the side here. And then they give you a profit and loss. So, going back up to the top, I have expenses of 120. I have income of 170 less expenses of 120. I've got net income of $50. So that's kind of nice. Kind of gives you a snapshot right when you open QuickBooks. I think that's kind of nice. Let's click on customers. You'll notice that under customers, they give you some really useful information because they make distinctions between types of transactions for your customer. Unbilled, that would be if you'd given somebody a dollar amount estimate, but you haven't invoiced them yet. Unbilled. Unpaid. People you have invoiced, whether you've invoiced them through QuickBooks or somewhere else, but they haven't paid you yet, and then paid. This brings up something called an aging schedule, which is a valuable thing to look at, which shows you all your clients, and you can do it in QuickBooks. It's a canned report, basic report that's in there. All your clients, how much they owe you, and how long it's been since you invoiced them. Generally, in accounting world, if somebody's owed you money for 90 days or more, in most businesses, that's considered a bad debt. They're not going to pay you. So a typical aging schedule will say, here's who you've billed in the last 60 days, the last 30 days, 60 days, 90 days. And we call it an aging schedule. And that's important to look at to kind of stay on top of. Most companies, and this brings up something that I cover later that's important, and this is a good point to stick it in here. One of the things that companies hire me as a consultant to do is to help them create an operations manual, which is simply a book that explains how you do everything. Why do you need it? Well, two reasons. First, to help you understand why you do what you do and can you improve it. And secondly, it's my hit by a bus document. If I get hit by a bus, somebody else can pick up what I do and keep it going. One of your procedures is, how do we handle people who owe us money? Most companies have a process where they say, okay, if it's 30 days late, somebody brought it up, I remember earlier, it might have been Christine, I'm going to send them a letter that they're past due. The invoice says past due on it maybe. And after 60 days, I'm going to call them. And after 90 days, I'm going to call them again. And maybe you've got something in your procedure manual that says, you know, if it gets to be 60 days old, I can't do any new business with them until they pay me for the other order. I've had to do that with people. Another thing in your business in terms of collecting money, because this relates to this too. How many of you asked for deposits? I think I asked this, didn't I? Last segment? Okay. For new customers, Is it still Tuesday, by the way? I feel like I've been here for like 3 weeks. Doesn't it seem like a long time? That's terrible. It sounds like I'm boring. That's not what I mean. It just feels like a long time. If you have new clients, asking for a deposit is a great way to find out if the customer is willing to put skin in the game. I always ask for a deposit with a new customer because I want to find out if they're going to pay me. And I want to find out if they're going to pay, and the good way to start off is, will they pay me anything? So I always ask for a deposit. Rarely, if ever now, does anybody have a problem with paying a deposit. Plus, if you think about it, a deposit helps you recover some of the costs that you're going to incur to serve that client anyway. Why should you have to spend all the money for the photography, developing, and the gas money, and the whatever, and the postage on your dime? Why not get a deposit from them and let them cash flow that? You see what I mean? Why should you be out of pocket? You provide a valuable service. Okay? So, your policies on, do you ask for a deposit? When do you call on late bills? Do you send out a late notice? Needs to be written down somewhere. I cannot tell you the number of companies, big companies, where when a valuable person leaves, nobody has made an effort to update that procedures manual, and now nobody knows what's going on, and things fall through the cracks. Very important to have a procedures manual and to update it. Half the time, particularly creative folks, and this is not your thing, people need to create a procedures manual just to think through what in the world they do. You probably know it intuitively. Well, yeah, you know, you're in the shower and you're thinking, well, yeah, I need to do these 15 things today. But you do need to write it down. You might be able to improve it. You can also delegate work to somebody else at some point if you have a procedures manual. Okay? So I'm big on procedures manual, and that was a good point to stick that in there. That's the customer on the left drop down that we just covered. Vendors. People you buy things from and that you owe money to. So I built for our fictitious photography company, Reliable Technology, that's a tech company they use, and there's a supply company called Sunset Photography Supply. Vendors. This is all about, I would encourage you to build in vendors so that if you buy from somebody repeatedly, you just type in the first couple letters of the vendor's name and it pops up. Saves you time. So just like we had receivables on the customer screen, we have payables on the vendor screen. Okay? So I've made in my company $120 in payments in the last 3 days. Okay? This brings up something else with vendors. And a lot of times people who don't work in accounting don't consider this. There are times when business owners purchase things and don't purchase them for cash. Okay? There are cases where if you need to buy supplies for something, let's say you're making blue jeans. You're making Levi blue jeans and you've got a denim supplier and you buy denim from these guys all the time and they know you and you've always paid them and you're short cash. So you go out to buy denim and instead of giving them cash, you give them basically a loan document that says, I'll pay you in 30 days or 90 days or whatever. It is possible if you build a relationship with a vendor and you get in a bind where you're short cash, to set up an agreement where you don't have to pay immediately. If you've got that relationship going, okay? Just food for thought. Employees. Right now I don't have any. In the section where I want to talk about two things with employees here. The first is I would highly recommend that you get a payroll company to handle any payroll, even if it's just one person. ADP and Paychecks are the two big ones. ADP and Paychecks. You probably see them right on W-9s, 1099s, W-2s, 1099s. The reason I suggest it is the rules on withholding are changing constantly because it's part of the tax code. the ADP and Paychex, the payroll companies, normally, I'm going to put a caveat on it, normally take responsibility for making sure those withholdings are correct. They take responsibility, because I've got lots of friends, accounting friends, who love to do payroll, because if you're an accountant, that's monthly business that you can do all the time. But there's real risk because the withholdings, federal, state, city, local. If you work in St. Louis City, it's a 1% earnings tax, so now you've got a city you got to withhold for. Highly recommend you use a payroll company. Now, what if you do use a payroll company and you've got 2 employees and you use ADP? What I'm suggesting is that you take ADP's report, here's the payroll, here's the withholdings, and post it into QuickBooks yourself. Okay? And we'll do a transaction later on employees. So what I've done so far is I have gone down the left-hand side. Transactions. Probably got to click twice. Is it going for me? Oh, transactions is just a heading. So I got to go to the subheading and I pull up banking. When you first set this up, it will prompt you, if you want, to name your financial institution, because all of these large institutions, including PayPal, which I use for my business, have the ability to link to QuickBooks, including in some cases like not just deposits, but credit card data. So if you've got a Bank America credit card, you can log into Bank America and they'll shoot it right to QuickBooks for you, which is handy. So I'm going to close that out. So you'll see here that there's a downloaded transactions screen if you choose to download information about banking. And that can include credit cards. You'll see under sales here that I have an open invoice of $170. Open meaning that they haven't paid me yet. Okay? So if you look at the bottom, across the bottom, on January 6th, I generated an invoice. Everything's numbered. You got to number invoices, you got to number stuff, because that way you can make sure you got everything. If you're missing a number, you can go out and get the document. So it's number everything in order. The customer's Riverside. Here's a due date about a month later. A balance, it's not paid yet. So you can see on this action here, I could print that. I could save it. I could print it with a packing slip if I wanted to include the invoice in what I'm sending the customer, which I highly recommend. If you create a physical good that you give to a client, put the invoice right in there. Make it easy. Put it on top. If you hit receive payment, you can record that a payment was received and it flips you to that. Okay? I've already created some expenses in here. We wrote a check to Reliable Technology for some stuff. We had some mileage expense. Registers is really the same thing for our purposes as chart of accounts. If I go to settings, chart of accounts, I had a list of all the accounts and their balances. If I go to transactions, registers, I see the same kind of thing. I see the accounts and their balances. Well, let's just see, what if I click on this one? This one has a balance. What if I click on it? So where it goes is, it pulls up a register, which is simply a list of all those entries that I made. The date, the account. And this is very important in not only QuickBooks, but any accounting software you use, which is a memo section, where you write down why you did the transaction that you did, okay? So, for example, this one says, process photos for Riverside, the client. It's important to write a memo for every single debit and credit so you can remember what you did, and you can go back and find it if you need to. So that's the register section. I'm going to show you one more thing here, and then I'm going to show you some specific transactions. QuickBooks has tons of reports. Tons of reports. Now, there's a reason that I did segment 3 on income statement and balance sheet, or whatever that last segment was, before this. Because those other segments help you understand which reports you need. Because there's a lot of stuff in here, okay? Here's 2 reports you need. Profit and loss, double click. You'll see whenever you pull up a report in QuickBooks, you've always got this running across the date. What period of time do you want it for? I'm going to say this month to date. Okay? So that's from 1/1 to 1/22. I'm going to say run the report. Okay? So what I'm suggesting that you do is think about the period of time you want the report for and consider changing those from and to dates. Okay? And then hit run. Big mistake people make. They change the from and to dates and then they don't hit run on the report and they're not looking at the right report because they haven't run it yet. So make sure you hit run. Let me tie what you're looking at to some of the stuff we already learned. QuickBooks calls it a profit and loss. This is an income statement. Please be aware. QuickBooks calls it profit and loss. This is an income statement. Okay? So we sold $170 worth of services. We had $20 in mileage expense. We had $100 for photography processing. We have a profit of $50. Okay? A handy tool to navigate to get more detail. What if I clicked on the services $170 amount? It takes me to the transactions that made up the revenue. Oh, okay. On the 8th, I issued this invoice. See, it gives you all the detail. This account, here's the description. Please discipline yourself to write in enough of a description that if you glance at it, you'll remember what it is. People get lazy and they're like, printing. You know, give it enough of a description that you can remember what it is if you look at it. So my point is, you can go back to the summary report. When you create a report, you can click on any of the numbers in here and go to the transaction that was used to create that report. So here's where we did mileage expense. We wrote a check with a $20 expense. So the first report I'm suggesting that you use is profit and loss. And that was right here. The second report is balance sheet. Now note the difference. Balance sheet is as of a specific date and time. It's a snapshot. It's not for a period of time like a month or a year. Okay? So if you scroll down, oh look, there's accrual basis. We're using the accrual basis. Here are my assets. Now, it's a little clumsy here because you see how they indent. When you start making more accounts, this gets a little more difficult to read. For example, current assets, which I'll explain later, what a current versus non-current is. Bank accounts, checking. So when I created the account called checking, the type of account was bank account. So you can see it gets a little clumsy, but it's worth making specific accounts. One other thing this photographer bought, and I actually went online and looked for something that a photographer would buy and how much it is. And I found an umbrella backdrop for $170. So that was an asset that we created. So you can see assets at the top, liabilities and equity here at the bottom. Liabilities, equity, and oh look, they balance. They're both totals are $1,100. Okay? So what we just did was we looked at the balance sheet. Now, there, as I mentioned, lots of other reports you can use. You can create, these are recommended. And in this plain old vanilla simpler version of QuickBooks, there's 3. There's the aging schedule that I just talked about. If you want to age your receivables, and it turns out that AR means accounts receivable. That the Riverside restaurant has a current amount due of $170, which means it's less, it's one we just billed. Okay? One we just billed. So those are the reports they really recommend. Now, if you want, you can create custom reports. It says, we recommend that you customize, then save work listed here, save customizations at the top. You can do all kinds of other reports. So let's go to all reports. This gets at something that Jackie mentioned, which was budgeting, where, well, can I compare it to a budget? Yeah, there's the ability to do that. So let's go to, you see let's look at these different reports, and you guys can pick out in the audience which report might be useful to you without getting into too much accounting mumbo jumbo. Yeah.
We have a little conversation going on in our chat rooms regarding why using QuickBooks Online, why using this version, and how this version might translate with the other version.
That's a good question. For the beginning user of accounting software, I would recommend QuickBooks Online. Now, then the question comes up that I haven't covered yet, which is, well, what if I got to go to a more complicated version? This can be transferred to that more complicated version.
It can.
All the data can move over, yes.
Great.
I think to follow up on that, we had a question from Danielle Nicole. Is there a way to work offline in this version, say if you're on a plane or somewhere with no internet connection, and then sync it back up later? Because I'm assuming for this online, you do need to be connected at that point.
Yes. I don't know the answer.
Okay.
We'll try to find that out. If you could make a note, I'll try to find that out.
Sure.
I'm a little hesitant to do work offline because I'm paranoid. I want to make sure it gets posted. So
Yeah.
I would prefer that people do it when they're live on the web, just because I'd hate to lose something in the translation. Okay? Profit and loss balance sheet we covered. There's statement of cash flows that I just explained in a prior segment, which is the ability to divide up your checkbook inflows and outflows between operating activities, investing activities, and financing. Look, that umbrella backdrop, that asset that we bought, is an outflow, a negative, under investing. The financing transaction that you'll see in a minute when the owner puts money in the business, that is an inflow, positive number, financing. When I bill a client, that goes under accounts receivable. Now, that shows a more complex way of doing this, and I'm not going to cover, but you have operating, that's not going to let me do it, operating, investing, and financing. This data here in the middle, I'm not going to cover. It's beyond the scope of this class, but I did want you to see the report. So I was at reports. Statement of cash flows. Again, if you choose to customize a report, you can. That's there also. Okay? So what we just did was, if I go back to home, we navigated across the top and down the side. What I'd like to do now is to show you some transactions that I did. Now, you've seen pieces of them already, but you haven't seen the whole thing.
I have a general question with this. Is it possible to get this level of detail by project or by client? We've looked at generating an estimate, and then I see recording of expenses with details under memo, but would there be a way to track an individual project?
There is,
P&L.
but it's pretty complex.
Okay.
I would suggest that you keep it in Excel instead,
Okay.
because it's easy. The answer is yes. We call that job costing, you know, where you've got Seaside Film Client. Here's all the expenses that relate to them in QuickBooks. Yes. I would suggest that until you got enough activity to justify it, I would do that in Excel by itself. Yeah.
That's the way I've been doing it.
I've done that with clients who are tradespeople like tree service companies and plumber, and it's really easy to make a mistake and put it in the wrong place.
Okay.
Yeah. Okay? So I am going to scroll over. Let's go to the X at the top and go to Create. Now, I showed you just these categories, but I'm going to hit Show More now. And there's a whole bunch more that you can create. So I mentioned during this process or during this segment today, if you've got to create a company from scratch in QuickBooks, I suggest that you do journal entries, okay? Journal entries. So, how do I get there? I click on Create, the X. This is how it's going to look when you click on the X initially. Show More, Journal Entry. Okay? So this is data where you're going to create a journal entry. Now you'll notice that it's numbered. I've already done 4 journal entries. Wonder what happens if I change that to, can I do that? They're going to let me do it? Delete, 1, enter. It's not going to show it to me. I was going to try to pull up the other journal entries. Do you want to cancel and lose? No, I want to keep it. So I'm just going to X out of this. My point of showing you this is where you post a journal entry. Are you sure you want to save your journal? Oh, it's prompting me to go back and change that to a 5. Okay. That got to get me out of it? I'm just going to yes. Okay. So let me show you some transactions that I already did. All right, create. I'm in the Show More, and I've got this Journal Entry tab where I can post a journal entry. That's how I'm going to make an initial transaction. An easy way to see it is there's a couple of ways to see the data. The first is, so you're trying to find a transaction, let's say. How do I find it? Well, I did a transaction in here where the owner invested $1,000 in the business. So how do I find that transaction? Well, one way to find it is to go to the report and go to balance sheet where I know part of the transaction would be posted. So when the owner put money into the business, it affected this owner's equity account. Let's click on it. So now I see the transaction where the owner put $1,000 into the business. The owner put $1,000 into the business. What if I click on journal entry? Aha, I get to the detail. Let me do that whole thing again. That's a lot of steps. I'm trying to find a transaction one more time. I'm trying to find the transaction where the owner invested money in the business. How can I find it? Reports. Well, I know owner's equity is in the balance sheet. Balance sheet. Owner's equity, I click on the amount, and it gives me the part of the transaction that affected owner's equity. It does not give me both debit and credit. It only gives me the one side. So how do I find both transactions? I click on the word journal entry. Okay. This is where I manually made a journal entry, and here's what I did. Sarah, the sole proprietor of Image Photography, our fictitious company, contributed cash into the business. And you'll notice that I wrote a memo on both the debit and the credit. Copy and paste that memo down for both sides of the transaction to remember and keep them linked together. Okay? Checking is an asset. We debited to increase an asset, and I said capital contribution. We credited owner's equity. That's an equity account. It got credited. So this is my journal entry, and you'll see at the bottom the debits equal credits. Why do I bring that up? Because you could have a situation where you could have 6, 7, 10 debits and 3 or 4 credits, and as long as the dollar totals agree, you can have multiple debits and credits in the same journal entry. So that is the journal entry to post the fact that Sarah, our owner, put money into the business, okay? Let's go back and see what other things happened in the business. Well, what's this accounts receivable? Again, I'm in the balance sheet. I wonder what that accounts receivable is. I can click on it. We made a sale to a company, Riverside Restaurant. They haven't paid us yet. I posted it to accounts receivable. I want to see the debit and credit transaction. Okay? Well, what if I clicked on invoice? I wonder what would happen. In this case, I set up an invoice in QuickBooks that fed to accounts receivable. So I filled out. I created a client called Riverside Restaurant. You can see that's the only client I have set up right now. I put in a fake email address. Here's their billing address, invoice date, due date. This has to do terms. You can see there's all kinds of discounting terms I could give. This just says the bill is due in 30 days, net 30. Okay? Why did I do it? The product or service is event photography. Riverside Restaurant. You can put a quantity if you want to, particularly if you're taking inventory out of the business, and I got a balance due. Okay? How did I get to this invoice? If I go back, I went to the balance sheet, a report. Let's go all the way back. Report, balance sheet. I clicked on the amount next to account receivable. I got the transaction, and I clicked on invoice. Okay? Let's see if there's anything else in the balance sheet that I want to look at. I did an amount for prepaid insurance, and I'm going to click on a journal entry for that. Okay? Let me go back to where I got it and explain why it is where it is. Okay? Accounts receivable, click on $170. I get a transaction. Whoop. Oh, that's the restaurant. I need to go down to prepaid insurance, which is the $100. Sorry. Okay, prepaid insurance, $100. I click on the amount. I click on the word journal entry, transaction type journal entry. What does this mean? Okay. I bet you when you pay your insurance premium, you're paying ahead, right? So when you write the check in February, it's for March coverage, right? In other words, you always pay before the coverage. Okay. So we have an account. Whenever you pay something in advance, you can create a prepaid account. So prepaid insurance means that I wrote a check in January 6th, for February insurance premiums on a car that I use in the business. That is an asset, so I debit to increase it. I wrote a check, so I reduced my checking account by $100. Prepaid is an asset because it's money I don't have to pay later for insurance, so that is an asset. Okay? Let's see if there's anything else on the balance sheet that I want to look at. I looked at owner's equity, I looked at I didn't look at the umbrella that I bought yet. Let's look at that. Again, clicked on the amount. Here's the umbrella purchase. Let me click on journal entry. The umbrella backdrop is an asset I'm going to use in my business for a long time. So I create an asset and I debit to increase it. I put an explanation. Off to the side here, you can put the vendor that you bought the asset from, which happens to be Sunshine Photography Supply. I credit checking, and that's that journal entry. So there's a point, and I know this gets tedious going through all these screens, but this is something that accountants and business owners do all day long, where you click on the amounts in the reports to find the detail. And by the way, if you had 30 account receivable transactions and you clicked on this number, they would all 30 be listed there. You get all the activity. Let's click on checking. I tell this to students a lot. When you're trying to figure out this whole debit and credit thing, I don't even know where to begin. There's this transaction happen. I can't figure out the debits and credits. What I always suggest as a starting point is ask yourself if anything happened to cash, because in most cases, half of your accounting transactions that you are putting into QuickBooks will involve cash, probably. Now, that might be paying down a credit card that you use, and you use the credit card to pay for things. But it's likely that a lot of transactions will involve cash, so that when you're trying to figure out what happened in your business, ask yourself, did anything happen to cash? And that's your starting point for doing a journal entry. What you see on this transaction report, and again, we got to it by clicking on the balance sheet report and clicking on cash. These are all the transactions that involved cash, okay? All the transactions that involve cash. Now, another note. Let me just click on a journal entry. My suggestion to you is that you do one debit and one credit per journal entry only. In other words, if 3 or 4 accounts are affected, do them in groups of 2. Give you an example. You sell a piece of inventory that cost you $100, you sell it for $175. There's 2 journal entries. One is you're going to reduce inventory and recognize cost of sales. That's a debit and credit. Do that by itself. One journal entry. The other journal entry is you're going to record a sale for $175 in a receivable. Separate journal entry. Keep this stuff separate. What I'm getting at is you don't want, when you're a beginner, lines and lines of journal entries because it's too confusing. Do one debit and one credit at a time. Okay? So what we've done so far as a way to start getting you comfortable with navigating QuickBooks is to go through the balance sheet and click on each of these amounts and find out the transaction that created the report. Okay? And again, balance sheet is a snapshot in time. It's one day today. What about if I clicked on the income statement? Profit and loss. Remember, it's called profit and loss in QuickBooks. And I'm going to do year to date. Same process. That is, you can click on each one of those numbers and find out where they came from. Now, let me mention a number that is not in my slide deck that I have the mouse next to, gross profit. Okay? This is a term that may or may not be useful. It's up to you. Gross profit is sales less the cost of your sales. So if you're Levi Strauss and you're selling blue jeans for $50 and the cost is $30, your gross profit's $20. That is not all of your expenses, because you've got to pay payroll and insurance and the lease on the building, blah, blah, blah. But Gross profit is a nice number to think about because gross profit tells you how big is your profit before I consider all the other stuff that didn't directly relate to the sale. How big is my profit before I consider all that other stuff that didn't relate to the sale directly, like insurance and payroll and all that other stuff. That may help you in your business. It may not. That might not be meaningful. But I wanted to mention gross profit.
Can we take a moment and
Yes.
review the journal entry, credit debt meaning? And there was a little confusion in the chat rooms in regards to that.
Okay. Give me a little more on that. I want to make sure I understand what you're asking.
I think that they just felt like they might need a little more, I mean, how did you, just like a review of it, really.
Okay, let's do that.
Yeah.
Let's go to reports. Let's go to balance sheet. And let's pull up a journal entry. And let's review what that means. Oh, that's invoice. That's not a good example because that's an extra step. Let's go to one that was not an invoice. Let's go to the prepaid insurance. Okay, review. Okay, I'll leave it on the, let me get to the journal right there. Okay. Review. Debits are always on the left, credits are always on the right. Okay. Assets are increased by debiting. Liabilities and equity are increased by debiting. Debits on the left, credits on the right, always, always, always. Assets are increased by debiting, which is why prepaid insurance and asset is debited when we increase it. Checking, go ahead.
Is that auto insurance ever going to get expensed?
And I'll cover that, and I'll tell you now, but I'll also cover it in more detail later.
Okay.
Let me finish the explanation of the journal entry, and then I'll answer that, okay? Prepaid insurance is an asset. We debit to increase it. Checking is also an asset, but since we wrote a check and it went down, we credit to reduce it. Is that okay? Okay. The question is, when does prepaid insurance go away? That is, when does it get credited to zero? Okay? Let's do that journal entry. I'm not going to do it.
How are you going to remember that you need to do that?
Okay, that's an even better question. Couple ways. One way is, when I print out my balance sheet, I see the balance right there. That's one way. However, the better way is, if it happens every month, and it's always $100, is to create those reminder transactions that pop up on your screen and say, hey, do we need to post prepaid insurance for $100 again? Okay? Let me tell you how it goes away, and I'm going to create a journal entry which will help with the question that we had on the chat. So I'm going to go to Home, Wheel. I did wrong. Home, Create, Journal Entry. I happen to be on journal entry number 5. So this is a good, let me tell you what we do and then let me do it. What we do is, when that month passes, where we paid it the February premium in January. When February's over, we move it from prepaid asset into an insurance expense account because that's an expense that occurs with the passage of time. So your interest on your loan occurs with the passage of time. Depreciation on your assets occur with the passage of time. Same with this one. So how would I do that? Let's do a journal entry, okay? I click on the account screen. Now I have two choices. I can pick an existing account or I can create an account. I need to have an insurance expense. Well, gee whiz, do I have an insurance expense here? When you scroll down, you'll notice that the accounts that you scroll down are in order. It's all the asset accounts, then it's liability accounts, it's equity accounts, income, and then we get down to insurance. So there is an insurance expense account. I'm going to click on it. We debit to increase expenses and we credit to increase revenue. That's new. I have not covered that yet. We debit to increase revenue. We credit to we debit to increase expenses. We credit to increase revenue. Expenses debit, revenue credit. Okay? So on this day, I'm going to say that it's January. I'm going to pull up my calendar. I'm going to say it's the end of the month of February. So if you need to change the date of a transaction, boom, end of February. Please be careful with the dates. It's important because you want to get the financial data in the right period. Okay? Please be careful with dates. 100, description. Please write descriptions. To expense, prepaid, now let me say it this way, January prepaid insurance. We were talking in the break room about accountants and how, you know, as an accountant, unfortunately, one of the things you guys will have to do as creative folks is to be a little bit methodical and be a little bit boring. Okay, I'm boring. I get up in the morning, I have this exact same morning routine, I go to the same coffee shop, I sit in the same seat. The people at Panera, when I start to walk in the door, they make me what I want. Why? Because I get at the same thing every morning and I sit in the same seat and I open up and I look at my email accounts in the same order and then I write some of the book. And methodical. So unfortunately, for you guys to do accounting and QuickBooks, you're just going to have to be a little methodical, and that includes putting in these descriptions. Yes, I know it's tedious, but it will save you when you have to go find a transaction. Okay? You could put a name over here. Your insurance expense does not apply to anything specific, so I'm not going to do it. Okay, look at the bottom. Do debits equal credits? No. The system will not let me post this entry. Brian, could I get some water, if you don't mind? Thank you very much. That reminds me that, well, let me finish this and then I got to tell another story. Yeah, it's exciting. Now, we had a balance in prepaid insurance that we debited to increase as an asset, right? We are now going to credit, thank you, credit that account. Now the question is, well, how do I find it? Well, think about how the chart of accounts is set up. If it's an asset account, it's going to be near the top. Look at that, asset. Boom. $100, and look how the $100 automatically posted. Why? Because I had a debit with no credit. So it automatically filled. And the description automatically filled. Okay? Careful at the bottom of the screen, bottom right. This can save some time. Save and close means it's going to post the journal entry and go out of this screen. Save and new means it'll give you the chance to post another journal entry. So I'm going to hit save and close. Journal 5 saved. They're all numbered. Okay? Let me go back to reports. Let me go to profit and loss. There's the revenue that we earned when we went to Riverside Restaurant and we billed them. Here's some mileage expense for travel to do the photography shoot at the restaurant. Here is the cost for processing. Let's click on that one. That one we have not dealt with yet. We wrote a check to this vendor, Reliable Technology. What did we do? Again, you got to write this in yourself. We wrote a check. If I click on, you'll notice that we have different transactions. We can have a transaction type of an invoice. We invoice somebody. We can have a journal for a journal entry. We can also have a check. If I click on this, let's see what happens. It shows me the check data that I wrote, and it's check number 1. Okay? So what I've tried to do in this overview is to look at the profit and loss, click on each one of the numbers so you see where they come from for just the stuff I put in so far. And look, I'm going to change the date. I'm going to make it the end of, look, there's no insurance expense in this one, is there? Because it's only through January. If I click on February, and I hit Run Report, oh, there's the insurance expense. Expense, insurance, okay? That okay? All right, let me go back to my iPad here, and because there's some other things that I wanted to cover. Let's create, that's what I want to do next. I want to create another vendor and another customer. So let's create a customer. We haven't done that yet. New customer, okay, let me, before I lose you. Customer, left drop down, new customer, click. You get a whole bunch of data which you don't necessarily have to figure out completely for a customer, okay? You could put their name if you wanted to, if it's an individual. I'm going to say the client's Parkside Financial. Anybody remember the Munsters? Yeah. Do you remember where they lived? The street address? 1313 Mockingbird Lane, yeah. If I can spell it. Okay. Close enough. So you get the idea. Other data you could put in. You could put in shipping information. Sometimes you need the shipping address, which could be different from the billing address. Maybe they have a corporate headquarters where you bill them, but you're shipping your product somewhere else. Okay? Phone number information, website, all that jazz. Okay? So I have created a customer.
What's an example of a sub-customer?
Tell me where that button is. I can't see it.
It's on the right-hand panel underneath other. Go up with your arrow to the
On the
right.
right-hand side.
Down. Oh, is this a sub-customer? Yeah, okay. So if Parkside Financial is a client. If you had 3 people within that organization you sold to, so Parkside Financial has an insurance business and a banking business. If you hit sub-account, it's going to put underneath Parkside as a customer, the Parkside Insurance and the Parkside Financial underneath it. Okay? And speaking of which, you can also say bill with parent, which means you bill, even though there's an insurance and a banking sub-component, you bill to the same place. You bill to the same place. Okay, so we created a customer. This is nice too, which they used to, on the old QuickBooks Online, didn't do well, where they tell you big, Parkside clients saved. They tell you really big so you remember what you did, and you can see now, under customers, we have 2 customers. Riverside has an open invoice, which again is unpaid. Parkside we haven't done anything with yet. Okay. Vendor. So I got a technology company, I got a supply company. Let's create a new vendor. So Christine, what would be or Candace or somebody, what would be another vendor that you would use? A generic type of thing that you would use as a vendor?
I could use another photo company like DTC.
Okay. So again, you can create One of the big streets in St. Louis is Lindbergh Boulevard. There's a very good biography called Lindbergh that a guy named Scott, what's his name? Great biography of Lindbergh. If you do nothing else, read the 50 pages on the Lindbergh kidnapping. It's fascinating. 50 pages of that book. Scott, can't think of his name. So now I've created a vendor. Well, what happens when I save it? Oh, before I get there, you can create your own internal account number if you want for a vendor, as another way of sort of identifying it to you. This account number could also be your account number at that vendor. So image photography is number 345. So you can put that in there.
And what about recurring billing? Or is that under other on that last?
The easiest way to set that up is to set up an invoice that will pop up. So let's say they order stuff from you or you order stuff from them every month. You can have what I haven't done yet, a purchase order, which is you formally ordering something from somebody, pop up automatically. And you get ding, do you want to do this purchase order again? And you say yes. You can change the amount, whatever. And it can be a reoccurring transaction, yes.
And then what about from the other way, from a customer that you bill?
You can set up an invoice that's recurring. So you get a reminder.
So it's not under the customer setup where you could do that? I saw something.
There is, I think my preference is, excuse me, recently paid, my preference is that if you're a vendor to set up a purchase order, and if it's a customer, set up an invoice. Rather than doing it on the customer and the vendor screens, do it on the invoice and the purchase order screen. And it's a preference. A long story short, I think it's easier. Okay? So what we have done is, let's think about what we've done here. We have covered all the buttons across the top. We've covered all the bottoms along the side. We showed you reports, balance sheet, profit and loss. We clicked on the numbers within the reports to show you where they came from. And we also posted a journal entry. So, again, this is a lot to throw at somebody all at once, but hopefully you can start to visualize, if I need to do something, where would I do it? If I need to find data, where on the screen would I find it? That's what I hope we were coming out of this segment with. That you're starting to get a little feel for, how do I navigate? What do I have under the wheel? What if I have to create a transaction? Okay, just starting to get a feel for it. And again, let me say one more time that the way to post transactions initially is to do a journal entry. Okay? Do a journal entry. And again, we already posted number 5, so number 6 popped up. Okay? Any questions? That's a lot to throw at people. That is taking a drink with a fire hose. That's a lot. But it's a start. So that when you guys go into QuickBooks Online again, either on your own or when you see this again tomorrow, you'll say, oh, okay, it's not totally foreign, It's not totally foreign. What I did want to talk about before we broke was, we've learned about basic financial terminology. We've taken that basic financial terminology and put it in QuickBooks. What we're going to talk about in segment 4 is profitability and different ways of coming up with your profitability. Okay? That's what we're going to talk about in the next segment. For example, how profitable should my business be? The degree to which you are in comparison with your industry. And what about individual clients? Are my individual clients profitable? Okay? So those are the things we're going to talk about the next segment.
We did have a lot of questions come into the chat room, and we know that this is really what they want to delve into, and we will do our best to get to as many of those questions as possible. But right now we do have to take a little mini 15-minute break and jump right back into it when we come back. But before we go, we wanted to share some of the comments that are coming in the chat rooms with you as well. Christhanium says, I have used QuickBooks in the past and I really like it for business. However, this was many years ago, so I need a refresher on the program and about accounting basics as I start a photography business. So she's basically just saying that this course is necessary for their business. And Jojo mentioned, I just want to note that I appreciate that we're using the online version of QuickBooks. It's really difficult to find tutorials and information on this new version. It's handy since it's mobile and can be accessed and updated from anywhere. And last but not least, K9 Bug Finder says, I'm going to buy it so my wife and I can sit down and watch it together when we have the time. We own a photography business and I'm trying to learn to use QuickBooks so I can use it for our accounting instead of Excel.
Yeah, I think we've been seeing a lot of people in the chat rooms who do own their own businesses. Maybe they haven't been keeping track of all their finances the way that they should be. But now's the time to start, and Ken is making this really easy for us.
Yes.
I mean, just in this segment alone, we went through and looked at a lot of the basics within QuickBooks, and I think it was really helpful for everyone out there to see the workflows that Ken is showing and demonstrating here in the actual service, the way it looks on the website. And it's important to keep in mind that if you do buy this course, you do get access to all of the slides that Ken's been presenting. You'll also be able to watch this, pause it, rewind it to see exactly what he's clicking on in the interface. It's going to be really helpful. If you don't need it now, you may need it a couple weeks from now when you're trying to set up a new vendor or doing an invoice. So the best way to do that is to purchase the course, so you'll have access to do that whenever it's comfortable for you. The course does sell for $149 typically, but if you do buy while we're live today, you can get that discounted price of $99, which is a great deal considering how expensive it is to not.
Welcome back to Small Business Finance Basics, QuickBooks and Beyond with Ken Boyd here in Creative Live. If you're just joining us, this is the fourth and final segment of today, but we do have 2 more days. This is a 3-day total course. And last segment, we really got into QuickBooks and we really just dove right in there. And I know everybody had a lot of questions. So in this segment that's coming up, we are going to go back into a little bit of a review of the QuickBooks and take some more questions. And then after that, we're going to get into everything you need to know about your finances, pretty much. We're going to cover all of that. So we do have a lot to cover. And Ken, you have a very extensive background teaching finance and accounting. And your website, I mean, you own the St. Louis Test Prep, is that right?
Right, yeah, I own a company called St. Louis Test Prep, it's stltest.net. And I started my business with YouTube videos, and now there's about 320 of them linked together by topic, which drives a lot of my business, and they're linked together by accounting topic.
Perfect. So we just wanted to give our audience a little background on you and let them know where they can go if they want to learn a little bit more about you or where they can find additional tutorials.
Yeah.
Great. Well, I'll let you take it away.
Okay. Thank you. And thanks to everybody out there. I know that I mentioned the drink out of a fire hose. And what I would like to do, and the challenge with QuickBooks is that it required me going through multiple screens and then coming back out of multiple screens, and that's awfully hard to follow. So what I would like to do at the beginning of this segment is just go back through some of that overview to try to solidify in your mind generally where everything is. Generally where everything is, okay? So, help button. Everybody's got a help button. The wheel took us to the settings to set up our account, our business. All that stuff we filled in about our company name and address, email, perhaps website, phone number. I mentioned employee identification number that you apply for through irs.gov. So we fill all that out. That's our preferences. Another thing you can do to get you back out of out of the preference screen is you can actually click on the wheel again if you want to. chart of accounts. Remember that the chart of accounts was all the accounts that you have and their balances. In some cases, those balances are zero. And also remember that the accounts are listed in order with assets, liabilities, equity, revenue, expense at the bottom. And this is true of all accounting software packages, okay? I used to, when I was an auditor and you would go into the field and pull people's records to perform an audit, they all had the same setup. Assets, liabilities, equity, revenue, expenses, okay? So in our chart of accounts, you see all that listed here, okay? Equity, income, expenses always at the bottom, and as I mentioned, I didn't mention, cost of goods sold is an expense when you sell something out of inventory. And then the expenses at the bottom, and I mentioned that the accounts that you'll have the most of are going to be expense accounts, okay? So I went to the wheel chart of accounts there. Wheel, I touched on lists very briefly. I'm not going to do that again because that wasn't really the point of this segment, okay? However, I will say under list that you can set up recurring transactions. Now, QuickBooks does a smart thing because I know we're getting some chat questions on which version of QuickBooks should I use. You'll see that the version I'm using today is called Simple Start, and I'm using the 30-day free trial, and then it's $12.95 a month after 30 days. Now, this is a great screen because it tells you all the things that each version can do. Okay? Let's talk about some of the things I have been asked about today. Okay? For example, customized reports. I'm trying to get let me get my mouse here. There we go. How about recurring billing? We see that for the QuickBooks Online version, it won't do the recurring billing. So what are my other choices? If you scroll up, you have Essentials, which is an online version, and you have Plus, so you can add on. So if you need to do recurring billing, which I imagine a lot of you will, you pay a little bit more per month. A couple other things that I was asked about. Inventory tracking, which we talked about. You have to go all the way over to the more expensive online version. Budgeting and planning. Jackie and I talked about, can I put in a budget and compare? It's the more expensive online version. So, going up to the top here, these are the 3 online versions that you can use. Okay? So I got to that through this button. I hit recurring transactions, and the system said, well, this version of QuickBooks Online won't do it, but let us show you what your choices are. So that was in the list category. Remember that QuickBooks can import data from your bank, credit card transactions, your banking account. Both of those you can import. You can import from Excel. Reconciling, which I haven't covered. There's a tool in here and there's no data filled in, but as I mentioned to someone earlier I think there was the question earlier today about can I do some of my accounting in QuickBooks and some of it outside, and I said I highly recommended that you do your banking on QuickBooks because it has a very handy way of reconciling electronically, which I like. So consider that. Consider putting your cash transactions in QuickBooks and not just posting journal entries because you can reconcile easily. Another thing I'm going to cover later in the course is something we call a variance. And a variance is a difference between your budgeted numbers, sales, expenses, and your actual sales and expenses, and we call that a variance. And so you see here that QuickBooks has the ability to create a budget that you can compare to your actual results and look at a variance. And the whole reason for doing that is to find out Where was I off in my estimates? Maybe there's a cost that was much higher than I thought it would be. The example I use in my book is if you're in a manufacturing environment and your labor costs were higher than you thought, well, why is that? Well, maybe you had to pay a higher rate to get qualified people to work in your factory than you budgeted. That would be a variance, a higher cost. I used the term earlier today, what-if scenarios, which is really what a budget is, a what-if scenario. So it prompts you, when you click on the wheel, tools, budgeting, it takes you to this tool to create budgets. And again, it's the more expensive online version. But I think it's worth it to have it because it's not much per month higher than the basic version. Okay. I didn't mention it, but you can have multiple users, and this brings up a few issues. You may, in your business, grow to the point where you have somebody helping you with the accounting records. That may also mean that that person who maybe comes in once a week, takes all your expenses and posts them into QuickBooks. That person, the bookkeeper, and you both need to have access, but you need to be careful that you're not duplicating transactions and that you have a clear delineation on what you're going to do and what the bookkeeper's going to do. The great thing about the online version is you don't have to worry about using the latest version or the latest set of reports because it updates all the time. So if the bookkeeper goes in at 2 o'clock and posts a bunch of expenses and at 2:15 you go in and post a deposit, it's already been updated automatically. Okay? So that is the wheel section of the home page. And again, I keep clicking home to get us back where we want to be. I click on this clock. I guess it's a clock. Recent transactions, again, handy. Last segment, I posted journal entry number 5. So it's a way of remembering what you've done and what you haven't, kind of a quick reminder. A big section where we spent a lot of time was the Create section. Now, when you first pull up the Create section, you just get these 4 points to click on, but I'm going to click on Show More. We found out about invoicing a client. Here's a standard invoice. And you'll see that you're prompted that you can handle online payments here. It says, get paid faster and give your customers an easy way to pay. When you send this invoice, learn more and we'll set you up. So you can have Visa, I think you can have PayPal in here. It's a little faint, I can't quite see it. So you can invoice through the Create button. What if I get a payment in? Well, rather than going to cash and trying to get to cash to make that deposit, if I hit Receive Payment, here is a window that I can put a transaction in and it will automatically post to cash. Receive Payment. Again, we're just trying to navigate and visually navigate the QuickBooks again. I mentioned when Josh and I were talking about a purchase order. Let me define it first of all. So a purchase order is a form you use when you need to buy something for your business. Okay? Bigger businesses, you fill out a purchase order. Do you use them in Creative Live? You guys have purchase orders? Who knows? Okay.
No, we don't.
Okay. As a firm grows, you might have a formal process where if you need to buy a new camera, you got to fill out a purchase order and you hand that to somebody and they approve it. Okay? You can do purchase orders in QuickBooks and you can do reoccurring purchase orders. If you have to go back to a vendor every month and buy, or you're Creative Live and you have to go back to a vendor every month and buy a camera or a piece of equipment or supplies, you can have a reoccurring purchase order, and again, you need to upgrade to get to that. That's a purchase order. Again, we're still in the Create section. Bank deposit, you can, if you'd like to just click on here, rather than making the journal entry, you can do a deposit. One more thing. We got to the journal entries from the Create screen. Okay? So far in our review, we did the wheel, we did this button, we did the Create. We've got a search capability here. You can search. Click on Homepage. Whenever you're lost, again, I'm going through multiple screens, right? Click on the Homepage and just start over again if you need to. Okay? Customers. In the prior segment, we created a new customer. That customer ended up down here. You'll see that Riverside Restaurants, for that customer, we've actually done some business and we have an invoice we're waiting to get paid on. Vendor, again, people you do business with. We created DTC Photo as a new vendor. So you've got all your vendors listed down here. So if you buy something from a vendor and you need to record that expense and the payment, you can start at the vendor window if you want and click on a vendor and fill in a transaction, a new transaction, if you want to go that way. Another challenge with QuickBooks, and we touched on it at the end of the segment, there are multiple ways to do the same thing. For example, if you buy something from Sunset Photography, you can go to Vendor, click on the vendor, create a new transaction. Or I could just go straight to journal entry, and I could have some sort of expense, and I could note over here on the side that the vendor, I could put the vendor's name over here, like DTC Photo. So there are multiple ways to do the same thing, which is why this is a little challenging. Because you can, so there's good and bad news. Good news is QuickBooks makes it easy. You can get to the same place several different ways. The bad news is that can be confusing. That can be confusing. We did customer, we did vendor. Employees, if you wanted to create a new employee, what the system asks you to do is to turn payroll on. Let's read what that says at the bottom. You can easily pay employees within QuickBooks before entering any employee information. You can enable QuickBooks Payroll, which allows you to set up and pay employees in a few simple steps. You can turn that on, okay? That's going to be the more expensive version to do that. Now again, on payroll, what I recommend is that you use a payroll service like ADP. You take their reports that says, here's the gross salary and here's what we deducted and here's the net pay, and you use that report and load it into QuickBooks yourself, or you can upload their data, which is what most people do. So it goes straight to your accounts for payroll expense and withholding automatically. Okay?
Speaking of data, we had a question in the chat room in regards to security. So,
yeah, I know we've been talking a lot about having this online version. I know some people are concerned with having important client information and financial figures online. Do you have any advice for people who are a little hesitant to use the online version and have this information out in the cloud?
That's probably beyond my net level of knowledge, and I would call QuickBooks because I get that question. Let me back up and say something before that. In my opinion, I would rather have somebody use a system that is backed up on a cloud than backed up on disk or on a server. Okay, that's number one. Number two, how secure is it? I would call QuickBooks and ask that question. I'll give you an example. My wife's firm is in the investment business. Obviously, they have very sensitive data. They have a vendor that they pay that is basically their cloud backup. This company's servers is their company's cloud backup because the data is so sensitive. But I would call QuickBooks.
Great, great. And there's a little bit of confusion both with defining vendor and defining assets and just figuring out which is which, but I'll do this one first. The Guava Project asks, if you would go into more detail on defining a vendor, for example, if I use QuickBooks for my accounting, are they considered a vendor or is that just a business expense?
Okay, let's click on vendor to answer the question.
Okay.
A vendor is anyone you buy stuff from or that you pay. Now, my recommendation is that anybody that you pay that you think you're going to pay more than once, I would set up a vendor for. Okay? So a vendor is anybody you buy something from. That's number one. Number two, should I create a vendor in QuickBooks or should I just, if I'm buying office supplies from Office Max, should I create a vendor called Office Max? I think you should because you're going to be buying stuff from them all the time. If it's a one-off, it's a one-time thing, I would just record the expense in a generic expense account. So if you're going to buy a couch from Rothman Furniture in St. Louis, and it's the only time you're going to buy the couch, I would just create an asset account called couch and credit cash and be done and not create a vendor. So a vendor is somebody anybody you buy something from, and you don't necessarily have to set them all up in QuickBooks.
Terrific.
Okay. Yeah, we had another question here from the last segment regarding journal entries. And just to be clear, JoJo wanted to ask, still wondering if we should do a journal entry for everything, all types of transactions, including incoming dollars, or should it only be for outgoing expenses?
Should be for everything.
Okay.
Should be a journal entry for everything. Now, this brings back the challenge, which is, if you're telling me to make an entry for everything, where do I make it? And this is the challenge where there's a couple ways to do it. Let's just review that. One way to do it is every single time I'm going to go to Create, Journal Entry, and every single time I'm just going to enter it this way. And I'm going to find the account, and I'm going to do it this way. I'm going to enter amounts, blah, blah, blah. I can do it that way. But there are shortcuts. For example, I'm not going to save this. Are you sure you want to cancel and lose your changes? Yes. If I'm paying a vendor, I don't have to make a journal entry. I could click on the vendor's name and do a new transaction. New expense. Gets me to the same place. This data is going to flow into a journal entry. So yes, you should journalize everything, but where you do it can vary. Okay?
And then another one of these questions regarding assets. Vera M. wants to know, she's still not understanding how or why assets are increased by debiting. And there was a few other, she just was requesting an explanation for that to start with.
Okay.
And this is from last segment.
Okay, let's do this. I am going to, let me flip back to those slides. So what I'm going to do is, I'm going to reduce this, and I am going to click play, and I am going to go backward a little bit so we can answer that question. So bear with me. Okay. So let's do this one. Can you ask the question again? I'm sorry.
That's all right. Vera M. is having trouble understanding why assets are increased by debiting.
Okay. Okay. As a review, remember that debits on the left, credits on the right. Why is an asset increased by debiting? About all I can say is, in order to make the math work out on the accounting equation, which I think let me go back. Let me go back to the accounting equation, even a step further, to tie this together. So that's the slide I was on. Let me keep going back. Bear with me just a minute. We're almost there. Just because I don't know the numbered slide. And let me try to string together several different things. There we go. Okay, assets equal liabilities plus equity. And the question is, why is an asset a debit? Okay. The simple explanation is, in order to keep this formula in balance, we have to increase the assets on the left-hand side in a different way that we increase the liabilities and the equity on the right-hand side. Okay? Or else they wouldn't be in balance. So not only does this formula need to stay in balance, but debits and credits need to stay in balance. So someone decided that we will increase assets by debiting. If that's true, we have to increase liabilities and equity by crediting. Because if we do that, debits and credits are equal, and this formula remains true. Let me do that one more time. Somebody decided we're going to increase assets by debiting. That means that liabilities and equity must be increased by crediting so that not only do debits and credits equal each other, but assets equals liabilities and equity remains in balance. Okay? It's actually a good question, and it's a nice review. All right? Let me ask if Ben could get me back to QuickBooks, please. Thank you. Thank you. He's, okay. Yeah. All right. So, excuse me. In this review, we did customer, we did vendor, working our way down the side, we did employee. We also looked at some transactions too, and you can see that these run down the side. If I click on sales, it gives me an overview of my sales transactions. Here's an overview of my expenses. Now, here's another choice. If you want to post a new sale, you can create a new sale from here. I'm going to create an invoice if you want to. Again, different ways to get to the same data. Expense. Create a new expense. If you want to, you can go from this screen and create a new expense. Okay? What I want people to be comfortable with is whatever way you want to do this is fine. For example, if you always create expenses by going to transactions, expenses, new, fine. That's cool. If, on the other hand, you're more comfortable going to the wheel, the plus, journal entry, and posting an expense this way, that's fine too. Okay? Any way that you get comfortable with. And I would pick one way and stick with it. And I would write that down as a procedure and stick with it. Okay? Reports. Okay. Finally, on our review of QuickBooks, here's what we did. I mentioned that we had these two basic reports, and I clicked on balance sheet. And what I was trying to do for everyone is to show you how do you get to what do you find when you click on each one of these numbers. Again, if you click on accounts receivable and you have 30 receivables, it will show all 30 transactions. I click on accounts receivable, I can get to the invoice. Let me go back. I'm still in the balance sheet, and again, I'm going to make the time period, the ending time period, to be the end of February because I posted a transaction in February. So I change the date and I hit Run Report. You can see now that there's that prepaid insurance amount. So what I tried to do in this segment was to take reports, here's profit and loss, which is your income statement, click on amounts, and show you the numbers behind and the transactions behind those numbers. So I got the invoice again, okay? So again, one last thing before we get away from QuickBooks. If you want to post your transactions by going to journal entry, which is what I do, because that's old school. I mean, that's what before we had QuickBooks, we would do this manually, you know, debit, credit, debit, credit. I'm comfortable with that. But if you think it's easier for you to go to transactions and sales and post your new invoices here, which goes and posts your accounting activity for revenue and receivables, that's fine. Just pick a method. Other questions before I move into the exciting, breathtaking final segment information? Anything else?
How would you handle a bounce check?
Okay, somebody writes you a check that is not paid. So your initial entry would be, let's go do a journal entry. I'm going to do a journal entry because I got to think through this. So I hit checking, $50. I reduce by crediting my accounts receivable $50, all right? The check's bad. First problem is I need to reverse this transaction because this is now wrong, right? My checking account balance is too high and my receivables is too low. In other words, they still owe me the money and I didn't get paid the cash, okay? So, let me X out of this. Lose and save changes, yes. So how would I handle that bounced check now that it's bounced, okay? First thing I gotta do is restore the account receivable for $50 because they still owe me the money. And I need to reduce my checking account because I don't have that much money. Again, this is a great example. Do that as one journal entry by itself and save it and move on. Don't do 4 things in the same screen, okay? So that's how I would handle a bounce check. It basically takes you back to where you were, which is that you're still owed the money and you don't have the cash.
Well, then you have bank charges, and then you have to pursue getting the money.
Okay, let's keep going. What about the bank charges? And again, I'm doing separate journal entry. I know this is tedious, but when you're a beginner, I think it's good to just do 2, 2, 2, 2.
So there's not something set up in QuickBooks that would make all this easier?
I think in the bank reconciliation process for the more advanced versions of QuickBooks, there is a way to record a bounce check and the fees and all that without doing these manual steps. However, I'll caution you that you might consider doing journal entries because then when you get the bank statement and reconcile it, it gets a little tricky because you'll see the check go through and then I'm not sure how your is the bank gonna add it, you know what I mean? It might be hard to read on your statement. So I would caution you to maybe do it in pieces and put the same memo in a bounce check, bounce check, bounce check. Yeah. Because banks post data differently. Excuse me. Anything else on,
well,
go ahead.
It would be nice to see which customer is bouncing all these checks.
So in that case, okay, let's talk about that. That's really an invoice issue, okay? So let's say that I'm going to go to create invoice. Okay, so I create an invoice, I send them an invoice. Now, they pay me. So I go to create, and there's one here for bank deposit. I can note here received from, and I can note who I received it from, okay? Then the check, and so this is going to post increase cash, reduce receivable. Now the check bounces. Okay, I'm sorry, but this is a couple of steps to get there. When the check bounces, I'm going to post the journal entry, and I'm going to include which client it was, so I can keep track of who's bouncing checks, okay? Now, that's not a smooth answer, but that's probably the best way to do it. It's not a smooth answer, yes?
So you can't post multiple because all of that would be under Journal 6?
You can. I'm suggesting that as a beginning person, you don't. Let me give you an example. Let me take Josh's example and show you how maybe an accountant would do it. Okay? Here's what you might see. So he increases checking and we reduce the receivable $50. Okay? We reconcile that night and we see the check did not pay. Okay? I got to reverse it, which means I've got to create the receivable because they still owe me the money, and I've got to reduce my checking account because they didn't pay me. Then I have bank fees. Okay? I go down and I find an expense account for bank fee, bank charges maybe. They charge me $30 and my checking goes down $30. I'm actually glad you asked this question. You could do that if you want, and one thing that's important to do is to put the same explanation. Bad check from Riverside, number 123.
Okay, that wasn't quite what I was asking.
Okay,
I was
sorry.
asking, let's say I did an event and I have 5 people gave me checks and I want to put them in. Can I do all 5 checks under that journal?
Yes.
Number 6?
So let's clear this. Well, I just spent a lot of time explaining something you didn't care about. You can't get that part of your life back. Okay. So sad. Okay. Here's how you do that. Checking. And you could then post revenue, which is going to be a revenue account toward the bottom. Income, sales, make it easy. And you can say that that was Bob, and you can recognize sales again, and say it was Sue, and you can recognize it that way. Sure, you bet.
We touched on this a little bit earlier, and I know that we said we'd get back to it, and maybe we'll get back to it later on in the course. But we had one of the guests in the chat room had asked about his business. He has the dry cleaning business, and then he also does the alterations. Yes, and how basically how to make separate accounts on QuickBooks using the same user ID. Are we going to get to that later, or is that something we could?
Let me do it now. Well, same user ID. Oh, within the same entity on QuickBooks.
Right.
Okay. So, again, I'm old school. I'm going to go journal entry. And I'm going to say, by the way, my cleaner is completely unreliable. Every time I really need something like a blazer that I needed for this course, it's always like, it might be here. It's like, oh, God. When it's not important, it's right there. Otherwise, yeah, I don't know. You guys are just killing me. I gotta get up at 4:15 and fly to San Diego. Where's my jacket? Very, very upsetting. Okay. Let's say that somebody pays us $100, and some of it is one type of sale. So I'm going to go down to an income. Let's say one of them sales and one of them services. So what I'm saying is you can get paid, you can have cash come in for 2 different services. Now, let me expand the example. Let's say that I don't have an account in my chart of accounts. I can hit Add New. And if I hit Add New, I can create different types of accounts by type. We saw that column where it said type earlier. So I could scroll down and I can create a new income account. I'm not going to set it up in here because I'm in a photography business, but I can set up a new account called Alteration Income. That says alternation. You know what I mean. So you can name a new account. It's going to be part of your income. And you could have multiple income accounts for the same payment coming in if you wanted to. So now when you get your, so who cares? Why does that matter? Here's why it matters. If I go to reports and I go to profit and loss, under income, I would have a dry cleaning category and an alteration category separate under the income in profit and loss. Okay? Anything else on QuickBooks before I move? Yes?
I have a question. Say I'm recording an expense. I'm making my journal entry and say I bought office supplies at Staples. Is there a way I can scan or take a picture of that receipt and link it visually to that journal entry?
I think there is.
Is there?
But I think that is on I'm not even sure that's on the QuickBooks Online version. Let me do this. Let me take one peek and look at, this gave us the prompt where it listed all the choices that you had, and that wasn't it. I won't take the time to do it now. You can do that. I'm not sure it's in the online version or not. But what you can do is go to QuickBooks Online on your own and find that screen where it gave you the choices with the check marks, and they'll tell you there.
Okay.
Okay? Yes?
I remember seeing something on there that for like when you had new customers that had billing, and how is that different from like invoicing?
Okay. So when I create a new customer, this is just the person, okay? In other words, I could make customers here all day long and I've never billed anybody anything, okay? It's only when I click on a customer and I create an invoice that I'm actually charging somebody. Does that answer it?
No, I think she's talking about a field that was underneath the new customer category.
Okay, let's go to customer, new. Oh, okay. So here's a new customer and there's a field you're looking for?
Under payment and billing. Yep, right there.
Right here? So I'll click on that tab. How do they pay you? You can even ask them what kind of credit card. How do you deliver the bill? I bought some stuff at Macy's, and of course I don't go to malls, so I don't know, but they asked me if I know I'm from the dark ages, but do you want your invoice emailed or do you want it printed? And I said, well, give me both. Okay, terms, while we're here. If you discount, you can have terms per client. So if you tell them that it's due when they receive it, or if you give them 30 days to pay, you can set that up by client. So for example, if you got a client that's a little shaky on payment, you may want to write due on receipt. If you know the client pays, I'm just going to tell them it's due in 30 days. So you can treat clients differently. Yes?
What about like late fees? Like if you want to put late fees into that, if something's late, how does that work?
There's a couple ways to do it. I don't know that I would do it here. You might want to make a note to yourself in this notes section what your policy is for late fees.
And
now,
that would be the same for like paying early, like 2% net.
Okay, let me make the distinction. For discounting, I'm on the payment and billing terms. Okay, discounting.
Well, there's no discount built in there. It's just saying they owe it in 15, 30, or 60.
Right, this is when you owe it. But on the, there is the next online version you can do, for example, 210 net 30, which means 2% discount in 10 days.
So that's an upgrade.
And it'll calculate it for you.
Okay.
Now, what about, help me?
Late fees.
Late fees. I would handle this a couple ways. I would first put in the customer information, how you handle late fees. Then, when I go to transactions, sales, new invoice, okay? What I would do on the invoice, and I know this is a couple of steps, this is probably more than what you're asking, but I would put on the invoice X% late fee charged after a certain number of days. And I would put it on the original invoice, okay?
You could also put, I guess, return policies on there as well.
Return policies, right. Now, what would you do when they actually, now they're late and they owe you $20 in addition to the invoice amount? You could do a couple of things. You could go in and change the original invoice and change it from 1,000 to 1,020. Send them a new invoice with the late fee. So change the invoice, write in 1,000, write in, on this product or service, I'd write in the service on this line, event photography, and on this line, you put in, you add a category late fee and you add that as a revenue category, and you have 2 lines that add up to 1,020, and you send them a new invoice with an explanation. Take out, and so I would actually blow out the original invoice by doing a journal entry. The original $1,000 invoice, I would blow that one out, and I would put in this new one, so you're only looking at one invoice with the late fee. Okay? That's probably more steps than you're interested in and more documentation, but I think that's the best way to handle it.
But if you blow out the first invoice, do you still have a record somewhere that you sent it within QuickBooks? Okay.
It'll say invoice, and then you'll have a memo that says voided invoice. So you'll have a trail. Yeah. So for example, when the client gets the new one and they, wait a minute, how come you sent me another invoice? You already billed me. You can not only explain to them while they're getting the new one with the late fee, but also you've got it in your system. And you're not double counting.
So I'm just wondering, the online payment, what is the fee to process the credit cards through the QuickBooks? Is there a fee?
There is a fee. I don't know off the top of my head. I think it's similar to what kind of like a PayPal charges, because I use PayPal, where it, depending on the dollar volume, it declines. I'm going to guess my PayPal is 2.5%, 3% at the beginning, and then it declines based on dollar volume. That's how it works. So you would need to, this brings up a good point. So if you're using an online payment and they charge you a fee, the easiest way to handle that is to, when you get your statement, and you've got all these you charge somebody $100, but you only got $98.50, okay? I would post the whole $100 as my revenue, and then I would post $1.50 as a credit card expense. So that matches what the credit card company sent you.
I think that we have a lot of questions about QuickBooks coming in the chat rooms, but I also know we have some more content to cover before we run out of time. So maybe we'll get to that and then possibly get to some of these questions later on in the course.
Great. So I'm going to go to our last segment, and if Brian, if you could pull up that last set of slides, thank you. Okay, I can actually get there from here. Just take me a minute or two. So the last thing that we're going to talk about is different ways of calculating profitability. And I mentioned earlier that, okay, that's the QuickBooks, and then we skipped setting up your system. We did that. Okay. In the break, we originally weren't going to put up the slide, but let me just to kind of set the scene here. To prompt you to think about something. How does your current profit compare with others in your field, okay? This varies greatly. In other words, for other people in my business, how's my profit level? And if I'm not at the same level, why is that? Okay? I mentioned for grocery stores, the grocery stores have a profit level of maybe 1 to 3%, 1 to 3 cents profit on every dollar sold for a grocery store. It's a very thin margin. For friends of mine who are in the construction business, particularly in a difficult economy, these guys are working on, building, adding on to buildings and hospitals and all that. those guys are operating at about a 5% profit margin. It's very thin. So the question to spur your thinking is, how does your profit compare to others in your field? And now I'm going to say something that is not very pleasant. But as you're going through this profit discussion, you need to have a frank conversation with yourself as to, long term, can I make enough profit for this to make sense for me financially? Now again, we don't have the answer today, but long term, can I make enough money in this venture for this to be profitable for me? Now, maybe you don't intend it to be a full-time business. Maybe you're a nonprofit. But if this is going to be your business, you need to carefully think about, can it be profitable enough long term? I'll tell you a story on that note. I was helping three brothers write a business plan to buy a pizza business that was very successful in the Northeast, in Pennsylvania. It was a regional pizza business, pizza parlors. And they were going to buy a franchise and put it in St. Louis. One of the brothers was a golf pro. The other two brothers sold envelopes. Do they know anything about the restaurant business? No, they didn't. So I'm helping them set up this business plan, and they show me the financials, and this is a critical point. Maybe not for today for you, but down the road. And I said, you know, if you look at all the expenses of your business, there's no salary for you guys. You've got a 10% profit margin, but that's not enough to support the three of you, I don't think. Well, we're willing to do the business. They essentially said, we all three hate our jobs so much that we are willing to do the business and figure out how to pay ourselves later. Well, that's not a good idea. I understand that emotionally and passionately they wanted to do it, but I couldn't in good conscience say, that makes sense. They couldn't come up with a business plan that had enough to pay themselves long term. Now, the creative folks that are watching this course are in a different boat because their business is pretty static, you know? Here's how much a pizza business can make. I mean, you know, it's pretty static. Most of you are in businesses where you've got tremendous potential for growth and going in all kinds of different directions and billing people in all kinds of different ways. I don't think you really have this problem like somebody in a very static, structured business does. But think about it as we go through. Okay. So there's really 4 points. Is my business profitable? To what degree, how profitable should my business be compared to others? I'll give you an example. So I went out, I feel like I put this course together like 5 years ago. It seems so long ago. And I went out and I started Googling, and this is what I would suggest you do. Go out and Google photography profitability. And what I was looking for was newspaper articles, industry publications, kind of, third-party resources that would explain profitability for photographers. I got a wide range. It was anywhere from 5 to 20% profitability, depending on type of business, how long they've been in business. So I'd suggest you guys do the same thing. And most of you, I would think, may already know that. It sounds so basic because we just covered the income statement earlier. Again, the formula at the top, revenue or sales, same term, less expenses equals profit. We saw that. What's the answer to profitability? When your revenue exceeds sales. But now let me throw out a caveat, which is it total company profitability or is it profitability by client? Here's what I mean. You're doing project work and you consistently bill clients for more than it costs you to do the business, okay? But what about when you take into account assets like equipment that you have to buy for your business, rental space, your website? I had a discussion with one of the producers about I really want to ramp up my website. It's pretty plain, okay? That's a big investment. So not only do you have to be profitable, but you have to be profitable enough to cover all those other expenses that you incur. Okay, some algebra. I've been waiting all day. Finally, some algebra. I went to the University of Kansas in freshman year. I was an architectural engineering major. You may notice that I am not an architectural engineer now. Part of the reason I'm not an architectural engineer is I had a 5-hour, 8 a.m. calculus class 5 days a week. And it was just brutal. And the guy, he's this very kind of unkept guy. And I'm just looking at this guy. Oh, it was terrible. So anyway, I'm not a big math whiz, and I know that most of you are not. But we do have some very basic formulas. These are also on the bonus material, the formulas, and this is one. Profit margin, real simple. For every dollar you sell, how much of it is profit? So, for example, I sell a package of photos for $300 with a $45 profit. 45 divided by 300, 15% profit margin, or in other words, for every dollar sold, I make 15 cents. Now, is that good, bad? I'm not sure. It depends on your business. Okay? So how profitable? Real basic profit margin. I'm going to grab now that we're here, I got to start looking at my iPad again. Big box stores like Best Buy are another example. Very, very, very thin profit margin. A friend who has a business who trains people at big box stores like Best Buy on how to sell electronics. And he always talks about how for such a massive organization, the profit level is razor thin. Razor thin. So I suggest that you research your industry. That could include, attending conferences, whether live or online, reading industry publications, doing web research. Maybe you find a chat room for people in your business. Maybe it's a local trade organization. Okay? So research it. And best of all, get a mentor. Talk to somebody that you know who's already in that business. I had a really good mentor, several who helped me along the way, and that was probably my best source of income, of information, was a mentor. Really nice to have. Okay. Talked about that. When should my business be profitable? I had a conversation at lunch about this. For some businesses, it may take several years to get the profitability. That's perfectly reasonable, okay? A lot of that depends on the second bullet point. So the first one, for most of this audience, you're profitable with the first order. That is, individual projects or orders are profitable. You bill, you have these expenses, you're profitable, right from the very first order. But if you're in a business where you have large startup costs, that may require a business to operate at a loss for a period of time, okay? So you got to think about that. Good example. CPA friend of mine who I have a lot of respect for, we built a huge brand new strip mall shopping multi-purpose area outside of St. Louis. And a lot of them were his clients because his CPA office was nearby. And I helped him during tax time I don't like to do taxes, but I did help him out in a pinch. And he was telling me, all those businesses in the valley? I said, yeah. He goes, you know what? Half of those businesses are going to go out of business this year. And I said, what are you talking about? He said, all of them signed 5-year leases, for the most part, with the property manager. And guess what happens this spring? All the leases run out. None of them are profitable enough to keep the lease as an expense, and they're all going to, as soon as the lease is over, they're going to shut their doors and do something else. And he was right. Half the stores in that strip mall closed because all their lease agreements ended, and they all closed. Half of them closed. Why? Because they had a large startup expense, that monthly lease, that they could no longer afford. The great thing about this business, your businesses are, you don't have to have the brick and mortar expenses like we used to. When I think about my circle of friends, more than half of my circle of friends not only are self-employed, but don't have an office. And I'm 51. I mean, I'm not a young, creative startup person. Guys in their late 40s and 50s, not only are they self-employed, they don't have offices. We're all working at home. Well, I'm working at the coffee shop. We're all working at home. We don't have these large costs anymore like we used to, which is fantastic. Best thing about this online, about technology increases, you don't have to have an office if you don't want to. Okay? Really, really important. So, for example, if you're starting a restaurant, you need an investment to lease the space. You've got to build it out, which is what's going on not only at Creative Live, but next door. You've got to restructure the building, build out, advertise furniture and equipment. So let's say you add that up and it's $200,000. Somebody just opened a brand new restaurant, which reminds me of something. Near my house, it's pretty nice. So I'm there with my wife, and there's a group of guys, and it's 6 o'clock on a Saturday night, and these guys have been having fun for a long period of time. These guys are having a lot of fun at this new bar. So I talked to the one guy, and I said, where were you guys? He goes, we have a great train system in St. Louis. You can still take a train. So they went out to wineries outside of St. Louis, and now they took the train back. And this guy sitting next to me on a stool, he can barely stand, and he asked the bartender for a glass of water. He goes, yeah, I'm going to drink this water so I can sober up and go see my girlfriend. And I thought, I'm glad I'm not there to see that happen. I really feel for you. Of course, my wife just looked at me and rolled her eyes, and it was pretty funny. But that build out of that space, of that restaurant, had to be $500,000. Now, the restaurateur is a very experienced restaurateur in St. Louis, and this is a guy who knows what he's doing. So he can, from his experience, take that risk. And we have a dozen families in St. Louis that are Italian families. We have great Italian food, as good as New York or anywhere. Because we have 10 to 12 families in St. Louis, and they're all Italian, and they all run these fantastic restaurants, and he's one of these people. And he knows he's going to get that build-out money back because he's done this 4 times before. He said 4 restaurants, it's very hard to make it as a restaurant. And he's done this. So, let's say that our restaurateur has a 10% profit margin. The question is, how much in sales will he need to generate to cover that $200,000 cost? And the answer is, again, some algebra. If I take $200,000 and divide it by 10%, he's got to get $2 million in sales to earn back the $200,000 build-out. He knows this. He's a restaurateur. Not only has he done it, but his father and his they've been doing this for years. They have got this down, man. They know what they're doing. He knows how long it's going to take to earn it back. He knows. Now, much of the $200,000, the build out, the equipment, the stuff in the kitchen, the tables, is assets invested in the business, not immediate expenses. And Josh and I think, had this conversation earlier today, that if you have assets of any dollar amount that's meaningful to you, post that as a separate asset in QuickBooks. Post it as a separate asset in QuickBooks so you can track it. Okay? Now, let me tie this back to some things we learned about the income statement. Bear in mind that $200,000 in spending, if it's on assets, those assets are going to be depreciated over time. So as he uses the tables and the ovens and everything, and the chairs, to make money, they are going to depreciate in value. and we're going to recognize depreciation expense. Which brings me to another question, another point. If I were going in to buy a restaurant, I would want to know not only the assets that they had, I would want to know depreciation on each one of those assets. Why do you think that is? Why would I care? Yes, ma'am.
But you're going to consider that in your offer for the business.
Exactly right. I'm going to consider that in the offer of my business. When do I have to replace all this stuff? So, the technical jargon for that is that you've got an asset less depreciation is something we call book value. The asset less depreciation on the asset, that expense, is something called book value. So I want to look at the book value of the assets. Now QuickBooks is great at this because QuickBooks will list every asset, the depreciation of each asset, so you can see the book value. So if I look at the oven and I see that it's a 30-year-old oven with 27 years of depreciation, I'm going to look at the owner and say, you know, I got to knock down this price because I got to replace the oven. Okay? So bear that in mind in a situation where you're maybe considering merging with somebody else. Okay? Maybe Christine's the filmmaker and she wants to create an entity and collaborate with somebody else. And she's going to bring equipment and they're going to bring equipment. And the question is, how old is their equipment? Now I think intuitively everybody knows to do that. But hopefully if that person's got financial records with assets and depreciation, you can look at financial statements and see that. Yes, ma'am?
What about if you're partnering with somebody and you have assets that appreciate as opposed to depreciate? Mm-hmm. And how do you account for that? Like if you know you own a building and it's gonna, like each year, especially if you're in San Francisco, right, the price is gonna go up. So how do you account for that?
Great question, and I'm glad you brought it up because I need to cover it. So, your friend buys a building for $500,000, and they put that in the business as their contribution, and that's their equity. So now they have equity of $500,000, and the business owns a $5,000 building as an asset. Now, brings up a couple of accounting questions. Accountants, not surprisingly, are conservative. We have a principle of conservatism in accounting which says, when in doubt, do the most conservative thing. So one part of that rule says, if it's an asset, we put it on the books at its historical cost and we leave it there. But you say to yourself, well, that's not really fair because this building's really growing in value, which grows the value of our company because we could sell it for a gain or we could take a loan out against it because of the fair value. All true. All true. However, that only gets recognized in the financial statements if you sell the building. In other words, the fair market value does not get in the financial records. However, it's certainly an asset, quote unquote, in your business. It just doesn't get recorded in the financial records. There are a lot of assets like the building example, the goodwill that we talked about earlier today, the intellectual property, the secret sauce. These things don't get recorded into the accounting records until somebody buys them from you. But that's a great problem to have. I'd love to have that problem. It just doesn't get recorded in the financial statements. Is that okay? Okay. One more. I have a friend who had a catering business. This is hard to say. She was a sous chef. Don't say that 3 times fast. At a really good restaurant in St. Louis, and then she had kids, her first child, and she started a pastry business where she was making pastries and shipping them to local restaurants. So whenever we get together with them, we beg to come over for Beth's house for dinner because it's like a 5-star meal, and all I have to do is bring wine. I mean, it's great. Does anybody work in or know somebody who works in the catering business? To me, hey Brian, could I get some water if you don't mind? Yeah. Thank you. That's a really tough business. Does anybody else have that opinion? That is a brutally tough business. There was a guy who we have a restaurant chain founded in St. Louis called Pasta House, and a friend of mine ran Pasta House catering for them, using the restaurant's recipes and food for the catering. This guy was managing 20 events a weekend. Can you even imagine? I don't care how much staff you have. 20 events a weekend. Crazy. So think about a catering business where there's a fixed menu and they show up and here's the menu and they serve it and they clean it up and they leave. Okay? We don't normally get that at my house, but it does exist. So I have my example, private parties. Assume 5 clients buy the same menu, same basic menu. It's $50 per person sale price. The food costs $30, and there's a $10 cost for the hourly rate for the staff to serve and for travel. So your profit as the owner of the catering business is $10, which 10 divided by 5 would be a 20% margin. $10 divided by $5. This gets back to coaching your clients. I use this analogy in one of the books, I don't remember which one. So let's say that 2 clients sort of run off the rails a little bit. They don't do what you expected them to do. So the first client wants your staff to stay and clean up afterward for like a long time. And your agreement is, well, my staff's going to, clean up the food and put it away and wipe down the counters and we're gone. And your client's got them vacuuming and they're there an hour extra. Is that a cost to you? Sure. So that's a higher labor cost. So your profit's lower. The other client undercounts their guests, which means you have to scramble and show up with a whole bunch more food, which requires more prep time for you. It requires more driving time for you. And if you don't have the ingredients, do you think they're more expensive? You got to run out the last minute? Sure. Both of those clients lower your profit level. So how do you resolve it? A couple ways, and we talked about it when we talked about the invoice and the late fee, which is you got to lay this out in advance. I've gotten pretty good at this in my business, which is a lot of saying, here's what I charge, here's what you're going to get, here's what I don't do, here's when you can reach me, here's the best way to reach me, et cetera, et cetera. So our caterer needs to say, you need to understand, Mr. Client, that here's what we're going to stay afterwards and pick up the food and wipe down the counters, and that's the extent of what we're going to do. Are you okay with that? Because if they're not, then you've either got to charge them a higher price or consider if you want to do business with them at all. Uncounted guests, the same thing. You need to understand, Mr. Client, that you've said 20 guests. If your number's more than 1 or 2 people higher, we can handle a difference of 1 or 2. If it's more than 2 more people, we got to charge you a premium, and here's why, and here's how much we charge. You got to lay it out. To avoid the problem of losing some of your profitability, okay? Now let me also talk about something called sales mix. You may be willing to accept the lower profit clients because you're balanced out by higher profit clients and it kind of evens out. So you're not going to be too stringent about holding everybody to that maybe. Because if somebody wants to put on a massive party, okay, you're willing to let the staff stay for an hour because all in all, a little more labor expense to get a job that big, it's okay. Okay? So, is a particular client profitable? A friend of mine was telling me earlier this week that his euphemism, his way of gently letting these clients down is to say, I just don't think I can meet your needs. Now, some people will challenge you on that. Well, what do you mean? But you've got to have some depth, professional way if you've just concluded that it's not profitable enough or that they're too demanding to say, I just can't meet your needs. Which was very hard for me to get to say eventually, but now I do say it. I don't like saying it. I like to do business with everybody, but I can't. Okay? So what we covered was profitability generally. We told you about the formula for profit margin. We talked about profitability for your industry. We talked about profitability for a particular client and coaching your client, coaching your clients. We've got a little bit of time left. Any questions out there?
I had a comment for the online audience. I just got back from Imaging USA, and if you're a member of PPA, I know there's a lot of photographers out there, and since we're talking about benchmarking, they have a tool called Square One online on their website that gives you templates for a home-based studio and a brick-and-mortar studio as well.
Great.
So I found that to be really useful.
Can you say that one more time just so we get it?
It's on PPA.com.
PPA.com.
Professional Photographers of America.
Okay, I just
and
wanted
they
to
have
get
a benchmarking tool called Square One.
Square One, for those of you out there. PPA, Square One. Great.
I have a question here from Renata, and when you were talking about profitability, the question is, how do you think about profitability when your business is service-based, i.e. your cost is your own labor, if you're a one-person business? And I think we have a lot of those in the chat room.
Great question. So how do you do it when your time is your asset? Okay. We described it as professional service people. Well, one way to think about it is if you were working for somebody full-time, take whatever that salary would be and divide it by 2,000 hours, and maybe that's your hourly rate. That's one way. The other would be to talk to people who are in the same industry about what they charge. I'll use myself as an example. I'm moving toward a model where I'm going to do one-on-one, in-person, in-depth business consulting. Okay. How much do you charge for that? I mean, that's pretty vague. Now, I'm going to be very specific about what I do, but there's a lot of people out there who are charging from here to here. So how do I price it? Well, I've got to do my homework, and I've got to basically set up a grid that says, here's what I do, here's what he does, here's what he does, here's what he does, and here's what they charge, and I'll figure out how to price it that way.
Great.
Good question.
Thanks.
Then it looks like we had another question, and I'm not sure, this may have come in when we were going over QuickBooks. Kate had asked if transactions or expenses are downloaded in online baking, should expenses be entered manually too? And Renata followed, she had that same question, but she said in addition, should we enter journal entries every day as they happen or once a month? She was saying it seems like it would be hard to do it once a month, but maybe too much to do every day.
Two great questions. So in the first one, the downloading, most of these entities, like your bank, has worked with QuickBooks so that when it gets downloaded, it ends up in the right place. That is, if it's credit card expenses, they're going to get put in expenses somewhere. Now, you may have to do some moving around, but it's not as if you have to enter every transaction from scratch. So the credit card expenses get loaded into expenses, and you've got to move it around. Or your PayPal payments get loaded into revenue automatically, and they're sitting there in revenue, but you may have to move it around a little bit.
Great.
Okay? What was the second question?
Entering journal entries and whether you should do it once a month, once a day.
I would love it if everybody would do it once a week. I think every day is overkill. I know people who do it. I have a contractor who's very well organized. He does it every day. I wouldn't do it every day. I would do it once a week. Block out that time, because then you can manage your time. Rather than trying to do it every day and kind of interrupting your day, block out Friday morning. I'm going to do all this and get it all done and get it knocked out. Once a week. I would, though, reconcile your bank statement, and I'll do this in the cash section, within 5 days of getting your statement. Don't let that slip. Because Your bank statement is a third party telling you about all your transactions, and you've got to make sure that your accounting records match the bank. So it's worth it to reconcile within 5 business days.
Terrific.
Please, for me.
Well, it's looking like we're at that time of the day where sadly we do have to take a little rest, but the good news is we will be back tomorrow. And we're going to talk a little bit about what we'll be getting into tomorrow, but we do want to thank everybody out there online, everybody joining us from all over the world. We love your interaction and your participation with us, and just that you're signing in for the course. So thank you all for being here with us throughout the day, and we hope to see you back tomorrow. And thank you for our studio audience as well. Yeah. All of your interaction and contributions are very appreciated here at Creative Live. And we also want to give a big thank you to our instructor, Ken. Thank you so much.
Thank
you. Now, we definitely ran the gamut in terms of financial information if we're just starting out today, and we have more to get into tomorrow. Do you want to talk a little bit about what we're going to be doing tomorrow? I know we'll be forming your business and going into that kind of stuff.
You bet. So we're going to do a segment on forming your business, and sort of our thought there, our takeaway to think about today would be, how would you structure your business if you brought on a partner? That's the who gets what conversation. So we're going to have a conversation about sole proprietors and partnerships and corporations and how they differ.
Great.
Terrific.
We're going to move on. If I can just say, separating your personal and business transactions, we'll cover that. And one more just quickly. More on transactions in QuickBooks. Again, is kind of recovering that ground to get everybody comfortable.
All right. Sounds good. We do have some quotes from the chat room that I do want to share before we wrap up today. The Guava Project, we heard it from throughout the day, said, "Oh my gosh, this is making me appreciate accountants more and more. I definitely will be hiring one now." And Bull Moon says, "This has been a very timely class for me. Our business has grown quickly, and now we have to formalize our accounting." And then here's a question that we didn't get to, but it's also a really great quote that ties into some of the stuff we've been talking about with the bonus materials. Yeah. So one of the guests in the chat room was asking if Ken had a book recommendation that teaches you how to analyze financial statements. So he knows that Warren Buffett has one, and he was curious about some of your book recommendations. But fortunately, we have an answer to that.
We do. We've mentioned it a couple times today, but if you enroll in the course, which is free, you do have free access to the bonus materials with enrollment. And one of those is a PDF that is Ken's very own recommended book list, which has a great selection of books that he recommends that has to do with business and finances and to really guide you in the right direction. So we'd highly suggest you download that, and it doesn't cost anything for you to do it. Also, in there is small business formulas that you might need when you're working on your finances, and that's also a free PDF that you can access if you just enroll in the course. And if you do decide to purchase the course, we also have the entire keynote for everything we've gone over, which is a valuable asset as well. You know, we've really just delved into the surface so far today, and we're really getting to know these financial concepts and really understanding what we need to do in terms of finances with our business. And we have a great deal to go over tomorrow and the next day, so we're all really excited to get into it. And this course normally will be available for $149, but if you do purchase it right now, if you think it's something you're going to want to take with you, have access to review, you can purchase it now for the live discounted price of $99, and then you'll have that anytime access to the course. So I'd highly suggest you do that over the next couple hours until you come back tomorrow morning for the course. And we also want to remind everybody that Creative Live was nominated for the Crunchy Awards, and this is very exciting to all of us here. It's a big deal.
Yeah, it's a really huge honor for us to be nominated. And as you're watching this course, one of the things you can do to help support Creative Live is to go and vote for us to be the best education startup for this year's Crunchy Award.
That's right, and you can vote by going to the URL that's on your screen right now. And go ahead and show your support for us. We definitely are appreciative of you, and we're hoping you'll show some appreciation back to us. With that, we will see everybody back here tomorrow morning, same time, same place. Thank you for joining us today, and we'll see you tomorrow.
What's the play?